Omar and his team saying as much as $4 billion a day to the U.S. economy. What about the markets? I mean, we got to remember, we do have the markets trading pretty close to all-time highs right now.
Yeah, I think the market's better braced for a huge supply shock because in a modern manufacturing economy, the one thing that's absolutely mandatory are absolutely bulletproof ports of entry and ports of exit. And we've depended upon that. We haven't had a strike since 1977. And now that we have one, a lot of sectors are going to be hit, especially the ones that are in just-in-time inventories. Sectors like chemicals and pharmaceuticals, those are the ones that are going to be hit the most.
You know, let's kind of dig in on that. You're talking about chemicals, pharmaceuticals. Obviously, a lot of manufacturing companies will also be impacted. We had the president and CEO of the National Association of Manufacturers on the show on Friday. I just want to look at some of the estimates for Q4. S&P overall, 13% earnings increase year over year. Materials, 14%. Industrials, 2%. Should we be rethinking any of these estimates based on this disruption? I know it's only the first day, but just the idea of this disruption.
Well, if the history is going to replay itself and we have a 44-day strike, I think we're going to see a big hit on cash flow to these companies, especially the short supply, the just-in-time inventory companies in the fourth quarter, and it'll carry through into the next quarter. But I think for investors that they shouldn't reposition. They should just realize that earnings reports are going to be distorted by these strike activities.
All right, here's the big question. You're going to get the first crack at least today, to answer this question. Is this port strike going to be inflationary? Do we have to worry about inflation reaccelerating because of this disruption and the fact that shipping costs are going to go up? I spoke to a lot of different trade groups for retailers. A lot of them say we're going to see less discounting during the holiday season. And in fact, some retailers may have to actually raise their prices.
It's without a doubt, price is going to go up. And I hate to bring back that old phrase, transitory, but this is the one example where things are transitory. But boy, a prolonged strike would mean a very prolonged period of high prices. So inflation may not go away very quickly if the supply chains get disrupted and we don't have the kind of restoration of supplies that we have now.
You know, Bill, why do you hate to say it? A strike actually would be transitory. It would last for a while, then it would go away, unlike some of the things that we saw before.
Economists have been hit by that word transitory because when we mean transitory, it means not permanent. But transitory could mean months and even years, as we saw with the global supply chain disruption from COVID. So I hate to use the word transitory, but by definition, a strike produces a transitory rise in prices, but it may last quite a while.
All right, Bill Lee from the Milken Institute. Great to see you, Bill. Really appreciate you hopping on with us.
Thanks for having me.
All right, coming up here on Worldwide Exchange, shares of Ford revved up ahead of the open. The fresh call on a better road ahead for that automaker. We're going to have it for you when Worldwide Exchange returns. You can see shares are up nearly 2.5%. Stay with us. Welcome back to Worldwide Exchange. It is time for your morning call sheet. We start with Citi upgrading its rating on AB InBev to a buy. Citi cites improving margins and earnings growth, and this says it believes a stock buyback could be announced at AB InBev's next earnings report. We have another ratings upgrade, this time from Goldman Sachs on Ford. Remember, we just showed you the chart. Shares up just about 2.5%. Goldman says it sees opportunity for Ford in software and services, including to commercial customers. We also have KeyBank raising its price target on Netflix from $735 up to $760 a share. KeyBank believes Netflix's strengthening content lineup should drive better viewership. Time now for your global briefing. Israeli ground forces crossing into southern Lebanon earlier today, beginning what IDF officials call a targeted operation against Hezbollah. The move follows Friday's airstrikes in Lebanon that killed Hezbollah's longtime leader. Oil prices actually moving lower on the back of this latest development. Right now, WTI crude and Brent crude down about 1.75%, actually off of their lows of earlier this morning. Also, Japan's parliament officially electing Shigeru Ishiba as the country's new prime minister. Ishiba is expected to waste little time and name members of his new cabinet later today. And shares of some casino operators in Macau getting a boost following new data showing gaming revenue there was up more than 15% in September from a year ago. That figure coming in more than 1% above what analysts were expecting as the casinos prepare for what's expected to be a busy Golden Week holiday. All right, coming up here, Worldwide Exchange, we have the one word that every investor needs to know today, plus Hurricane Helene delivering a crippling blow to the global semiconductor space, devastating one North Carolina community that is vital to chips. We'll be right back after this break. Welcome back. President Biden is set to visit North Carolina tomorrow to view the damage left by Hurricane Helene. That storm leaving a path of destruction across the state, including one community that's home to a critical mineral used in semiconductors. Our Megan Caselli joins us now with much more on that story. Megan, good morning.
Hey, good morning, Frank. So this is a crucial component in those chips that's called ultrafine quartz, and roughly 90% of the global supply of that mineral comes from one tiny town in the foothills of the Blue Ridge Mountains. So that town, Spruce Pine, saw more than 2 feet of rainfall last week, and city officials tell us now there's still no water, no power or cell service, and their infrastructure, both roads and rail, are completely disrupted, all of which spells trouble for the town's mines. Now, Sibelco, the largest mine operator there, told CNBC overnight that its mining operations have been on pause since Thursday, and that it's still even trying to contact all of its employees in the area. The quartz market alone is a $5 billion industry, but a prolonged disruption here would have huge implications for the $600 billion semiconductor market, which is completely dependent on the minerals from those North Carolina mines for production. The quartz is also used to make solar panels, optic fibers, and certain light bulbs. So Frank, while experts say the impact might not be immediate, it is going to be global in scale, and no one on the ground in Spruce Pine is very optimistic that things will be back up and running anytime soon. Frank?
You know, Megan, we just had Dan Ives on the show yesterday talking about just this incredible demand for chips. With this issue with this mine, are we going to see an immediate impact on chip production?
It's not likely to be immediate, and the reason is just because of the way that the process is structured. So this type of ultrafine quartz makes a component that then is used to make these chips. It has to be super high purity quartz, and that's what comes from North Carolina. But these components do last, I was told, 300 to 400 hours. That's something like 2 weeks worth of use. That means that manufacturing companies can use the components they have. They might have some stockpiled, but before too long, this starts to become a hit. It's not just accessing the minerals right now, it's even getting them out of Spruce Pine. That's likely to be the biggest issue as we move forward.
Yeah, certainly a story to watch. Great story there, Megan. Good to see you. Thank you very much. All right, coming up here on Worldwide Exchange, the catalyst our next guest said could keep the bull market moving as we kick off Q4. Also, if you haven't already, you should follow our podcast. If you missed Worldwide Exchange, check out Apple, Spotify, or other podcast apps. Much more Worldwide Exchange coming up after this.
Make money.
Welcome back to Worldwide Exchange. As we close in on the 6 a.m. hour, a check on some stories that you may have missed. A number of big stories, including this morning's breaking news. As many as 50,000 union longshoremen officially going on strike just after midnight, shutting down ports across the U.S. East and Gulf Coast and disrupting the U.S. supply chain. Leaders from a number of industries, they're calling on the White House to intervene, but the Biden administration maintains it will not use the Taft-Hartley Act to keep the ports open and force the two sides to keep negotiating. AI chip startup Cerebras Systems officially filing for paperwork for its IPO. The company plans to trade on the NASDAQ. No word yet on the number of shares being offered or their price. Shares of CBS, they're popping ahead of the open. Sources telling CNBC the company's board is working with advisors on a strategic review of its business. Those shares up 2%. Epic Games filing a new lawsuit against Google and Samsung. Fortnite makers accusing the two of working together to harm third-party app stores on smartphones running Google's Android operating system. And a judge dismissing a lawsuit against Elon Musk and Tesla of defrauding shareholders. The group of investors had accused the EV maker of overstating the effectiveness and the safety of Tesla's self-driving technology in order to boost its stock price. Here's what to watch today. This morning we get the JOLTS report along with dual manufacturing data. Also, earnings from Nike, Lamb Weston, McCormick, and Calman Foods all out today. Several Fed speakers as well. We're talking Raphael Bostic, Lisa Cook, Tom Barkett, and Susan Collins, and Senator J.D. Vance and Governor Tim Walz. They face off in the one and only vice presidential debate later on tonight. Let's get another check of the futures with us kicking off a new month and kicking off Q4. The NASDAQ turning positive just a moment ago. You can see right now it is very fractionally positive right now. The Dow looks like it would open about 140 points lower. The S&P fractionally lower. For much more, let's bring in Victoria Green, founding partner and chief investment officer at G Squared Private Wealth. She is also a CNBC contributor and a friend of the show. Vicki, good morning. Good to see you.
Good morning, Frank.
Vicki, what is your WEX word of the day? How do you see Q4 kicking off?
Look, it's going to be counterintuitive, but my word of the day is blinders, right? In racehorses, you put blinders on so they stay focused on the race. There's going to be so much noise coming up in front of the election. You need to put your blinders on, focus that this is a bull market. Don't get distracted by the fact there's going to be a bunch coming at you over the next 30, 45 days. Focus on earnings, focus on economic data, but put your blinders on, tune out the noise, because I think that's just volume's going to keep ratcheting up, unfortunately.
You know, Vicki, that may be easier said than done. We have quite the spectacle and some noise today, the East and Gulf Coast port strike. How do you see that impacting the markets?
So it depends on the longevity, right? If this is a week-long strike, it's estimated that would take about a month and a half to undo the backlog, about five days to undo every day of the strike. They're a little bit close, right? 77% raise versus 50% raise. They're hope they'll do this quickly, but a lot of retailers pulled forward imports. So if it's a week or less, I'm not too concerned. Retailers seem pretty confident from Costco to Walmart that, hey, we're good on inventory, we're good on holiday season, but we could see the cost of goods spike, and if the supply chain is disrupted for a longer period of time, obviously the second order effects of this strike have a huge magnitude. JP Morgan estimates about $4 billion of economic loss every day of this strike. So the question is longevity. If we keep it under a week, I feel pretty confident it's going to have a minimal effect. As it drags on longer, then it becomes a risk. This is a supply chain second order effect where all of a sudden it's going to be hard to find the goods you want, or the price spike inflation.
All right, so again, it's only day one. The White House has not intervened, forcing the two sides to a deal, but certainly getting involved in trying to help the two sides facilitate some type of deal and new contract. I do want to talk to you about if it lasts longer than a week, because right now it's very contentious. We played some sound from the ILA president earlier. We were looking at the Q4 EPS estimates for the S&P, materials and industrials. For the S&P, it's 13%. For materials, it's 14%. Industrials, 2%. As an investor, do you start to look at those estimates and think, well, they may be a bit too high if the supply chain disruption lasts a while?
It might be, but on the other side of that, one of the huge catalysts is the Chinese stimulus, and that could be huge for manufacturing, industrials, and the material sector. We've seen that spike last week, things like FCX or Caterpillar, all of those reacting very positively to the aggressive stimulus on China. So right now, I think it's a little bit neutralized. On one hand, you have very bullish stimulus in China that see those sectors running. You have rate cuts that are also bullish for those sectors. But on the other, obviously, if we have things coming in, manufacturing equipment's one of those that could slow down. You've got no exports going out. So yeah, that's a risk to them, but I think they would possibly strike that, hey, this strike is a more tentative and lower, a shorter term event than the Chinese stimulus, which is a longer term bull effect that could boost earnings next year.
All right. I know you have your blinders on, but I want to play some sound for you. So you have your blinders on, but I know your ears are open. This is Jay Powell yesterday. I want to get your take on what he had to say.
This is not a committee that feels like it's in a hurry to cut rates quickly. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
All right, so Jay Powell saying if the economy performs as expected, 50 basis points of cuts for the rest of the year. I don't know if he's factoring in the strike. I don't know what else he's factoring in. But what do you make of those comments and the fact that we saw the Dow go from negative to just very fractionally positive following those comments?
Yeah, right. It was a little bit hawkish. I think the market's pricing in about 70 basis point cuts as of this morning. But how Powell's going to be data dependent. He's leaving all options on the table. He wants to warn investors that 50 basis points may not happen again. So they're not anticipating 50 basis points. Right now it's about 34 basis points priced in November. So yeah, I think Powell's being cautious. He always wants to leave options on the table. He doesn't want to back himself into a corner. Goolsbee did address the strike a little bit in his comments. I'm sure all the Fed speak today, we're going to get more that, yeah, the supply chain could cause issues in inflation. And if we see inflation spike, that could continue to slow any Fed rate cuts coming. But I think overall, Powell's pretty bullish. You know, he referenced that the GDP is strong, that labor is slowing, but it's not necessarily declining. We're expecting 150,000 jobs on Friday, 4.2% unemployment. So that's why the markets ended up rallying out yesterday. I think they took that with stride and said, okay, Powell's at a firm hand on the tiller, and he's keeping options open, but probably 25.
All right, let's get some of your stock picks for us today. One of them is Netflix. In fact, KeyBank actually given an upgrade to the stock today, raising its price target from $735 to $760, saying they believe that the content lineup should drive better viewership. Why do you think this is a good stock to buy right now?
Netflix is winning the streaming wars, hands down, and they continue to expand their business. I don't understand why it's not the Magnificent Eight. I really argue that they should be part of the Mag 7, you know, the fifth Beatle or something out there. But they're a fantastic company. Their content is great. Nielsen had them with 6 of the top 10 ranked shows last week. They continue to also monitor their content costs, and they're pushing into live sports, and they're getting into the ad-based tiers and how they're pricing their plans. They're moving people off and reducing plans, so they're pushing them towards the basic with ads, and so suddenly ad growth is there. Their subscriber growth has been strong, and I see that path forward for them. And so you can't, they're winning the streaming wars. How can you not like this stock? I know it's a little bit expensive, but the revenue continues to expand. They talk about a $500 million or 500 million user addressable market that they aren't into yet. They can get more into Asia. Fantastic stock.
All right, very quickly, the other pick for us is Costco. Any concerns about the strike impacting Costco's margins? Obviously shipping costs as well.
I mean, it's there, but margins have been growing, so I think they've got a little wiggle room. They're very well prepared for it. They actually addressed that a little bit. This has been something they've had on their radar. So I think Costco is ready to handle it, and I think they provide so much value to their members. They had their recent price hike. Their membership renewal is still at 92.9%. Love the stock.
Vicki, we got to leave it there. Thank you very much. And one more quick look at the futures. Vicki, thank you again. One more look at the futures. We mentioned before the NASDAQ just turning fractionally higher just a second ago. We're seeing right here the NASDAQ in the green. The Dow Jones right now looking like would open up about 140 points lower. The S&P also fractionally lower. We're also going to look at some other stocks that are moving right now. Taking a look, Chinese EV makers, they're jumping ahead of the open. That's on the back of some solid delivery numbers. We're going to take a look at those right now. We're seeing Li Auto, we were just saying them. Very different story for some other automakers. Stellantis continued to drop after falling 14% yesterday. This after it slashed its forecast for full year profitability, citing increased competition around EVs from Chinese rivals. Those shares of Stellantis right now down almost 2%. Again, futures kind of mixed right now. We're seeing the Dow looking like it would open about 140 points lower. The NASDAQ just turning fractionally higher just a moment ago. Again, take a look at shares of Stellantis down just about 2%. One more look right now. This is live, a look at one of the East Coast ports right now. Again, workers going on strike just after midnight today. We'll have much more on this story throughout the day here on CNBC. Squawk Box starts right now.
Good morning and welcome to the machine. No, welcome to the fourth quarter. Dow futures pointing to a lower open. We'll show you what's moving right now. So you can probably heard port workers on the East and Gulf Coasts are on strike after a midnight deadline passed with no deal. We'll take you live to the picket lines. And CVS is exploring strategic options, including the possibility of breaking up the company. It's Tuesday, October 1st, 2024, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And let's take a look at how things are shaping up today. Right now, you will see a little bit of weakness when it comes to the Dow and the S&P. Dow indicated off by about 140 points. S&P futures off by 8. The NASDAQ is indicated up, but just barely, a few points. Yesterday, Fed Chair Jay Powell said that the recent 50 basis point rate cut shouldn't be interpreted as a sign that future moves will be as aggressive. At a speech in Nashville, Powell said that if economic data remains consistent, there will probably be 2 more rate cuts this year, but smaller quarter-point cuts. Stocks fell as Powell spoke, but they did rebound into the close. He was saying, again, if the economy is weaker than anticipated, they can move more quickly. He said if things are better than anticipated, they could move a little more slowly. But if you're looking for another 50 basis point cut right away, that isn't in the cards, at least as he sees things. The third quarter is now in the books. The Dow actually finished higher by more than 8% for the quarter. The S&P 500 was up by 5.5%, and then you had the NASDAQ up by 2.6%. So an incredibly strong quarter. Once again, I think we're now on track for 4 straight quarters in a row, or we've seen 4 quarters of growth in a row when it comes to the markets. If you're checking out Treasury yields this morning, the 10-year is at 3.75. The 2-year is at 3.61. Markets in mainland China have been on a tear, but they're now closed for Golden Week. That's a holiday that lasts until Tuesday, October 8th.
Let's talk about the strike because it's going to be the big news of the day, the week, and how long it goes, maybe the month. The union workers, dock workers at 36 ports from Maine to Texas began walking picket lines earlier this morning. The pickets began just after midnight after talks between the International Longshoremen's Association and the United States Maritime Alliance failed to yield a new contract. Now, a last-ditch effort by ports ownership was rejected by the union. That happened yesterday. That offer included a wage hike of nearly 50% over 6 years. Dock workers are now pushing for a raise of more than 70% with protections for workers against automation. We have a lot more on the story throughout the morning, and for every day that we're on a strike, it's going to take a week, apparently, to get the supply back online. So the sort of knock-on effects are quite remarkable. Something like $5 billion a day.
Right. It's something that is a bit of a, as we've got 5 weeks left into the election, people are going to be watching this more closely tonight. You have the vice presidential debate. Could bring back people's memories pretty quickly of some of the shortages we faced during the pandemic.
You got to think it through because talk about inflation, but when we've talked about it, we export too from those ports.
Yeah.
So there's deflation because we're not going to export pork and beef. So
although it seems like it'd be
large
tough to
supplies
find.
of pork and beef around.
It might take a little time for that to.
Right. Can't, like how long? You don't want beef that. Oh yeah, it's fine. It's been around for a month, sitting in a port. So I mean, could be, both effects. Meanwhile, Israel has begun targeted ground operations in Lebanon in an effort to push Hezbollah forces away from its border. The Israeli Defense Force said troops began raids against terror targets in the border areas in the southern part of Lebanon, and Israel notified the U.S. that the incursion would be limited in scope, scale, and duration. We'll bring you more details throughout this the morning.
Right now, let's get to the aftermath of Hurricane Helene. The death toll has now topped 130 people, and North Carolina's governor is warning that it will probably rise as the search for missing people continues. Officials are asking travelers not to come into the region to keep the roads clear for emergency vehicles. More than 50 teams are searching the region for stranded people, but that task has been complicated by destroyed roads and bridges everywhere. President Biden plans to visit the area tomorrow. He'll be taking an aerial tour of Asheville and receive a briefing by the Emergency Operations Center in Raleigh. But again, the picture is devastating coming out of here, hearing some of the reports of bodies that have been found in cars and in trees. Horrific damage that's been done.
When we drive down to Georgia, we go through North Carolina, and I don't think we get anywhere near Asheville because it's mostly east.
It's a couple hours east.
It's in the middle of the country.
A couple hours west.
It's in the middle of the country. It's so strange. This is a water flooding event, although all the things I'm getting from Georgia where I have some property was a wind event. There's not
this
a water
was a storm
event,
that had wind, water, rain, and the storm surge that came with it. This was massive.
But the storm surge isn't where this is the water that happened in, I guess, low-lying areas of
But the area had been very dry before that too, so
Right.
it was dry land that it was landing on, but massive amounts of rain that came with Hurricane Helene.
But it's so far west. I didn't even realize North Carolina went that far west. But it's unfortunately, I don't know what happened in high school and grade school, but my geography's not great. Sometimes when you look at things, isn't it? It's like, oh my God, look where North Carolina heads so far west. News just out from automaker Stellantis. The company's extending suspension of production for its electric Fiat 500 city car until November 1st, citing poor demand. Again here, we wondered about that one. Stellantis was warning. Previously said it would suspend production of the EV until October 11th.
Meantime, the FCC investigating a Verizon network outage across the U.S. as after thousands of users reported problems yesterday. Chicago and Indianapolis were among the hardest hit. Some iPhone users were stuck in SOS mode. I was actually trying to call one of them. SOS appears in the status bar of iPhones when the device is not connected to a cellular network, but can still make emergency calls through either other carriers or potentially, I believe, you can now text, depending on which kind of phone you have, through the satellite network.
Well, here's a good one.
People were saying if they had the iOS 8 or the iPhone 8, they were able to.
Anyone want to bet their life on it, whether it's Cerebrus or Cerebrus?
I think it's Cerebrus.
Well, that's cerebral.
Like,
you would
right.
think so, but then there's, even to confuse matters further, there's Cerberus. So, and this is a nightmare for anyone that mixes up the, where the letters are. AI chip startup. So you want to call it Cerebrus.
Well, like cerebral, that's what the same thing I thought.
Right?
Yeah.
Unless it's Cerberus, then it's Cerebrus. Cerebrus Systems is filed for an initial public offering. The company competes with NVIDIA to make. We still have trouble pronouncing that. There's some people do. NVIDIA chips that run AI models. It also offers cloud-based services. Cerebrus was founded in 2016 by Andrew Feldman. No, it's probably Feldman, who previously sold server startup C Micro to AMD for $355 million in 2012. The company plans to list on the NASDAQ under the ticker symbol CBRS.
And CVS Health is conducting a strategic review of options for the company, including a possible breakup. Sources tell CNBC that the board has retained advisors to facilitate that review, which has been ongoing for weeks. In recent years, the retail pharmacy chain expanded by acquiring its pharmacy benefit manager, Caremark, health insurer Aetna, and healthcare clinics as well. Yesterday, hedge fund Glenview Capital Management met with CVS leadership to talk about ways to improve operations. That fund owns about 1% of CVS shares, and maybe worth pointing out, it's coming at a time when pharmacy benefit managers are facing so much pressure and attention from Washington as well.
And Pete Rose has died. He's baseball's career hits leader, but was banned from the sport for gambling. For years, he denied that he bet on baseball, but admitted in 2004 that he did, but said at the time never against his own team. Nicknamed Charlie Hustle, Rose was known for his gritty style of play. And off the field, after his ban, he faced legal troubles. He spent time in prison from July 1990 to January 1991 after he pleaded guilty to tax evasion. And Rose obviously grew up on the west side of town of Cincinnati, where I grew up, and was admitted into the Reds Hall of Fame in 2016. He was 83 years old. I was home last night, and my son yelled out, "Pete Rose died." And I was surprised at my reaction because it was...
Teared up?
I didn't really tear up. It just was like a real gut punch because, and it's not necessarily, he was a complex man and a very difficult man to sometimes to some of the other things in his life that probably weren't very admirable that he did. But 4,250 hits, when a guy gets 200 hits in a year, it's a big deal. Mm-hmm. That's a career of 20 years of getting 200, more than 20 years to beat Ty Cobb and to get to that point. And, he always said his father, he didn't have a lot of talent, but he ran out every pop fly and I realized why it hit me, because he's been such a, I had his rookie baseball card in 1963 or 1964. I was at the All-Star game where he ran into Ray Fosse. And in an All-Star game, he was playing so hard that he ruined a guy's career, basically. He was just playing hard. Buddy Harrelson, I think, was 1973 with the Mets, and the Mets made the postseason yesterday, so this is the same day. And Pete Rose appeared the day before yesterday in Nashville with Davey Concepcion, George Foster, Tony Perez, and Ken Griffey Sr. And all those guys were, then he was in a wheelchair getting a picture taken. But, you know, I used to see him around the west side of town. It was just very weird for me to hear it. It wasn't really that I was, you know, going to tear up. It was just, he was just such a huge part of every stage of my life. When I was in college, 75 and 76, watching, if you needed a hit, Pete Rose would deliver a hit in the World Series if you needed to win. And then I saw Phillies people trying to take credit for Pete Rose. That irritated me yesterday on Twitter. All these pictures of him in the Phillies, we never really got over that when he went
Well,
with the
look,
Phillies.
it says something that lots of places want to claim credit for him. It's,
Right, but
Especially after everything.
right.
and I thought about calling Johnny, and
Johnny Bench.
Johnny had a mixed, loved him, but was well aware of some of the stuff as well. And I said, no, I don't
Imagine the
think
gut check.
we shouldn't do a phone. But it's like the thing we talked about yesterday. Ask not for whom. I mean, it's just it happens to everyone eventually. And now it's gonna. I mean, how many of these guys? They're all gonna be in their 80s eventually. And if you're in your 80s, each year that you go further, unless you're Jimmy Carter, God bless him, he's 100, I think, today.
Yeah.
But so I'm still trying to, and my son and my wife.
So you did talk to Johnny Bench about it?
I didn't talk to him. I thought about calling him, and then I just, and whether we should have him on, but then I don't know. But it was weird. My reaction. I'm sad. I was saddened. That's all I can. It's the only way to describe it.
Passage of time.
But he's such a every stage of.
You're the first person I thought of when I heard the news.
Yeah, because he's from the west side of town. Went to Western Hills High School. Grew up in Sailor Park, and he was, he was not born with all this talent. He was just Charlie Hustle. That's what he did. I took a picture in Cincinnati. There's a statue of him diving into the plate, and
I know that.
got next to it and tweeted that out. But oh well, God, R.I.P. Rest in peace.
When we come back, a lot more on Squawk. Tonight could be the last major event of the 2024 presidential season, the vice presidential debate stage. It is set. It is up next, and we're going to talk to House Majority Whip Tom Emmer about how he's been helping J.D. Vance prepare for tonight's face-off. Later, we're going to talk portfolio strategy for the fourth quarter with investor Mike Novogratz. All that and more as Squawk Box rolls on.
Phil was all over this yesterday. We're watching the shares of Boeing. Now you can see down 148, down another 2.5%. Bloomberg's reporting the company is considering raising at least $10 billion by selling new stock. The report says Boeing is working with advisors to explore its options, and CNBC has reached out to Boeing for comment another time, but would have been nice to, it was 200 not too long ago in the recent past. That might have been a better time to decide to raise a little equity. Now they're selling, like, this is like buy high, sell low.
Meantime, our next guest has been helping Vice Presidential candidate J.D. Vance prep for this evening's debate by assuming the role of his opponent, Minnesota Governor Tim Walz. Joining us right now on what to expect from tonight's face-off. House Majority Whip, Congressman Tom Emmer, good morning to you. J.D. Vance said that he didn't need much prep. I saw that this morning in Politico. So I don't know.
I would agree with that.
You guys were doing this over Zoom? Is that how this was happening? He said he was in Cincinnati at home?
No, we did not do it over Zoom.
Okay. There was something going on with Zoom yesterday.
Well,
that he was talking about.
That's something with the Vance team. No, what I did, my small part, is we spent the last month going through every debate Tim Walz has done since he started running for Congress.
Right.
I had to learn his favorite phrases, had to learn his mannerisms. And then literally my job was to show JD.
Did you watch SNL this weekend?
I saw a little piece of it. And I'm stealing Joe's line, jazz hands.
Jazz hands.
Jazz hands.
He's excited.
Can you do it? Do your best impression. Come on.
I don't.
Tom,
My job was to make sure that I showed JD what he's going to do. Tim is going to rely on his folksy personality, this character that he plays. He's not going to get into substance. He will constantly turn it back with this folksy whatever. And JD, I'm very confident JD is going to wipe the floor with him because he's going to go back to the economy, the border, crime.
And you don't. Would you be surprised if he actually is very substantive?
Who? Walz?
Walz, yeah.
Oh no, Andrew. He's going to sound substantive. This idea that they're going to fact check each other it's wrong because nobody's going to fact check Tim Walz, and they should.
You're saying nobody will fact check, but do you think that J.D. Vance will fact check him? I mean, is that part of the strategy?
I think J.D. Vance is going to concentrate on the issues that Americans care about the most. Rather than getting into some high school debate, I think he's going to be talking to the American people about what Donald Trump did in his first term with the economy and the border and safety and security around the world, what Harris and Biden have broken in the last 4 years, and how he and Trump are going to fix it.
What are it always seems like during a debate, there's sort of like 3 points that everybody goes back to, that you always sort of like revert to no matter what the question really is. What are like the 3 things are those the 3 issues that he's supposed to revert to?
Again, I'm not going to put words in JD's mouth, but JD is out east we would call him a wicked smart guy. And he's going to focus on how the border was secure under Trump. It's not under Kamala Harris. How the economy was working for everyone under Trump. It's not working for everyone under Harris.
How involved was former President Trump with these debate prep plans?
It wasn't involved with mine.
Not at all?
No. You'd have to ask JD if they were having conversations. But I think President Trump picked JD because he knows JD is really good on this stuff, and he'll be a great spokesperson for the campaign.
When I was going to mention to you when I saw you out there, when you were first, your name came up for speaker, and I saw pictures of you, and then when Tim Walz got it, I go, they're both avuncular, kind of Midwestern, kind of great, but it stopped there. Once I saw him, I think the very first time he walked out with crazy, there's a meme with Chris Farley walking down it ended there. You don't remind me of each other at all anymore.
That's very reassuring because you need to understand, Tim Walz is very likable when you initially meet him. He's outgoing. He kind of plays the folksy, ag-friendly outdoorsman, kind of the guy next door. But as people get to know him and his policies, they do not like him. He is not popular.
Congressman, if you're going to talk about favorability and likability, I mean, J.D. Vance is coming in with some of the worst polling numbers in terms of whether people like him or not. If he is very prosecutorial, very lawyerly, as you're suggesting in this debate tonight, does that win for him in terms of likability and whether people will vote for him?
I think the polling that you're talking about is because people have not been introduced to Tim Walz. He's just recently been installed.
But these are
as
J.D. Vance's
presidential
numbers.
candidate. Well, but hear me out. Nobody had Tim Walz on their bingo card, and he shows up. All of a sudden, it's like, oh, look at this guy. He's got all kinds of energy, whatever. Nobody's talking about issues. Again, as people get to know Tim Walz, they do not like him.
How much did
J.D. Vance, I think tonight will be his chance to introduce himself.
How much did you discuss trying to appeal to suburban women, and how do you do that if you're going to at all?
So that's his team. My job was to show him exactly what Governor Walz is going to do.
Okay, but that is a major issue for J.D. Vance. Suburban women in America, huge issue. You can look at the polls, you know the issue. If you're him, what is he?
Just like men, it's just like men are a real issue for Kamala. Yeah.
Well, but
Look, let's talk. But
Like
that's
60, 30.
So let's talk about the issue. What do you do?
these voters that you're talking about are going
Yep.
to vote on their pocketbook and on their safety and their security. It was good for them under the Trump administration. It has been awful under the Harris-Biden administration. And I think the theme you're going to hear is Donald Trump fixed it once, you broke it. Donald Trump and J.D. Vance are going to fix it again.
If it were, Andrew, honestly, if it were to turn out that Kamala Harris and if they were to lose, if Kamala Harris loses, and I have no idea the probability. I think the postmortem goes back to Shapiro. I honestly do.
Oh, I don't disagree with that.
Yeah, and I think, and if this was going to be Shapiro versus Vance tonight, it'd be a whole
It'd be a different story.
But is
ballgame.
it also the same story for Donald Trump? If he loses, does it
Maybe.
affect
I
J.D.
think Vance is.
Vance?
I don't know. He's grown into maybe there's still the abortion thing with
Well,
certain women. But
just the latest polling aggregate shows Vance down 11
Right.
points, Walz
In favor
by
of
3.7. But they do admit that fewer voters know and have made up their mind about Walz. But you've got.
But
5
if
weeks
you
to go.
lose Michigan, and
We'll
it's
see.
flipped, and if
We'll
you
see.
don't even win Michigan and you didn't
We'll
pick
see.
Shapiro
Yes.
because you were worried about Michigan, and then you lose Michigan, I think that's where you go back and the Democrats who do not like to lose, that will be the postmortem. Was not picking Shapiro. I think. It's just, what do I know? Nothing.
Whip Emmer, thank you.
Thank you
It's nice
guys.
to see you this morning. We'll see
Emmer.
what happens tonight.
You know, that'd be a cool name.
It is, right?
Whip Emmer.
It's called Whip.
Whip Emmer.
Whip.
Hey,
Well,
Whip.
have fun tonight. Get your popcorn.
What time does it start? Is it 9 o'clock?
9
again?
o'clock.
Daggone it.
I'm gonna stay up.
Too late. Too late for Joe.
Too late.
We'll get you the.
Do you want me to be conscious tomorrow? I mean, what? Yeah.
That's up in the air.
That's right.
No, it's late. I'll stay up and watch some of it. I hope I can make it through the whole thing. Congressman, thank you.
Thank you guys.
When we come back, SoftBank is reportedly preparing a large investment in OpenAI. We've got the details right after the break. And later, we'll take you live to the picket lines as port workers from Maine to Texas go on strike. Congressman Emmer, what do you think about this strike?
I think it's really not good for the economy. It's not good for the American people. And quite frankly, the fact that the president has said he's not going to get involved when he did get involved in the auto workers strike, this is not going to be good. When people don't have groceries in their grocery stores, this is going to be the reason why, and it's only going to exacerbate what they're feeling all across the country.
Congressman Emmer, Squawk Box will be right back. Thank you.
Yeah.
I today am very proud that I have that seat at the table at such an iconic brand like Starbucks, and the importance of what it is for us as a community as we look to be the second largest community and culture in the United States. For me as an individual and those that have that seat at the table today within our heritage and within our Hispanic community, we have to continue to set that example and be that guide and that mentorship of what's to come. I'm very proud of that.
SoftBank plans to invest $500 million into OpenAI as part of a fundraising round that's expected to close this week. That's according to a Financial Times report that said SoftBank will invest through its second Vision Fund. SoftBank is the majority owner of UK chip designer ARM, and Masayoshi Son has spoken about his ambition to use it as a centerpiece in a network of AI companies.
Coming up, Chevron's deal to buy Hess has cleared another major hurdle, but there's another now major obstacle that's remaining. We're going to talk about that next. As we head to break, here's a look at yesterday's S&P 500 winners and losers.
Good morning, everybody, and welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. The futures this morning are a little mixed. Dow futures off by 150 points, or 145 points right now. S&P futures down by about 5. NASDAQ's up, but only by about 17 points. The Federal Trade Commission has banned Hess CEO John Hess from Chevron's board as a condition for the company's $53 billion merger. Yesterday, the FTC alleged that Hess communicated with OPEC representatives about global oil input and inventory management over the years, encouraging action that supports higher prices. Hess said the FTC's concerns are without merit, but both Hess and Chevron agreed not to appoint John Hess to the board. FTC approval was considered a minor hurdle to this merger compared to the challenge coming from rival Exxon. Exxon has filed claims with an arbitration panel arguing right of first refusal over Hess's part in a joint venture with Guyana. You can see that right now, Chevron shares down by about 0.6%, Hess shares down by 1/3%, ExxonMobil also down by 0.6.
Coming up, we'll talk portfolio strategy for the new quarter and what's going on with the underpinnings of the market, the options, the derivatives. You can glean a lot. Amy Wu Silverman joins us next. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app. Listen anytime. We'll be right back.
The world.
For some insights on what the options might be saying about equities, volatility, let's bring in Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. And really people should watch all the time. And hopefully they were watching. You were on about a month ago. And at the time you pointed out that in previous rallies during the year, you didn't see hedging increase.
Right.
But a month ago you said the VIX was still quiet after that spike. But about a month ago you said you are starting to see quite a bit of hedging. And now it's continuing. Nothing's happened in the past month, though, that to indicate that all that angst among traders was justified. You still think that something could happen because is it even increased the hedging?
It's even increased, Joe, and the way I think about it is the market is sort of lying awake at night and wondering when bad things could happen. I say that because that demand in hedging has not only picked up more, you see it in these secondary metrics that I appreciate most people don't watch all the time. We do, but not the VIX itself, but the volatility of the VIX has picked up.
The VVIX.
The VVIX, the vol of vol, has picked up substantially. Yeah, I know. It makes your brain hurt for a little bit, but look, it's the idea that these tails in the market, these kind of 3 standard deviation drawdown scenarios, we're very much seeing money being put into these. So obviously we have earnings coming up. Obviously we have U.S. elections, and the worry continues to rise. And that again is a very different narrative from the first 6 months of this year.
I think last time you were on, there were some straddles that were getting expensive. So that, I mean, is the hedging only on the downside, or is the hedging, it's only on the downside? You're not hedging against like a major melt up?
No, not on the S&P 500. Now, that's not true for China. We're seeing all the upside hedging actually in the China-related ETFs. Obviously, Beijing had that stimulus come out, and investors are, really feeling that MOMO and FOMO there. All these ETFs that are related to China, so an FXI, ASHR, KWEB, EEM. These are all plays related to stimulus, and we've seen historic call buying there, but almost none related to the S&P. The bet there is much more for limited upside.
The October lows that we've hit so many times in the past usually come after a weak September, though. It almost seems too late for an extend itself unless it was really sharp. Do you think something like that is possible, like a real fast drawdown between now and the teens of the Ides of October?
Look, when you look back to the seasonal playbook, you would say the drawdown in October, the pickup in volatility is usually there. You go back 20 years, that's what we see, right? But again, like you said, that's after a weak September too. Now, how does that play into it? I think things are going to drag out a little bit because obviously, usually in November, we actually see the market do okay, but we have fairly large catalysts this time that we don't have all the time, right? We only have it every 4 years. And so I think that kind of shift things a bit later. And obviously earnings. Usually you get a tick up in volatility the first 2 weeks of earnings because that's the first time you get all these kind of idiosyncratic pieces of news flow, and you get a tick up for volatility because of that too.
Kind of to plug in some fundamental scenarios that could explain. Let's say we're a month delayed here and the big sell-off is in November. I don't know which election outcome could cause that. Maybe a wave on either side. Maybe, depending on your viewpoint, some people would think that a Harris presidency would be bad for business. Other people could think that the going back into the chaotic environment of a Trump presidency could cause a sell-off in the market. There's something for everyone in why you could see November being weak, isn't there?
There's something for everyone. I'll tell you, when I talk to investors, a lot of what they say is just they need this to be over. There are all these Trump baskets, there are all these Harris baskets, there are all these international plays. They've got both playbooks ready, but because the election is now much closer than it was when it was Biden versus Trump, no one's been able to deploy their playbooks. I think that's one reason you're seeing that volatility leading in relatively expensive.
But I think part of the issue is that if you have Republicans who are going to own the Senate, and if you have Dems owning the House, it almost doesn't matter what really, I mean, I don't want to say it doesn't matter what happens, but that from a market perspective, people will say, okay, gridlock is good. Yeah. We're good for that. If you think that Trump wins the presidency and therefore somehow Trump helps the Republicans take the House and the Senate, whole different game.
Yep. Right?
Unlikely if Harris wins the presidency that all of a sudden the Dems take the Senate too. So there's sort of the outcomes are actually in an odd way, very different, potentially.
They're very different, and I do think a lot of times for investors, they fixate on this presidential win, and the reality is it's like, what is the picture of Congress? That actually matters much more. I'll tell you one scenario that investors are talking about. So, for instance, let's say Trump does win. A lot of his rhetoric on NATO has European investors we've spoken to concerned. So one of the larger international plays is just simply U.S. outperformance versus European outperformance. Do we see fund flow shift because of that? So again, it's not necessarily these nitty gritties, it's these broader changes that people are worried about in terms of positioning.
All right, I don't, it's possible nothing happens. And there's so much liquidity, we're in an easing cycle. How much is in money markets ready to come in here? There's been a lot of stimulus. There's still stimulus. We haven't spent any of the things we...
Larry Fink was saying yesterday the economy is not going into a soft landing. It's not landing. He said it's still growing 2 to 3%.
I saw that as well.
So if that's the case, along with the easing cycle...
Look, one thing I'll tell you is one of the most popular trades, and it continues to be really a substantially popular trade in our market, is simply continuing to sell volatility. And that's with volatility on the upside, not really that expensive to begin with. But when you look at the growth and notional value of all these funds that are selling volatility, collect further yield, it kind of tells you two things. One, there is still a group of people who don't think much will happen, but also two, that there's also not that much upside left, and that's why they're trying to yield scrape these options in the near future.
I think you could take one of these Amy Wu Silverman appearances to Wharton for like the grad school.
A case study.
Just analyze, get to the point where, like, I understand like most of it, but there's still some things that 3 standard deviations I didn't really understand. But you could do that.
I'm working on it, Joe.
Like a really like the PhD program at Wharton could analyze everything Amy says.
Thank you, Amy.
Thank you.
Appreciate it. Coming up, PepsiCo may be hungry for more salty snacks. Just Kernan. That's a story for you.
It is.
It is. And still ahead, mainland China markets closed for the Golden Week. This after a huge stimulus-fueled run-up. We're going to talk China with Kyle Bass in the next half an hour. Squawk Box coming right back.
PepsiCo's in advanced talks to acquire tortilla chip maker Siete Foods for more than $1 billion, according to a Wall Street Journal report that said the deal could be announced soon. PepsiCo reportedly faced competition from PE firms and other food companies who expressed interest in buying the company, what do we know?
I don't think I've had them. They're
pretty good.
grain-free.
I've had them.
Supposedly.
What?
They're supposed to be grain-free.
Okay,
That's
so
the
they're
whole
not
point.
really. So
That's
they're
the whole stick.
tortilla.
It's a
but
grain-free
They're not corn
tortilla.
tortilla.
But I don't know if I've had them. You've had them?
We've had them. We just got them like
Oh,
2 weeks
okay.
ago.
What, if it's grain free, what is it?
I didn't eat any of it. We ordered them from
So far.
It's a pretty trendy thing. It's like when you're looking for upscale.
Some of those things that they try to pass off as chips
I wish
taste.
they tried
We know
it
what they
this way.
taste like.
Yep.
We're sitting on what they taste like.
Your bum?
Yeah, they taste like ASS. And the cauliflower ones.
Why did I
they,
ask?
Yeah. Why did you ask? Why did you ask? I don't know. I don't know why you. I don't know why you asked.
Okay, meantime, TV and movie studio Lionsgate offering its U.S. employees voluntary severance early retirement programs as well. The Deadline, or I should say Deadline, the online magazine or newspaper reporting that layoffs could be the next step depending on how many staffers take the packages. The company recently cut jobs after it acquired E1, the global entertainment platform formerly owned by Hasbro. So lots of folks in Hollywood watching this one.
When we come back, port workers hitting the picket lines this morning. We're going to talk about the potential impact to the supply chain and the economy. That's next.
At night.
last night at midnight, 45,000 U.S. dock workers walked off the job, launching a strike that has shut down 36 ports along the East Coast and the Gulf of Mexico, threatening to disrupt the nation's supply chain. Joining us right now to provide some data into just how much disruption we're facing is Alan Murphy. He's the CEO and founder of Sea Intelligence. And Alan, we've heard a lot of different numbers. By your estimates, how much does this cost the nation a day?
It's incredibly hard to estimate. Various estimates from different economists puts it at somewhere between $3 and $5 billion per day. But it's both what does it mean in delayed shipment, what does it mean to higher freight rates. It's all a very volatile game, but certainly it's going to be very, very costly, several $1 billion per day of strike. And that's the fundamental challenge here. We don't know how long the potential strike or how long the strike will potentially last.
Well, let's walk through some of the potential timelines on this. What happens if this lasts the first week or two? What are the ramifications we can expect to see?
Well, it will certainly be a challenge especially for importers, especially if you have perishable goods moving in refrigerated containers. If they start to fail or they lose power. If you've got bananas, they're supposed to ripen over a certain time. If they spend another week, they start to spoil. Within a week, it's going to be costly and it's going to impact those importers that are waiting for the boxes. But it's a manageable crisis. If it lasts 2 weeks, then it starts getting to be a big challenge because we'll start to see vessels missing that are now stuck in ports outside of the U.S. ports. They won't make their journey back to Asia and to the other origin regions, which will push up freight rates. So 2 to 3 weeks, it starts to get a really big problem, and we will see cost of shipping globally, not just to the U.S. East Coast, but globally start to push up.
Can they be rerouted to Canada or to the West Coast?
That's not really much of an option. Some of these vessels will be calling a port in Canada or to different transshipment hubs in Caribbean. They'll try and offload as much as they can, but there's simply not enough room in the Canadian and Caribbean ports to handle all of this cargo. So there's really few options outside of actually just waiting outside a port, just like we saw during the pandemic, a line of vessels for as long as the strike lasts.
If this lasts even longer, 2 to 4 months, then what?
Well, certainly then we're talking about a massive severe impact on the U.S. economy. By our estimates, almost certainly to push the U.S. into a recession this year if it lasts more than a month.
If it lasts more than a month, okay. You've said that the longshoremen have timing on their side because of what's happening in the Red Sea right now. You want to explain that?
Well, basically, before the Red Sea crisis, which is basically the inability to sail vessels, especially from Asia to Europe, via the Suez Canal. Now you have to go around Africa because of attacks from Houthis out of Yemen in the Red Sea. And that basically means you need a whole lot more vessels to be able to sail the same distance. About 14% more vessels. And that means that whatever slack we had in the system back in December, which was around 15%, completely got removed because of the Red Sea crisis. Now, if the Red Sea crisis had not happened, then the strike now would have a much less severe impact because the shipping lines would have plenty of excess vessels to put in. Now they don't have any excess vessels. All the slack has been taken out of the system.
The idea that so much was shipped in early to try and make sure there were supplies that were here for retailers for the holiday season could lessen the impact, or at least not allow consumers to see the impact quite as quickly. How long before consumers do start to see it with either empty shelves or much higher prices that they are paying? And I ask because we've got an election here 5 weeks away.
Yeah. It all varies depending on what kind of commodities we're talking about. Perishable goods move much faster, obviously, to the end consumer. As a rough guide, we're talking about 2 months, max about 3 months is usually the flow from the cargo moves into port until we start seeing it out in shops. So the impact is likely going to be after the election season. The brunt of the impact are for an extended. But certainly inventories will already be starting to draw down. So the whole supply chain is starting to loosen up. So we might already see prices go up in anticipation before we hit the election.
Okay. Alan, thank you.
Thank you.
It is just before 7 a.m. on the East Coast, officially 6:58, almost 6:59. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. A bunch of big stories taking place right now. Israel has begun targeting ground operations in Lebanon. That's, of course, in an effort to push Hezbollah forces away from its border. Israeli Defense Force saying troops began raids against terror targets in the southern part of Lebanon. Israel notified the U.S. that the incursion would be limited in scope, scale, and duration. Of course, pressures coming from there as well. The FCC, meanwhile, investigating a Verizon network outage that happened across the country after thousands of users reported problems yesterday. Chicago and Indianapolis were among the hardest hit. If you were trying to reach folks, you might have hit their voicemail or gotten nothing. Meantime, Ford throwing in a free home charger installation with the purchase or lease of an electric vehicle. The offer applying to the Ford Mustang Mach-E, the F-150 Lightning, and the E-Transit. Bought between October 1st and January 2nd. Owners will get a level 2 charger at home, which normally costs $1,300, another $2,000 for installation. So maybe I was keeping some people from buying these vehicles. Look, I don't have one. That's one of the things that's
You said that, and I didn't immediately think, wow, time for me to go.
You've thought about it, and that's one of the things that's made you kind of.
Well, yeah, you have to. I don't have the
place to
the whole setup. So yeah,
now you could get it. It's worth $1,300.
Well, it's worth $3,300. Not bad.
Yep. Checking the futures this morning. I'm worried now after Amy Wu Silverman, but I've been worried for a while. It's quiet, too quiet. Dow's down, indicated down, but Nasdaq's up. Let's get to Dom Chu. I want to look at this morning's pre-market movers. You have a plug-in electric car yet?
I do not have a plug-in electric car, and it was mostly because, I'm the prime candidate for one because I have a predictable commute. I know how many miles a day I go, and there's charging here at our headquarters at CNBC, so I am the prime candidate, but I just haven't gotten over the hump yet with regard to that kind of not having a gas station nearby.
You saw what happened. Look, not having a gas station, but you saw what happened in the wake of Hurricane Helene with a lot of these cars that if you took on salt water, it's you got to be really careful.
Yeah, Becky, to your point, I would just say even in the winter out here, forget about catastrophic conditions. Even just with bad winters and maybe some snow out here, sometimes you see some of those EVs on the side of the road and whatnot. So I don't know. For me, my wife drives a Toyota 4Runner, and it seems to be very comfortable for her in the weather. And I think we're going to keep it that way for a while. But anyway, back to business here. We'll get started with a check on some of the bigger movers today. We'll talk about analysts at Citigroup who are upgrading AB InBev right now, up 1.5%. They're citing improving margins and earnings growth, and that stock buyback could be announced along with the Budweiser parent company's next earnings report. So that forecast in their mind is helping drive that bullish call. Anheuser-Busch InBev up 1.5%. Now to the EV side, speaking of, Chinese EV maker NIO is higher before the opening bell by about 4.5% on the back of solid delivery numbers. NIO reporting that third quarter vehicle deliveries are up 12% on a year-over-year basis. Tesla's rivals Li Auto and XPeng also posted record deliveries for the quarter as well. So Chinese EVs, a kind of mixed story there, right? Slowing demand possibly, but nonetheless, NIO shares are up. And then we'll end with a look at Walmart. Bank of America is adding that stock as a top pick for the fourth quarter as the retailer continues to see gains across the board. Analysts are citing strong online expansion and express delivery options as big boosts for Walmart heading into that all-important holiday shopping season. So Joe, Becky, Andrew, Walmart's also in focus here. And by the way, check out cnbc.com/pro for more on that story as well. I'm going to go back and maybe research some EVs, but maybe not pull the trigger just yet.
Let us know.
You got it.
Meantime, CVS Health is conducting a strategic review of its options for the company, including a possible breakup. According to the Wall Street Journal, also Reuters reporting that they've hired bankers to facilitate all of this, which has been ongoing apparently for weeks. In recent years, the retail pharmacy chain expanded by acquiring pharmacy benefit manager Caremark, health insurer Aetna, and healthcare clinics. Yesterday, hedge fund Glenview Capital Management met with CVS to discuss ways to improve operations. The fund owns about 1% of CVS, but a couple of bets that have not all gone the right direction. And you can look at that stock over a period of time, and it's been a challenged one, given everything that's going on.
Also, news from automaker Stellantis. The company is extending the suspension of of production for its electric Fiat 500 city car until November 1st. The company citing poor demand. Stellantis previously said that it would suspend production of the EV until October 11th. Separately, Stellantis is recalling more than 150,000 plug-in hybrid Jeeps because of possible fire risk. The parent of Chrysler, Jeep, Dodge, and Fiat is advising owners not to charge their vehicle and to park it away from buildings until that issue is resolved.
And we're watching the shares of Boeing, which are falling after Bloomberg reported the company is considering raising at least $10 billion through an offering. This would be stock dilutive. The report says Boeing working with advisors to explore what options it has as the strike lingers. It's not yet responded to a request we did ask, and that could conceivably trade at a 52-week low, which is 151.24, and that sounds awful. Low 90s billion dollars, it'd be about $93 billion if it opens there. But in 2022, almost 2 years ago exactly, on September 30th, 2022, it was trading at 121. So that would be a couple of, be a multi-month, like 24-month low. But it really got even below that just in 2022. It's been rough.
The question is what this means for the credit rating agencies, whether they downgrade as a result of the ongoing strike and the need to raise more capital.
439. It's been as high as almost $450, and that was back in before everything started falling apart back in 2019. Unbelievable.
When we come back, China stocks surging following stimulus measures and hopes that economic growth will pick up. We're going to talk with Kyle Bass next about the move to China and what we're seeing with U.S.-China relations. And then the CEO of PG&E will be here ahead of the utility company's Investor Day. Squawk Box will be right back.
Welcome back to Squawk Box. China stocks saw their best rally in 16 years as recent economic stimulus measures boosted investor optimism. The Chinese markets now take a breather for the Golden Week and will resume trading on October 8th. Joining us right now is Kyle Bass, Heyman Capital Management founder and chief investment officer. You heard Mr. Tepper make the call, and you've seen the stock movement in China. You've been quite bearish on the country. I'm curious what you make of everything that's happened over the past week and a half.
Yeah, great to be here, Andrew. I think that look, Tepper is one of the best hedge fund investors in the history of our markets, and he's a great trader. And you know, we say something at our firm. We say, you know, you can't break your arm jumping out of the basement window. Chinese stocks have been up only 5 of the last 20 years. Their GDP's up 505% reportedly. And if you invested in their Shanghai Shenzhen 300 index 15 years ago, you're still not making money, even though stocks are up 25% in just a week. So you've got a policy-driven stimulus, you've got animal spirits arisen, but typically the biggest rallies are counter-trend rallies. And China's trend has just been down for so many years, Andrew. And as they've shown as Xi Jinping has kind of shown his hand, investing in communism has never worked in the long run.
So your argument is this is a head fake? Is your argument that you would short it from here? Is your argument that maybe this goes on for another year or several months? What are you saying?
Sure. As far as the policy stimulus is concerned, they've talked about a $300 billion stimulus so far in a reportedly $20 trillion economy. So going into the Golden Week, going into National Holiday, they got stocks up. Think about this, Andrew, 25% in 1 week. And so, is that a good time to buy something? I would argue that this has been a trading rally. It's been a massive counter-trend rally. But you know, think about 2014. Think about many years before. Their stock market sits today where it was a year ago, where it was in 2016, where it was in 2009, where it was in 2006. That's exactly where we sit today. And so, if their GDP is up 505% and you're still sitting where you were sitting back in 2006, I don't know, maybe you should consider not investing in communism. Do I think that the rally could continue? Do I think that stocks could go up more? The answer is yes, but I equate it to picking up dimes in front of bulldozers.
And therefore, you think that the move has been made and it's over already?
Yeah, I guess my view on this is simple. The United States has increased our GDP about 75% in 15 years. And if you invested in the S&P and reinvested dividends, you're up almost 400%. So you don't have to discount Xi Jinping. You don't have to discount the Communist Party. You don't have to worry about China going to war with the Philippines or Taiwan. You don't have to worry about their limitless partnership with Vladimir Putin and their partnership with the Ayatollah and their partnership with Kim Jong-un. You don't have to worry about this unholy alliance of bad guys in the world geopolitically. If you just invest here where we live, where we have the best, most deepest capital markets, we have the most innovation, we have the best companies in the world. All I'm saying is, as viewers of this show, think about the broader picture. Again, could a communist government goose its market a little more and make it go up? That's absolutely. And if you're a trader, more power to you. If you invest in communism in the long run, you'll lose every time.
So you think it's a long run story, but I think the question for some of the folks who do watch this broadcast who are thinking maybe a little bit more short term, and I don't know if short term is a week, a month, or a year. David Tepper was sitting right over here, and he said not just to go buy, he said buy everything. Buy everything.
I mean, he is an amazing trader. I mean, and he's someone I respect wholly. And so, again, he's a professional investor too, Andrew. And so if you have all of the wherewithal to be long Chinese A shares and know which ones to buy, or if you just want to go trade an index, I mean, again, it's up 25% in a week. Be careful. But if the Chinese government follows through with fiscal stimulus, and realizes that their economy is circling the drain, their youth unemployment crisis is exploding, their stock market or their banks are insolvent because of their real estate market, you know, if they stimulate, and they stimulate in a major way, you could still make some money being long. I just think it's a bad idea in the long run.
Kyle, can I throw in some of the geopolitical news that I think we're all grappling with, which is just the relationship between China and Iran, and how you think that plays out, and how you think it plays out in the larger picture of the rest of the world as it relates to China's economy?
Yeah, I mean, when you think about it purely economically, it's almost irrelevant, except for the fact that China imports, call it 12 to 13 million barrels of crude oil every day. They still import about 8.5 BCF of LNG every day. So China is still a big energy consumer. So when you think about geopolitical tensions, especially as it relates to Iran, and now you have Israel moving in on a selective ground move in Lebanon, and again against Iranian proxies across the board. If this conflict expands into a broader regional conflict, which I think is, I don't want to say it's inevitable, it's highly probable, the relationship between Iran and China and Russia is one that we all must watch. And these madmen, the Ayatollah, Putin, Xi Jinping, they're all acting together. This is something that's very worrisome for the world, and I think it's very worrisome for political analysis and geopolitical analysts in the U.S. and the intelligence community. So this is not investing as usual. Again, one of the reasons why I say we should stick with investing in America and what we've got here. And I think, again, this conflict between Israel and Iran is likely to broaden going forward.
Kyle, I want to thank you for joining us this morning. Thank you.
Thank you, too.
Appreciate it.
Up next, we will talk rising energy prices, consumer demand, wildfire threats, and how AI is playing a role in the energy transition with the CEO of PG&E. Plus, you're looking at a live shot. Let's take a look at that shot. Yeah, there it is. That's a live shot of the Port of New York and New Jersey. U.S. port workers from Maine to Texas hitting the picket lines just after midnight. A live report is coming up, and Squawk Box will be right back.
money.
All right, welcome back, everybody. Gas and electric company PG&E is hosting its investor conference in New York today, and joining us to talk more about the energy transition, consumer demand, and much more ahead of that is Patty Poppe. She's PG&E's CEO, and Patty, thanks a lot for coming in today.
Thank you. Nice to be with you.
I think a lot about what a tough job you have. You stepped into PG&E at a point when that company was in a lot of trouble. They had filed for bankruptcy. California's been a very difficult place to do business. A lot of people looked at that and said, yeah, no thank you. But you have done some pretty incredible work just in terms of how you've been trying to address all this, deal with the safety issues, the fallout from wildfires, being able to raise rates in a way that allows you to pay for a lot of the upgrades that are needed on this. What are you going to talk to the street today about?
Well, we're going to talk about our what we call our power pyramid. It starts with the foundation that you described as the foundation of safety, both physical and financial. I think a lot has changed in the California business construct that people don't know yet about in terms of protections with new extreme weather conditions, what happens in California and how do we protect investors through that, but more importantly, protect our citizens. And we've made dramatic improvements and changes there. In fact, Moody's RMS did an assessment and has identified or calculated that we reduced the risk of economic loss by 93% as a result of the safety measures we put in. So that's the foundation. That gives us permission to improve our business and run a great company and serve customers well, which then gives us permission to decarbonize the economy at the lowest societal cost. So there's a lot happening in the utility sector, but definitely in California.
There's a lot of moving pieces here. Yeah. Barron's actually over the summer put out something saying that there is a bull case to be made for this, and maybe it will pay off. The stock has been up pretty sharply. I look back at, I guess, $15. It's now up to close to $20. There's still a lot of risk and things that are associated with this. What do you do just in terms of making sure? I was just looking through some of the rate increases. It's significant rate increases that have gone through. Consumers obviously push back on some of those things. But in California, the regulators have allowed that to continue. I guess they're on board with what you're trying to do?
Well, I think no one can argue with making it safe. And we chose safety, and we have to invest in infrastructure that's fit for purpose. I mean, just look at what's happening on the East Coast this week. It's devastating, tragic. As weather conditions get more extreme, we need infrastructure built for purpose, infrastructure people can count on. So in California, that means in our highest risk areas, undergrounding power lines in a way that we would not have before, that's more economic, because today the response to emergencies is expensive. Trimming trees every single day of the year is expensive. Building infrastructure that's fit for purpose is not as expensive.
Although it takes a long time and it's pretty expensive too. Maybe not as expensive as the cleanup. How quickly can you do it, and how much does it cost to put those power lines underground?
Yeah, well, we'll do 1,200 miles of lines here, and that's our goal is to do about 8% of our lines, so it's just the highest risk miles. We've accelerated our pace. We've doubled the miles we've done every year. We're making real progress on that, and we'll get good. We'll get even better at it. We've gotten much better at it than we expected. We have some foundational pieces, though. We have implemented a lean operating system. You know, it's born out of the Toyota production system. These fundamental lean capabilities to know problems, see problems, fix problems. We're implementing those, and that's helping us improve our business every day. The people of PG&E are stepping up to serving better at a lower cost, and that's all happening right now.
I was shocked that the Wall Street Journal several years ago laid out how old some of the equipment was. I mean, this was after some of the very bad wildfires, and then went out there. There's stuff that was over 100 years old with some of these. That is something you guys have been tackling and going after. How much do you have left to go?
Yeah, we still certainly have work to do. I think this is really an interesting challenge nationwide. The idea that this grid has reached, in many cases, 100 years old, it's time to rebuild the grid. Rebuild the grid can be funded by new load growth that we haven't seen in our professional lifetimes. So load growth from EVs, load growth from electrification, load growth from data centers, economic growth in California is driving load growth. That can actually fund the rebuilding of the infrastructure, because today we can fulfill that demand in a more dynamic, technical way. We can leverage AI to actually optimize the grid in a way that hasn't, happened before. I think this is the untold story of the utility sector, but specifically PG&E in California being able to capitalize on load growth and a dynamic technology-enabled grid.
I mean, that's been the huge question, though, just the demand for AI power itself. How do you keep up with that? Because we've had plenty of people who come in here and say it's not going to be able to keep up with it 2 years from now.
Yeah, I have a different point of view. In California, we call it good load or beneficial load. So we did some calculations we shared with investors, and we'll be sharing this today. We can add a gigawatt of new demand, serve a gigawatt of new demand from a data center, and spend up to about $1.6 billion to serve that load. But that's new sales, and people don't talk about this in utility speak very often. New sales can actually fund that investment. The investment gets spread out for customers because it's capitalized and depreciated over time, so customers win, and customers' bills can actually go down 1 to 2% as a result of that new data center load. So you have to calculate it, you have to do the right load in the right way. We can lower or raise what we call the belly of the duck curve in California. We can fill up that belly of the duck, utilize energy in the middle of the day, make sure we don't add to the peak with a smart dynamic load management system, and actually lower unit costs of energy for this new load. So we can rebuild the grid funded by new load. That's a winning formula. Any other business sector would love it. We're a little nervous as a sector, I think, because we haven't seen new load in our lifetimes, but this is the best thing that could happen to the grid.
What is the biggest impediment to getting that done, just in terms of permitting, what you need to deal with?
I think permitting can be a real challenge, and having speed to power, as you've heard that term many times lately, getting speed to power is going to require some reform in permitting. It's going to require that
on a state level, local level, on a
it could be
national
federal and state for sure, and local permitting can be a real challenge. But we'll get good at that. We can plan for it now, and we're getting better and better at being able to see that load so that we can fulfill it faster.
You mentioned earlier what we've seen in the southeastern and even the middle of the United States after Hurricane Helene. What's being done there? What can be done? As somebody who looks at this from the infrastructure, the energy infrastructure, what needs to be done?
Yeah, I do think we have to look at our at having climate adapting infrastructure. We have to look at what are the standards. The standards of yesterday don't contemplate the kind of wind speeds and moisture levels, the rain that we saw in this storm. We have to do more than just respond well, which my hat is off to all of the men and women who have come to serve and serve the people. This sector works together in times like this, and I'm so thankful for their safely restoring people as quickly as possible. But we have to build infrastructure that can withstand these weather conditions. These are actually becoming predictable. We have to raise our standards of the infrastructure. Again, leverage load growth as a means to fund. We're going to replace this infrastructure anyhow because it's aging. Let's replace it with infrastructure that has adapted to new conditions and more extreme weather, and build it at a more affordable price because it's funded with load growth. It's a great story for our sector.
Patty, thank you very much. Patty Poppe from PG&E.
Thanks for having me.
Coming up, as many as 50,000 union longshoremen going on strike. A live update coming up. Then later, we're going to talk about the future of healthcare with the chairman and CEO of healthcare tech company Hologic, who also serves as the chairman of Illumina. Squawk Box coming right back.
Squawk. In a research note, Barclays says the firm's channel checks indicate that the iPhone 16 orders have been cut for the December quarter at a key Taiwanese supplier. Now, Barclays previously discussed shorter lead times across iPhone 16 models globally. The firm saying that Apple may have cut roughly 3 million units of the key semiconductor component in for iPhones for December, which, if confirmed, would be the earliest build cut in recent history. And the question, of course, is what that'll do to Apple's business. You're looking at that stock off about 1% on the back of that news.
Pete Rose has died. He's baseball's career hits leader, but he was banned from the sport for gambling for years. He had denied that he bet on baseball, but admitted it in 2004 that he did, but never against his own team. His nickname was Charlie Hustle. Head first slides, known for his gritty style of play, nicknamed Charlie Hustle. Off the field, after his ban, he did face legal troubles, spent time in prison from July 1990 to January 1991 after he pleaded guilty to tax evasion. He's a native of Cincinnati, Ohio. He was admitted into the Reds Hall of Fame in 2016, 83 years old. A friend of mine, the Reds owner, Bob Castellini, said, "Our hearts are deeply saddened by the news of Pete's passing. He was one of the fiercest competitors the game has ever seen, and every team he played for was better because of him. He was a Red through and through." I know the Phillies are trying to take credit. I don't buy that. No one loved the game more than Pete. No one loved Pete more than Reds country. And he was found at his home in Las Vegas on Monday. He was not under the care of a doctor, but he had said that he had been in poor health. But either the day before or at least recently, he was in Nashville at an autograph signing. He was in a wheelchair, but with George Foster, Ken Griffey Sr., Tony Perez, Davey Concepcion, and members of the Big Red Machine. So he had been flying around and back at home and found dead in his home. And 4,200, and I don't think that record ever was Ty Cobb's record, who was also a complex individual, supposedly. That's a little before my time. But coming up, the S&P closing at a record to end September. We'll talk markets next. And here are the futures ahead of the opening bell. We're coming right back.
to Squawk Box. Fed Chair Jay Powell signaling he is in no hurry to cut interest rates, and against all the odds, markets finishing out trading in September strongly and ending the choppy third quarter solidly higher. For more on all of this, I want to bring Mona Mahajan. She's a senior investment strategist at Edward Jones. So we have one more quarter to go.
Yep.
How's it going to end up?
Yeah, you know, look, we've been up 20% year to date thus far. We've had a good first 3 quarters of the year. Keep in mind, we're headed right into that seasonally choppy October month and right into that election day. So history tells us that we could get some bouts of volatility.
So what would you do? Would you just take the cash, sell it, and go on a holiday for the rest of the year?
You know, we do quite the opposite, actually. If we do see any pullbacks or corrections, we'd lean into that for a couple reasons. One, history tells us if the Fed is cutting rates and there is no recession on the horizon, which is our base case, that is a good backdrop for markets broadly. Two, when the Fed's cutting rates, valuations tend to expand, and so we could see at least some of those lagging parts of the market that haven't seen as much valuation expansion continue to move higher. And three, of course, we know Fed rate cuts helps consumers, helps corporations with lower borrowing costs. All of these are well-known catalysts, but nonetheless, we do think that the underpinnings of these fundamentals remain intact for the longer-term investor.
Okay, overlay, though, the election on top of this.
Yep.
So does that have any bearing on the outcome of what you think the stock market does by the end of this year?
So we do think from a sentiment perspective, from a technical perspective, we've seen this story over and over again. 6 to 8 weeks prior to election day, we do tend to see the S&P 500 pull back anywhere from 5 to 10%. But interestingly, the couple months after election day, we tend to see a recovery. Now, from a fundamental
You buy into that?
You know, we think
if it happens.
Generally, if history is on our side, then yes, we think the trend is there. And we do think fundamentally Congress remains pretty divided. It'll be tougher and tougher for anyone in that presidential seat to push through major legislation, new regulation, et cetera. So
If there's divided government.
If there's a divided government.
And you're convinced that there will be at this point?
You know, I think even if it's not divided, the margin of victory on in both the House and Senate will be very tight. And so that's kind of the direction of travel there.
In terms of stuff you would buy in this downturn, it would be what?
So I think we want to stick with this theme that we saw play out in the third quarter, which is that broadening of market leadership. So areas like cyclical parts of the market, think utilities, think industrials, some parts of defensive and value that have to play some catch up, but we wouldn't wholesale give up on your AI and tech portfolio. So we'd say the theme for the next 12 to 18 months is diversification.
What wouldn't you touch?
You know, what we'd be wary of here, and you've probably heard this already, if you're overweight cash and cash-like instruments or shorter-term parts of the bond market, your rates are going to start moving pretty lower in the next 12 to 18 months. You're not going to be refinancing those CDs at the same prices you're seeing today. So just be mindful that some of that, you know, great money market fund rate you're getting is probably going away soon.
Okay, we will leave it there, Mona. Thank you.
So much, guys.
Good to see you this morning. Thank you.
All right, still to come this morning, North Island Chairman Glenn Hutchins on the Fed, deal-making, and the election. But up next, a report from the Port of New York and New Jersey, where U.S. port workers have gone on strike. Squawk Box will be right back.
insurance.
Dock workers are now on strike at ports from the East Coast to the Gulf of Mexico. Frank Holland joins us right now. He's got the latest on this. He is right there on the picket lines. And Frank, what's happening?
Hey, good morning, Becky. As many as 50,000 longshoremen went on strike at just after midnight this morning, shutting down East and Gulf Coast ports, disrupting the U.S. supply chain, and according to many industries, increasing prices and reducing availability of products going into the key holiday season. As you mentioned behind me, we see some ILA members here gathering right now. Many of them have been here since just after midnight. Earlier this morning, the union actually released some video of the ILA president making a very fiery speech to members about the contentious negotiations with porter operators who are known as the USMX.
We're going to keep this thing going every day, in and out. We're going to be on the news. We're going to win this thing. Trust me. They can't survive too long, and we're going to get what the we deserve. Believe me. God bless all of you for being here. Thank you.
And the union is asking for higher pay and restrictions on automation at the port. Those are two of the key issues when it comes to this negotiation. USMX issuing a statement before the deadline yesterday saying the two sides traded counteroffers over pay. They also added our offer would increase wages by nearly 50%, also increase employer contributions when it comes to health care. They also added that it would also keep the same language when it came to port automation and also semi-automation. This strike will cost the U.S. economy as much as $4 billion a day when it comes to estimates from Jefferies and a number of other analysts and big banks out there. According to Jefferies, though, a one-day strike here at the port, that would create congestion for about a week. They say a 2-week strike, that would create congestion going all the way into early 2025. The Biden administration says they've been in contact with both the union and the port operators. They actually issued a new statement this morning. They said in part, President Biden and Vice President Harris are closely monitoring the strike at the East Coast and Gulf Coast ports. The president has directed his team to convey his message directly to both sides that they need to be at the table and negotiating in good faith, fairly, and quickly. However, the Biden administration has maintained they would not use the Taft-Hartley Act to keep the ports open and also force both sides to keep negotiating. I've spoken to leaders from a number of trade groups across a number of industries, spirits, agriculture, auto parts, apparel, all of them saying this would be a big disruption to the holiday shopping season. They say it would have an impact with both businesses and also to consumers.
So we're talking about $200 million a product a day that's going to get stopped at the ports. And that's, if that stays for a long period of time, it's going to be weeks before those goods can be cleared. In addition to shortages, you could see costs start to go up. And, that's tough medicine at a time when we're trying to reduce prices.
And that was the president of the American Apparel and Footwear Association talking about the impact to his specific industry. I want to talk about some of the shipping stocks here. The disruptions are already given a boost to container shipping, logistics, and air freight stocks. That includes names like Zim, Hapag-Lloyd, FedEx, C.H. Robinson, and Expeditors. Becky, back over to you.
Hey, Frank, this is really interesting, trying to figure out what exactly they want. The list of things that they've already been offered in this latest offer sounds pretty rich. A 50% pay increase, restrictions on automation to come through. Those are the two big sticking points you mentioned. What more do they want? Because they also said that they're going to be tripling the employer contributions into their retirement funds, strengthening their health care options. Have they said specifically? I mean, I've heard a 70% raise that they want, but is there anything more specific they've given?
Becky, I've heard that same number as well. It has not been officially confirmed by the union. I've reached out to them to try to confirm that. It sounds like pay really is the issue here. Even in the Biden administration statement, they really emphasized that they wanted the USMX to negotiate, keeping in mind some of the profits that they've made over recent years. The ILA president has frequently said that the container shipping companies, they made big profits during the pandemic, and he feels like that financial gain hasn't quite been passed on to union members, not even in the negotiation so far. Again, USMX saying that they offered wage increases of nearly 50%. Again, that seems to be one of the key sticking issues. I believe the ILA president is back here behind us. We're going to try to talk to him and get down to the bottom of that issue.
Okay, Frank, great. Thank you, and we will be watching for updates.
Thank you.
Coming up, the CEO of medical technology company Hologic, Steve McMillan, joins us. We will talk the future of healthcare and how AI is reshaping your trip to the doctor. We head to break. Here's a look at the pre-market winners and losers in the S&P 500. We're coming right back. Healthcare, always a big issue in presidential elections, but according to a new Gallup poll, 2/3 of Americans aren't as convinced this time around. Joining us now on the future of healthcare, CEO of WholeLogic, Steve McMillan, a company that specializes in medical technology for women's health. Steve is also the chairman of Illumina. I guess we can talk about the election in a little while, but you're here for a specific reason, which I think is worthwhile to talk about, and that is breast cancer awareness. 1 out of 8 women, totally curable if you get it early enough, but it's hard to get everyone to do what they need to do because of a lot of myths about mammograms, which you specialize in, right? Mammography.
It is very true, and your breast cancer is eminently treatable when you catch it early.
Most common cancer too.
Yes, most common. Yes, breast cancer, cervical cancer is very common, but also so treatable when you catch them early. And it is the magic of what we keep trying to do in terms of improving the imaging. Also, our new AI detection is helping, and I'll give you 2 great points on how I think AI can completely take us to a different level. And that is, 1, our new AI detection is showing that versus human radiologists, we are catching 1 additional cancer for every 10 that are noticed and read by humans. So as we put this through, if you think about it, it's image detection. So we're catching 1 more cancer for every 10 using our new AI detection. The other part, and Becky, you can appreciate it, and every woman can appreciate, is we're now seeing a 70% reduction in false positives. So when you think about the fault, not only we're catching more, but the false positives, and you think about the workflow and the cost and the emotional toll of false positives, right? The woman gets the call back. Now, hey, we want to see you come back in a couple of weeks from now. You're waiting all that time, and you go back in, and so often there's nothing there, but there's been angst, there's cost, there's taking more time off from work, whatever it might be. So these are, everybody's looking for use cases of AI. These are two profound use cases that I think can really help, even reduce these numbers better and better for healthcare.
How many women delayed during the pandemic didn't get the mammograms?
We have numbers, they're kind of all over the place, but as much as 40%, even a year after, it appears still delayed. What happens in life, the women are oftentimes prioritizing the rest of their family, and what's really been bad is through the pandemic, everybody lost sense of time. And what seems like having gone 1 year or 2 years is suddenly 3 or 4. So part of what we're seeing now is picking up cancers that are a little bit more advanced that would have been caught earlier because suddenly a woman realizes it's been 4 years since their last mammogram.
You just described me. This is a wake-up call.
Yeah, you've taken care of the kids, you're taking care of everything else. You get, these guys on set, you're, balancing everything, right? So, and it's back to, my own mother, breast cancer twice, both times caught early, and she is 85 and very healthy now. Right. So if you catch it early, it's great.
Doesn't really hurt.
No.
It can be a little bit uncomfortable.
Speak for yourself.
Yeah, exactly.
A little work.
We can happen. You get it fast.
Yeah, we're working those because our scan times have gotten shorter and shorter, and everything on that.
Dense tissue. You cannot feel density. We have no idea if there's a density. You need to do it that way.
Yeah.
Right.
Yeah.
Some other myths. What are some of the no family history? 85% have no family history.
Exactly. Or You're on top of this, Joe. Very impressive.
I almost said F and A. I almost said that, but I did just say F and A.
You did.
Yeah. No, I am. And because it's the greatest thing. We may never. It's so hard to cure cancer because every cancer is different. But if you can detect, like a colonoscopy is a no-brainer. If you don't get a colonoscopy, you're out of your mind because it takes a while.
And by the way, there's less discomfort with that. Maybe the pre.
I don't know.
Really?
Maybe
I have my next one Friday.
It's the mental discomfort.
Yes, no, it's the prep. But and it's interesting you talk about dense breast because
prep.
The night before. You're almost taking off
for a long time.
You almost can lift above the toilet. It's almost like a rocket ship.
Let's get this back
All
to
right,
breast
let's get back.
cancer.
So what do you have?
With dense breasts, we're also, our hologic 3D mammography is the only product approved in the United States for dense breasts. So, which is also, and then again, the AI detection of that, because part of reading the films with dense breasts is there's more fibrous tissue.
So AI is already happening for you.
So, yes, and we've been working on it for years. I know it's become the big buzzword, but what's been fun is we've been bringing these innovations that we've been working on for years and years.
Okay, this is all great news. And it's cost effective over the longer haul for somebody along the way. I guess the question is it cost effective for the hospitals to put these machines in? I would imagine insurance gets, the insurance companies are going to make out over this if you are catching stuff faster, if you were doing it. It's just the upfront cost has to be put in by the hospital or somebody to put these things together. And that's not cheap, it's not easy, and sometimes it's with hospitals that have 1% to 2% profit margins.
Yeah, luckily in the grand scheme, mammography equipment is relatively a lower capital outlay than even, frankly, a lot of the IT systems, MRI machines, CT scanners, all those things that are so much more expensive. So the magic for us is there's a fairly good payback for the hospitals, and the usage is incredible. As you put in a mammogram machine, you can be booking them, full out, frankly, and having the woman coming into the hospitals are very good things.
You
a
have
lot
to
more in the
have a more
outpatient.
densely populated area where this is happening.
A bit, but even the community hospitals, because the best thing we can do really is getting more people to come to them. So we've also been trying to help work with, particularly communities to make sure that they're bringing their women in, particularly post-COVID, where they may have gone the 3 or 4 years and not even realize it. And you can schedule these, you can schedule a lot of mammograms in a day, so these machines can pay off fairly quickly.
How quickly do you get the result?
It is
this new AI
varying.
world.
You can get some immediate if the radiologist is right there and reading. The
radiologist never likes to tell you what's going on.
Yes.
That's what's right. Let's be honest. Right?
Yeah.
Can we fix that? Most times, the radiologist who does the work actually knows what's going on,
Yes.
and they're not allowed to tell you.
I always look at them like this,
No, I know. What can we do about this?
We can, to a large degree, a lot of them are being read almost simultaneous or within a day, so you're getting results back
What
much
about
quicker.
the AI reading?
Sometimes. The AI reads can happen very quickly. Now, in today's world, they still need a reflex and have, just from a regulatory standpoint, have a doctor actually oversee it so that you're not totally handed off to the machine.
Well, the other
But
problem
most
is
of
they
these
don't know how
results
to
can be
counsel you.
within a day or two.
Right, they don't know how
at
to
this
counsel
point.
you on, if they say, yeah, we see something, they can't counsel you on what's going to happen and what happens. And
Yes.
it's the worst
I
part.
know, but I want the AI to at least tell me. I want to know the initial read, the second read, the third.
I look at
it's like waiting for.
I interpret a technician's expression.
I know,
after
terrible.
it is. I'm like,
Yeah.
Tell my
everyone's
wife,
like, you
tell my
know,
wife, he looked a
you
little.
look at the thing, you know what it says.
So radiologist going to tell you, yeah, there's a tumor, good luck.
No, I go,
Yeah.
he seemed fine, and I kind of started
I get that
asking,
feel,
and
but
one of them
I
actually
wanna
said, if it's something really bad, they send you somewhere immediately. They don't just send you home like with a lump.
Yeah,
It's
the
really
other
nice to
the
meet
other
you.
magic that AI is bringing
Yeah.
is, if you think about, there is still a lot of, I hate to say human error, but there is human interpretation of all of these things. And when you think about particularly our 3D, which generates more images, it's generating about 60 images per per mammogram. That's a lot of data to absorb. In the AI world, what's great is it can scan it very quickly and then pick it out and send it to the radiologist and say, hey, go look at slide 36 and double check that instead of looking at all 60. And when you think about just the fatigue, right? I always think about it's like automotive manufacturers. You don't want to get the car that's made Friday afternoon, right?
Exactly.
There's a little bit of that, and also the variation that here in New York you're at the top institutions. As you go out into rural America, as you go to community hospitals or everything else, you might not have a radiologist that is as advanced at reading these things. So that, to me, and particularly as you go around the world, the ability to really automate the reading of these images becomes profoundly better at being able to get both faster results and better results.
What should this stuff actually cost?
What should it actually cost? Well, a mammogram is, call it $100 to $200, is really what they end up being. When you think about the value.
I'm not sure that's true in New York City.
So, all right, but that's
No, but
generally
this is what I'm saying.
reimbursement.
I went to get an MRI, and I remember the guy wanted to charge, I don't know, it was $2,000 or something. I was like, really? Wow.
Yeah.
That's something. So but they're all trying to advertise these machines.
Yes. So, but they will totally make up for the amortization of those machines well within that range. So, I think about it relative to the cost of prescription drugs. These are cheap, right? Think about the cost of a prescription drug versus an annual mammogram. At a couple $100. I'll take the mammogram
Hologic
all day long.
or I'm sorry, Illumina, and there's a lot of AI there too, and, right? But maybe next time.
Yes, there is, sure.
You can save all of us with all the hats you're wearing. Right?
A lot of opportunity.
Yeah.
So,
Come back, Steve.
great to see you.
We don't
again.
say striker anymore.
So-
Striker.
No, it's been a long time.
Striker.
12 years, believe it or not,
Yeah, 12
since I
years
was
since
there.
you were at
Since I was there.
Oh my
Used to
God.
bring you the bone saws. I know you always loved those.
Yeah, those bone saws. He's a wrestler.
That was so.
I think he's a wrestler in Spider-Man.
Oh, is he?
Yeah, he was a wrestler.
All right.
in Spider-Man.
There you go, beyond my
Bone
scope.
saw.
Steve, thanks a lot.
Thank you. Great to see you. Thanks, Andrew.
It is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, tens of thousands of dock workers at East and Gulf Coast ports walking off the job early this morning. They are striking over wages and disagreements about automation at ports. We're told the last-ditch offer of a 50% wage increase for workers over 6 years was rejected yesterday. Boeing is looking to raise at least $10 billion, or looking into raising, I should say, at least $10 billion by selling new stock. That's according to a Bloomberg report, which also says a sale probably wouldn't happen for at least a month, since Boeing would want to get an accounting of how much a current worker strike has impacted the company. And sources tell CNBC that CVS Health has reached out to advisors to conduct a strategic review of its business. CVS is facing potential activist investor pressure and a depressed stock price. Reports yesterday said a breakup of the company is one possibility that's being considered. Breaking news for you this morning. Charles Schwab announcing CEO Walt Bettinger is going to retire at the end of December. The current president, Rick Wurster, will take the top job. Wurster will also join Schwab's board effective January 1st. Bettinger, who turns 65 next year, will continue to serve as co-chairman of the board alongside the company's founder, Charles R. Schwab. We're going to be speaking with both Walt Bettinger and Rick Wurster. That's coming up at 8:30 a.m. Eastern Time in a first on Squawk Box interview. This is a company that knows how to manage and how to find its successors and do succession planning here. Walt Bettinger placed a big bet back in July, adding to his huge stake of shares in Charles Schwab. So he's not planning on going anywhere. We're going to get to talk to them about how they see things in the market, what this succession planning is all about, and much more. And again, that's coming up in about 25 minutes.
Meantime, take a look at the futures right now. Dow off about 123 points. You're looking at the S&P 500 off about 5 points. The NASDAQ up about 5 points, 4.5 points. Take a look at Treasuries as well. I'm going to show you the 10-year right now. Sitting just at about 3.74, the two-year note at 3.62. Want to get straight over to Dom Chu, who's got a look at this morning's pre-market moves. Dom.
All right, good morning, Andrew, Joe, and Becky. We'll start off with shares of Ford Motor right now. They're actually getting a little bit of movement here, up by roughly 2.25%. Goldman Sachs is upgrading the automaker to a buy rating, saying the company's mix of software offerings can help boost the underperforming stock, as cost-cutting in Ford's EV unit and revenue from the profitable Ford Pro can kind of help offset further headwinds. Goldman Sachs also raising the target price, by the way, to $13 from $12, so those shares catching a bid. Next up, you got shares of Disney on the offer on the other side of things. Oh, now up by about 0.25%. Raymond James is downgrading Disney to a market perform, citing particular pressure in the media giant's parks division. Analysts are seeing slowing attendance and pricing power as well as demand flattens post-pandemic. Also, competition is increasing with Universal Parks, Epic Universe, and by the way, Universal Parks owned by CNBC parent company Comcast. So Disney shares moving between fractional gains and losses. We'll end on Pinterest, and those shares are rising right now just by about 3.5%, helped along by Goldman Sachs adding the social media company to its top picks list, and then removing Amazon subsequently. Analysts are saying that strong sales and user growth, especially among younger users on Pinterest mobile app, and potential upside with advertisers and partnerships with Amazon and Google are going to help drive some of the upside there. Now, for more on those stories and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get more access to all those calls. Andrew, I'll send things back over to you guys.
Okay, Dom, thank you for that. When we come back, North Island Chairman Glenn Hutchins is going to join us to talk markets, inflation, the Fed, and so much more. Don't go anywhere. Squawk Box returns after this.
All right, welcome back, everybody. We want to get right to our next guest. He's joining us right now to talk about the markets, the Fed, much more. Of course, North Island Chairman Glenn Hutchins is with us this morning. And Glenn, it has been way too long since we've gotten to hear from you about so many things that are happening with the economy and beyond right now. Welcome. Thanks for coming in.
It's great to see all you guys. Thank you for having me. Wonderful to be back.
It's great to see you, too. I will say Joe started with congratulations in his roundabout way.
Exactly.
Thank you, Joe.
Finally did it.
It was a big, we're there. For people who aren't watching, Celtics NBA championship.
Have we not seen you since then?
You haven't?
not,
No.
yeah.
I took off the rest of my life. But 3 weeks from tonight, Joe, we raise the banner and get our rings.
You do.
In Boston, playing against the New York Knicks.
Because I've seen you at all the games.
I didn't miss a single one, that's for sure. But on
TV,
the wonderful ladies in the green room here. I promised to bring the ring back to show.
We named it the green room. We named it the green room.
Yeah, exactly. Green room. I didn't like it. Good idea. I have to go to the Emerald Green Room. Yeah. But I'm going to come back with the ring. So if you've been 3 weeks, so if you want me to come show it to you on set, I'll be happy to come do that.
We definitely want to see
You've had the other one on.
I did, but I came here without it today, Joe, because I got an empty spot. I got an empty spot. I'm waiting for the new one.
A Putin store.
Anyway, Glenn, congratulations.
Thank you.
Celtics.
Thank you. It's great to be here. It was a wonderful accomplishment.
Let's talk a little bit about the Fed front and center.
Okay.
Because you are somebody who, again, has been on the board at the New York Fed and has watched through to see what happens. We saw the rate cuts come in, 50 basis points. The market kind of thought, okay, maybe this is the beginning of another big thing, more rate cuts to come. Jay Powell basically said yesterday, the chairman of the Fed, that we're going to see how the economy goes, and we will determine from there. What's your take on what the Fed's next action might be, what the economy looks like right now?
That's a good question, Becky. So, unusually for me, as I was thinking about my prior appearances here, I think the markets have the Fed's posture about right. I don't think they're overtight or overshort. I think there's a little bit of concern on the downside for some unemployment risk. One of the things I think I'm a little bit on the other side of that, I'm a little bit concerned about right now is this strike that you've been reporting on.
Yeah.
At our center at Brookings, Ben Bernanke did a big study, concluded that the biggest contributor to the inflation was a supply shock. The COVID-related inflation. So if we get another supply shock, that could, I'm worried it might challenge supply chains. But I think overall, I think the Fed's in the right place, and the 50 basis point I interpret it as putting an insurance cushion underneath the economy so that we don't run into this negative territory with unemployment. But I think the most important thing here, and I think the markets have it right, but the most important thing here is it is entirely possible that Jay Powell and the Fed pulled off a soft landing. And that would be historic. And there were a lot of skeptics who said they couldn't do it. And I think if we actually get through this without a recession, that will have been, I think, a historic achievement. And it's a testimony to the importance of an independent Fed. Really, really important. Imagine if elected politicians had been in charge of interest rates over the last couple of years and where inflation might be today. Might look more like our budget deficit rather than the place we've gotten to. So I think Fed independence, one, Jay Powell's skillful and his team's skillful management of this episode is really impressive.
How long do we have to go before we really declare mission accomplished on that front?
I'm tempted to use the word transitory, but I guess that wouldn't be useful.
Because eventually there will be a recession.
Right.
There will be a recession. But if we get through, I think, if we get into 2025,
there's
then you're in business cycle territory as opposed to interest rate levels.
There is a narrative that while inflation wasn't transitory, that it was supply chain related post-pandemic. So you could have expected, you can give credit to the Fed, or you can give credit to, a lot of people give credit to, believe it or not, to the Biden administration for how they handled it. So I'm not sure who gets credit for it.
Well, I'm not sure if we need credit here, but my point is, there's a study that Ben Bernanke and a fellow by the name of Olivier Blanchard, who's sort of the Ben Bernanke of Europe. He's the other economist, Nobel Prize quality economist. The two of them got together, did this study under our center at Brookings. And they concluded, very academic, highly geeky stuff, but they concluded that the inflation associated with the pandemic was largely the result of a supply shock That was then followed by labor market adjustments associated with it. And they found very little power from the stimulus spending that occurred. Other than it.
Then you didn't need the Fed to tighten conditions.
And then you need, but once you get inflation,
anyway.
But once you get inflation expectations in the economy,
you need the Fed.
You need the Fed. So for sure, you can't let that get out of it. It takes it because it gets contagious.
Dampen the market.
The strike that's taking place right now, how long would they say it would take before that creates a similar supply shock? I mean, are we talking?
I don't think it will.
2 weeks, 6 weeks?
I don't know, Becky. It's a good question. My sense is, I raise it only to just keep your eye on it. If it gets extended and if it spreads, it feels to me like it's contained both in terms of geographic and probably time, but it's just something to keep your eye on.
If you believe that the inflation we saw over the last 4 years was supply shock induced as it relates to the pandemic, then how do you measure, I mean, this goes back to the politics of this moment, how do you measure this economy?
I'm not sure what you mean by that.
How do you measure the success of this economy? Do you say this is a spectacularly successful economy?
You'd say that the problem with wages keeping up wasn't the Biden administration's fault, that inflation has been up 20%. You'd say that it was already going to happen.
This was kind of baked in. There was some modest contribution to the last stimulus thing.
Yeah.
But I think the stimulus.
I think that too many dollars chasing
it was an issue, but it wasn't. There's no doubt that was an issue, but it wasn't the predominant issue. It wasn't why inflation took off. Look, I think the economy is in very good shape. Jay Powell says it. I ran into two Squawk Box regular guests. I'm not going to see who they are. Just walking down the street here, both of them said, "Tell them the economy's good."
Larry Fink said it yesterday.
We've had these debates where others say it's terrible. So
I don't
think it's terrible, but
people that can't buy groceries.
The macroeconomic statistics are good, right? But underneath the covers there are some very serious issues with people you have to worry about. No doubt about that. The lower end of the marketplace is something where people are having also the indicia. This is why the 50 basis point reduction, right? Because you've got signs of weakness. And by the way, when the elephant stands still, the grass gets hurt, right? The people at the bottom end of the socioeconomic spectrum are going to be those that are hurt first. And those are the ones I think we should care the most about, because the others of us can take care of ourselves.
Right. And so you should never have a mission accomplished banner, because the next thing you know, you turn around and you have a horrible labor report or something, and the lag effects of 500 basis points might be.
Okay, so it's entirely possible, as you said, we get into the next year and we're in recessionary conditions.
How do you analyze this election then, and the two candidates and their economic policies, and how it deals with, to the degree you think you care about people that are struggling at the bottom of this wage issue?
And we understand you're a long-time Democrat, but
I'm a long-time Democrat. That's right, but I'm a moderate Democrat. For instance, I was just talking to someone yesterday. I would like to have seen my friend Mitt Romney be president in 2016. I hear a lot of 16.
I thought you meant 2012.
16. It was his turn in 16.
2012. That would have been a much better time for him to be president.
Much better friend Barack Obama was going to win that election. And the people around town here say very good things about Nikki Haley, and I've got my eye on her. But right now we have a choice, right? It's no longer theoretical. It's a binary choice between Trump and Harris. And obviously, I think for a whole host of issues, I prefer Harris. On the economic side, there are a whole bunch of issues other than economics where I think I would prefer her around abortion, healthcare, immigration, climate change, those sort of issues. Right. We can come back to those later. But on the economics, I think the first place to start is the place where I just mentioned earlier, which is the independence of the Fed. She's very clearly supporting the independence of the Fed. Trump is not. I think that's a very big deal. On tariffs, I think that tariffs are a very bad idea. They are regressive tax. They hurt the people, the grass that the elephants are dancing on. It's a regressive tax on consumption. It's inflationary.
What do you think about the tariffs that we currently have in place right now?
I would personally like to find a way to roll them back. I think tariffs should be used surgically and very infrequently.
You haven't heard Harris say that she plans to roll them back.
I'm saying I would prefer to, but she's also not saying she wants to increase in tariffs that Trump does. I mean, it's a choice.
Would you get rid of the filibuster?
I do policy, not politics.
Now you do politics. Okay. When the questions get tough, then you don't do.
No, I'm not licensed. I'm not licensed.
Would you think we should raise the corporate tax rate?
It's interesting. So I came on this show when Trump cut taxes, and I had written an article, and I also told you I opposed it because
the sugar high.
I called it sugar high, but I also said we were stimulating into an economy that didn't need stimulus.
Did you say that? Wasn't Biden did it or no?
No, we didn't. I said I just said on the stimulus policy that it was probably too much. So I did just said it now on the show, right?
A little bit.
Okay. My gold standard, Joe, for fiscal policy.
Yeah.
Is the Clinton administration, when we had a fiscal stance that balanced the budget, that saw good economic growth,
Newt Gingrich
that
is
saw
retired.
low inflation.
Newt's retired.
I know, and saw record markets. And so I think anything that's within the boundaries of that stance makes a lot of sense to me. And that had considerably higher tax rates than we have today, and it worked. I'm not advocating any individual tax levels, but I think that we should find a way to.
We're running a $2 trillion deficit this year.
Just where I was going.
Yeah.
Just where I was going.
Right.
So, Becky, you're looking at me.
No, go ahead.
Okay. So I have a
We're all looking at you.
diet. I have a diet that works every time, 100% of the time, which is eat less and exercise more. And so I think we need to spend less and tax more. And that, I think, is going to be the issue of our era. And as I look at the kind of tax policies and spending policies and the philosophy behind them that have been proposed by the Trump and Harris campaigns, I come down on the side of the Harris campaigns because I think they emphasize fairness around taxes, not tilting toward wealthy individuals and corporations, but small business, middle class, and families. And she also makes some attempt to score to pay for her spending.
I can't
And
wait to get
fiscal
3%. I
discipline.
can't wait to get 3% of your net worth every year.
But we can come back to that.
Wait for that.
We can come back to that.
You're gonna love how
That's a chimera that one needs
You're
not
gonna
worry
love
about.
that. That's
No,
gonna
but
feel
we can come
so
back to
good.
that if you like, Joe, because I've studied that issue.
Glenn,
Becky.
they're wrapping us, but before we go, I do want to ask you about tonight, the award ceremony at the Hutchinson
thank you.
WEB Du Bois. What do
Right.
these awards honor?
So the award is fun. So my dear friend Henry Louis Gates, otherwise known as Skip Gates, and I will be having an event tonight in Cambridge, Harvard, to present the W.E.B. Du Bois Medal to people who made extraordinary contributions to African American history, culture, and philanthropy. And it's something we do every year. That we had a little bit of a pandemic hiatus. We're glad to be back. We have LeVar Burton tonight, from Kunta Kinte to Star Trek to Reading Rainbow. We've got Strive Masiyiwa is a businessman you should know, a very successful African businessman who paid for the distribution of vaccines around Africa during the COVID crisis. New York's own Thelma Golden. I don't know if you guys know Thelma, the director of the Studio Museum in Harlem, one of the great art curators in New York City, about to finish building a brand new Studio Museum under the leadership of my dear friend Ray McGuire. And Kathy Delaney Smith, who is the longtime Harvard women's basketball coach, who's nearly 700 wins, makes her one of the winningest basketball coaches, men and women, in NCAA history. She's going to be introduced by one of her former star players, Maura Healey, the governor of Massachusetts. So that'll be fun. Please come. It's going to be live streamed on our YouTube channel.
Glenn, I want to thank you.
Maybe next year on CNBC.
Oh, excellent. And by the way, would love to have you back to talk about the wealth taxes, too.
Okay, only if I can bring the ring.
Yes, 3
Okay.
weeks.
Bring the ring,
all right, and we'll talk about
I'll be back in 3 weeks.
Glenn Hutchins.
Well,
All right,
it's our
thank
current
you.
interest.
Okay, you got it.
Okay,
Yeah, there you
you
go.
got a deal. Coming up, we're going to speak with Senator John Thune, the minority whip, about the race to control Congress's upper chamber. We'll see whether they're going to get divided government or not. Stay tuned. You're watching Squawk, and this is CNBC. Squawk Box breaking news on the East Coast port strike. Frank Howland joins us right now. Frank.
Well, Andrew, I just got a chance to speak to the ILA president, Harold Daggett, just moments ago. He gave me the numbers when it comes to the pay increase that the union is seeking. He says that number is approximately 61.5%. Remember yesterday, the USMX, the port operators, they issued a statement saying they offered the union a nearly 50% pay increase in addition to additional contributions to healthcare and retirement, as well as maintaining the same language when it comes to automation and semi-automation. So it appears that pay still continues to be the divide when it comes to this. Again, the ILA union saying 61.5%. That's the pay increase they are seeking. USMX saying they offered a nearly 50% pay increase. We will continue to follow this story from here at the Port of New York, New Jersey. Back over to you.
Okay. Thank you, Frank. Appreciate it.
Our next guest is here to weigh in on the state of the race for the White House and the Senate. Taxes, if there was another Trump, or if there's a Harris administration, and more. Joining us is GOP Senator John Thune of South Dakota, the minority whip. Senator, it's good to see you.
Good morning, Joe.
We have people on quite a bit that are counting on gridlock. So I think that means that there is an assumption that the GOP is at least going to control the Senate. The House is up in the air, or possibly even leaning Democrat. Is that how you see it?
Well, a lot of it depends on the top of the ticket. You know, the House in particular correlates pretty closely to what how the presidential race performs. But we feel really good about where we are in the Senate, and I think the Senate is the quintessential check and balance in our democracy, and represents an insurance policy for people who are looking at what might happen in the House or in the presidential race. If we win them all, obviously, we're in a position to do some things from a governing standpoint that we need to get done.
If the Democrats win them all, they're in a position to
They are indeed, and
they're on the record for the filibuster's gone.
Yeah, and that's a big concern. That not only changes the essence of the Senate, but it changes the country. And the Democrats have made it very plain that they will get rid of the filibuster. And then the list of horribles of things they would do if they did that should be of concern to people all across the country.
Even Joe Manchin, I think, pulled his or did not endorse Vice President Harris because of those issues.
Yeah.
So which races would you highlight in the Senate that the Republicans had? How about, for example, Pennsylvania?
Well, Pennsylvania is a great example of just a very close, dead even race. We have a terrific candidate there who's run a great campaign. We feel optimistic about that one. Obviously, again, it has, we would need to see President Trump perform well at the top of the ticket in order to help our down ballot races, and Pennsylvania is a good example of that. But Dave McCormick has run an outstanding campaign, and we feel good about that one. I mean, obviously, you've got the states like West Virginia, Montana, Ohio, where we have a sort of a clear voter advantage, because Trump's going to win those states, we think, pretty handily.
You think Ohio is you think Brown's in trouble?
Well, I do. I mean, I think at some point political gravity catches up with you. And again, we have a great candidate who now in the fall, the weight of the advertising is shifting back in his favor. All summer, our candidate was taking a lot of incoming fire, but now that race is, we're kind of at parity on the airwaves, it's starting to tighten up, and we think we've got a really good chance of winning there.
I've always wondered about internal polling versus external polling. Sometimes they're not even close. Do you have internal polling on all these races? It's different than that. How does that work? Is it better?
Well, I think it's more accurate. I mean, obviously, your polling as a candidate is consistent over time. You use the same pollster, same methodology, same screen in terms of how which voters you're trying to reach and to acquire information. So I would rely more on that research. I think the public polls vary depending on the pollster and how they approach it, what their methodology is. So you have to take that with a grain of salt. But if you're a candidate trying to make decisions about where to allocate resources, you trust your internal polling, and you're doing that at this point in the campaign. You're polling every night, so you have a 3-day rolling average that gives you, I think, a clear sort of view into what the voters are thinking.
You don't have a crystal ball, and I don't know. These are going to be just your opinions, but we got 35 days, whatever it is. What are the wild cards between now and then? What do you expect? What does former President Trump need to do? What does Vice President Harris need to do? Tonight there's a debate between the vice presidential candidates. What do you expect to see? Is it important?
Well, I think it is. Obviously a lot of people will be paying attention to it, and I think that what we need to do is we've got to prosecute the issue set. The issue set is very favorable to us because that's inflation, that's a broken, open southern border, that's global instability. I think that the Democrats have to own those issues, and certainly tonight, Tim Walz, as his, representing the Biden-Harris administration, will have to answer, I think, some very hard questions about that. The Democrats obviously are going to want to shift and pivot to other issues that don't involve having to defend their record on 20% increase in groceries and 40% increase in energy, which I think is hitting the pocketbooks of a lot of Americans, and that in most cases is the issue on which Americans vote. So if the Republican candidates, the president and the vice presidential candidates on our side can prosecute that case over the course of the next 35 days, I think we have a really good chance of winning. If the Democrats can divert and distract away from that, that's obviously going to be their plan.
Do you think that, I think perhaps tonight we see some pretty effective prosecution of that case from Senator Vance. We'll see. I don't know, the moderators there might be a few abortion questions, I would think. Yeah, and probably some cat lady questions. What is it, CBS? Which is it?
I don't know.
I think it's CBS. I think it's Margaret Brennan. It's Margaret Brennan and Nora O'Donnell.
Yeah.
Yeah. So we'll see. Can't be worse. Couldn't be worse than the last. But what can Trump stick to the message? I guess that's where my question was. Can former President Trump prosecute that case? I think J.D. Vance will prosecute it very effectively, but President Trump does seem to get bogged down in some, I don't know, retribution or things that happened in the past, the last election. I think he's got a case to make that sometimes it's hard to get through all the other stuff.
Well, he has a case to make. J.D. Vance will make it very well tonight, as you point out. And whether or not the moderators, obviously they're going to try and hit him on issues where they think he'll be on defense, but he will be very effective. He is articulate, he is smart, he understands what's at stake in this election and how to talk about the issues in a way that resonates with voters. The president needs to do the same thing, and that requires a certain amount of discipline because it's easy to as they throw shiny objects out there, the Democrats that is, to get off subject. But if he stays focused, disciplined, on message, I think this is going to be it's going to be a clear choice for people. And I've always maintained elections are about differences, and the choices this time around couldn't be more clear when it comes to the economy, when it comes to the border, when it comes to national security. Voters are going to have a very clear choice about the future they want, the direction they want to see the country headed.
Senator Thune, thank you.
Thanks, Joe. Good to be with you. Okay. Thank you.
Thanks.
When we come back, crypto bull Mike Novogratz will join us on the markets. But next, Charles Schwab's CEO announcing that he will retire at the end of the year. He'll be joining us along with the firm's current president, who is stepping into that top job. Squawk Box will be right back. Welcome back, everybody. Charles Schwab just announcing this morning that the CEO, Walt Bettinger, is going to be retiring from that role at the end of the year. That comes after 16 years leading Schwab. The current president, Rick Wurster, is going to be taking over. Walt and Rick both join us this morning right here on set. And gentlemen, welcome. This is a big day for both of you. Walt, first of all, congratulations with what you have done with this company. I think it's worthy of sitting back and kind of taking note of this. You stepped into the company in 2008 in the midst of a financial crisis. Not the best time to be stepping in, but what happened along the way? It's been phenomenal to see the rise of Schwab over these last 16 years.
Well, thanks, Becky, and thanks for the opportunity to be here. I often say that not many CEOs have their company's stock price in their first 90 days, but that was pretty much what I walked into in the financial crisis. But really extraordinary work by tens of thousands of Schwabies over these 16 years. Great honor to see our client base grow from 7 million to over 40 million, and of course clients entrusting us with now almost $10 trillion. It's been a wonderful time as CEO, and I'm incredibly excited now to turn it over to a talented executive with great integrity in Rick Wurster.
Yeah, Rick, you have been the presumed next CEO for, I guess, the last several years since you were named president. You have been through a number of different positions here. The company is coming into probably another transition, at least that's the read from the outside. Walt's made a number of changes since 2008. What do you see the next transition for the company being?
Well, the transition, I don't think there will be a transition in the sense that we're going to continue what we've been doing, which is deliver our clients and delight them. As Walt mentioned earlier, we've got over 40 million clients and $10 trillion of assets. And behind every one of those dollars is a client that means a lot to us. It's a farmer in Iowa that's farmed for 40 years to try and retire. It's a grandmother that's saved to be able to take a visit to see their grandchild. And every one of those clients is dear to us, and we're going to continue doing what we've done for the last 50 years, which is stand beside them and deliver for them and help them in their financial life.
I should run through that, Walt, just in terms of almost $10 trillion in assets under management at this point. That comes from $1 trillion when you stepped in 2008. 43 million clients, that comes from 9 million clients. A huge buildup in terms of building out the brokerage. Already the biggest publicly traded brokerages. You're now the 12th largest bank. And you are somebody who was an entrepreneur before this happened. At 22, you started your own retirement firm, a Hampton company, and that was something that Charles Schwab really loved, your entrepreneurial spirit. You're not even 65 yet. Why are you retiring now?
Well, I think it's a combination of personal and professional issues. So I'd always targeted 2025 as a time to retire. I'll be turning 65. My wife and I's youngest daughter, our 5th child, just went off to college 6 weeks ago, so we're empty nesters, so that seems like a new chapter. From a professional side, we wrapped up the integration of Ameritrade early this past summer, and it was really important to me to be here through that integration, to see that through, from negotiating the deal, working it to approval with regulators, and then through the very successful integration. And then, maybe most importantly, again, bring it back to Rick, having an executive like Rick who's ready to step into this role, who's tested, who's proven, someone that I have incredible confidence in. And I just look forward to supporting him in my new role as executive chair and co-executive chair along with Chuck.
Yeah, you're not going anywhere.
I'm not disappearing, but the role is changing. I go from day-to-day responsibilities and a lot of decision making to supporting a decision maker in Rick, and that's exciting to me, and I know it's exciting for our team here at Schwab.
Rick, what has the Fed lowering interest rates meant for the company? Because the stock is down 6% over the year to date. It's up 20% over the last year. But there have been questions about how you make easy money at this point. Before, it was from being able to take the client's assets that were there and bank on some of those things. How does the new rate regime change things for you? What do you do?
Well, the biggest benefit of the rate change recently and the lowering of interest rates has sent markets up, and that's good for our clients. We're in business to support them and help them get to where they want to be in their financial journey. As it relates to interest rates for our company, we've done well in low interest rate environments and in higher interest rate environments. What's key to us is making sure we serve the client and we thrive doing so.
Wealth management has been a big push for the company, though. That's different than the original just brokerage days. You guys upended brokerage or the brokerage business by going to no fee with a lot of these things. How do you make your money?
Well, wealth is a big business for us, and we're seeing record flows into wealth. There is a bull market for advice. More and more clients we find want our help and guidance. They want someone to assist them thinking through how they're going to get to where they want to be in their financial journey. And we think we're a great place to provide that. And we also support 15,000 independent advisors who are also acting as a fiduciary in providing advice. Whether it's an independent advisor or it's us, there's a bull market for advice in our country.
How do you plan to grow that business from here? Is it organically? Is it through acquisitions?
We've grown it organically, and we're going to continue to grow it organically. We have 15 million retail clients that we serve that turn to us for advice. And so there's a group of people that we will look to continue to serve and grow our business with them.
The markets have been higher, volatility goes up. What does that mean for you all?
What does it mean for
you all, just when volatility goes up with the brokerage business and with your clients?
Well, we've seen a lot of trading activity. Our trading activity has been roughly 6 million trades a day, which is a high level for a firm. And so our clients are engaged, and it has been a bull market. And so for us, it's engagement. It's helping make sure we provide research and insights to our clients so that they're making the most informed investing decisions that they can make.
If I was looking at a pie chart of your business, what percentage are active traders, where people are actively on the platform, constantly moving things around, versus holding? Just goes to the volatility question.
Right. It's a relatively small percentage of our client base that is actively trading, but they are some of our sort of more revenue-generating clients.
Okay, the biggest revenue generators.
Well,
or just on a percentage basis?
Yeah.
On a relative basis?
Yes, on a relative basis, they are bigger revenue generators. They tend to bring more net new assets to the firm.
Right.
They have higher revenue for each client asset because they're actively trading more. But as a percentage of our overall client base, they're still relatively small.
I think one of the misnomers is that someone who's an active trader is exclusively an active trader, when in reality our active traders are also the segment of our client base who's most apt to sign up for wealth advice and management from us. When we introduce quality additional products like American Express card at Schwab, our active traders are the ones who are most apt to sign up for that. So our active traders are just very engaged investors. They're not the kind of person you might think of who's sitting behind a desk in front of 12 screens every day and all they're doing is trading. They're really active and they're investors who are active in all of their behavior.
And how much is your customer base playing like in crypto and in a way, for example? And I ask because obviously Robinhood and some of the other platforms which maybe cater to a younger audience are become very crypto oriented. How do you guys see that? And maybe now they're playing through ETFs.
The first thing I would do is dispel the notion that we're not a place for young investors.
Okay.
60% of our new-to-firm households in the past year have been from clients under the age of 40. In fact, our client base gets younger every year. So we are engaged with the young investors, and some of them do like crypto, and we've got a number of ways that they can participate in crypto at Schwab. I do think the interest in crypto among our clients and more broadly among retail investors has declined a decent amount in the past couple of years.
Really?
I think there's been some regulatory barriers to us offering direct crypto trading. But if those barriers loosen up a bit at some point in the future, I think you should expect to see Schwab innovate in that space. The spreads are extremely wide. It's not necessarily a great way for investors to get efficient buying and selling of crypto. So if the door's open, I would expect us to be there.
Great. Well, Rick, I want to thank both of you for being with us today. Some big news on the company, and we appreciate your joining us.
Thanks for having us on.
Good golf support from you guys too. That traces back to Chuck, I think, some of it anyway. Right?
Chuck is a big golfer and a good golfer still at the age of 87.
Weren't you the golf captain on your?
I was a golf captain at Villanova. Yes.
You've been to he's got a pretty nice house out there too.
Pebble?
Yeah.
He does have a nice house.
Maybe the nicest. I always look at
Are you a golfer?
What's that?
Are you a golfer?
I'm a golfer. Did you say good? No. Just coming up, I get a lot of swings in when I play. A lot of. We'll talk markets, crypto, the election, and much more with Galaxy's Mike Novogratz. Stay tuned. You're watching Squawk Box on CNBC.
courses.
Welcome back to Squawk Box. Bitcoin gaining 8.5% last month, doing much better than the major stock indexes. Joining us right now in an exclusive interview, Galaxy founder and CEO Mike Novogratz. The move has been made. The question, of course, is was it made, or is there more to the making, Mike? And I think that's what everybody's trying to understand, given where the Fed is and everything else, and how interconnected you think these things really are.
Yeah, listen, the Fed is going to keep moving rates lower. How fast they do, we'll see. I think Chairman Powell was pretty straightforward yesterday. You know, the data's going to matter. I think he'd like to move rates faster, lower faster, but he's not going to be a kamikaze. And so right now you're pricing at about 33 basis points for each of the next meetings. That's probably fair, and we'll see with payroll and a few other big data points.
So what do you think each basis point or even quarter point reduction means to the price of Bitcoin if you think that they actually move in tandem?
Listen, I think almost more importantly than what the U.S. is doing is what China just did, right? We've got now the two biggest economies in the world, cutting rates and pumping liquidity into the system. And at the same time, we're going to have an election, and either candidate wins, we're going to have a lot more regulatory clarity. And it was really interesting what Walt Bettinger said. He said, well, if we had regulatory clarity, then Schwab would probably be much bigger in crypto. At least that's the way I heard him. I think there are scores of TradeFi companies and large ones with the exact same idea. And I'm really confident that a year from now, we will have regulatory clarity.
Under whomever is in charge?
Yes. I spent a lot of time speaking to people around the Harris campaign. The one thing that comes clear is this is going to be a first-term presidency, not a second Biden term. And that means different personnel, different policies. They're going to shift away from the Elizabeth Warren faction, which really, I think most Democrats realized it was a fool's errand. Like, why are you standing in the way of a technology that's important? You think about what the important technology is coming. AI is certainly the most important, but blockchain is right there, right. Robotics. And so
you've been publicly supporting Democrats for a very long time, but there has been a real move, obviously, within the crypto space to support former President Trump. Do you see that changing over this issue of crypto the way you now see it?
Listen, it's 33 days to the election. I think most people have made their choice up, and I think this is going to be who gets the vote. To me, I think it's a 50-50 call right now on who's going to win, and you're going to see it all in 7 states, 42 counties, and about 100,000 votes. It's a crazy way to elect a president. I do think, though, going forward, both the House and the Senate and whoever's in the executive side is going to be pro-crypto. I spent a lot of time with different congressmen and senators. I'm seeing one today on the Republican side, and they all kind of get it now. This is an important technology for America. And
when you say pro-crypto, though, what does that mean? I mean, look, there's Bitcoin and there's Ether. Then I'm looking at Solana. There's Ripple below it. What else are we talking about?
I think it's relatively simple what DC has to do. They have to pass a market infrastructure bill that's not too suffocating, right? Tell us where we're regulated. One reason we don't have a lot of apps on top of these blockchains is that companies are scared to build. Real companies are scared to build apps on top of blockchains because they're not sure if they're going to get arrested for issuing a token or not. And so once there's clarity, you'll see a lot more innovation on blockchains. And so it's a market infrastructure bill, a stablecoin bill, and it's a direction to the OCC to let TradeFi companies hold crypto on their balance sheets. Those 3 things, and I'll stop going to Washington as the whole crypto.
What are you hearing as it relates to the ETFs and how big the inroads have been? Obviously, there was a big move afoot when this first happened, but it's quieted down materially since then. I'm trying to understand what's happened, because I think part of the expectation was that all these advisors were all of a sudden going to be out there marketing this stuff, and it was going to shift the balance.
That's a slower process than I think the market anticipated, right? Like, a lot of these big platforms are just starting a month ago, starting this month, starting next month. And so I think this will be ongoing play over the years, not over the months. And I just think the more different ways you give access, the next big jolt to Bitcoin is going to be when we have options that trade on the ETFs. The SEC said they're coming. I don't know if it's in 3 weeks or a month, but we will have
And what do
options.
you think that jolt is worth?
You know, if you look at MicroStrategy as the one place right now you can get leverage on Bitcoin as a retail investor, it trades at more than 2.3 times the value of the Bitcoin it has, mostly because of the options. It is the single, often most weeks, it's the single largest, option stock in the whole market. And that tells me something, that there's a whole bunch of young guys on Robinhood that want to play crypto and want to do it with leverage. And
What do you
this
think
is-
happens, by the way, to MicroStrategy if in fact that options become available?
You know, we'll see. We'll see. Michael Saylor has got a almost Elon Musk-like hold on a lot of people. They believe in him. It seems to be a stock that's very expensive relative to the Bitcoin it owns, but fighting Elon Musk when he was hot was a hard thing to do, and I'm sure people think the same thing with Saylor.
Mike Novogratz, great to see you this morning. Thank you. We'll talk to you soon.
You will.
We're coming right back here on Squawk Box in just a moment.
Your name again?
Let's get a final check on the markets, and now the Nasdaq has actually turned into red, just barely down about 5 points. First trading day of October has the Dow indicated down about 147 points. S&P down 7. Take a quick look at the Treasuries, 374 now on the 10-year. Got a big number on Friday, and we should know a lot more for the jobs report. We have a big, I don't know, Have we cared about vice presidential debates in the past?
It'll be interesting.
It's the last debate, probably.
Especially if it's the last.
Yeah.
Especially if it is the last one. We'll be watching the moderators too. Make sure you join us tomorrow. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. We kick off the month of October after 4 straight quarters higher for the S&P, longest streak in 3 years. Plenty of macro to watch today and an East Coast port strike. Romet begins with a new market month. The Dow and the S&P heading into October at record closing highs.
With that in mind, Fed Chair Powell indicates there could be gradual interest rate cuts by the end of this year. Also ahead, tens of thousands of dock workers are on strike at East and Gulf Coast ports. We are going to explore exactly what will be at stake for the economy.
Markets are set to kick off a new month and quarter of trading at the open. S&P hitting its 4th positive quarter in a row and another record close as investors look ahead to this last stretch of the year. The Fed chair yesterday spelling out the direction of rate cuts.
This is not a committee that feels like it's in a hurry to cut rates quickly. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
He pointed out, Jim, the tension between some of the growth data on GDP and income versus labor.
Right, and it just crushed the market. In the old market, the market that people seem to think we're in, that'd be it. But I was working on an interview and I came back, working from 3:30 to 4. I said, geez, what happened? Nothing. People just said this is a buying opportunity. Larry Fink came out from BlackRock with some great comments about how let's get rid of the soft landing, hard landing. It's just doing exactly what we want, which is it's slowing down. There's no inflation. David, when I look at the list of the companies that did the best in September, it's about as broad as I've ever seen. It's textbook. So, I mean, unless it's hard to find. It's no flies in the window.
So all good. Coast is clear.
No, yeah. Well, I mean, you do that. That was not. It was more historical than it was
A forward-looking
right,
statement.
but I'm just saying when I look at it.
But things, all right, but your point is, I mean, Larry Fink saying things about the economy that are shared by others, which is basically we're not having a landing, we're good.
Right.
And to your point, there has been this broadening out that we have talked about as a sort of a necessary component of a stronger market.
It's what we've always been saying. So then when you have Erie Indemnity, which I know you talked lovingly about yesterday, GE Vernova, Palantir, that's a meme stock. Builder's First
You
Source.
don't like when you say it's a meme stock. Some guy in the gym yesterday was like, Jim Cramer says it's a meme stock.
I bumped into the CFO when I was out in San Francisco. And he basically implied that I've been not that complimentary. And I totally agree.
Is that fair?
What am I supposed to know? That's not
I don't want
right.
to stop us on Palantir, but is it really a meme stock?
It is a meme. It's a very individual. It's owned by a lot of individuals who are very excited by Alex Karp. I think Alex Karp is regarded as a bad boy.
Yes.
Maybe the Pete Rose of this generation.
Yeah, a lot of people thinking of Rose today.
I loved Rose.
I don't want to stop you from your broadening
Right.
discussion. So if
No,
there's
'cause
anything
then
you think is salient that's worth resuming here, go ahead.
So you have companies like D.R. Horton, okay, a home builder, and then you have 3M, you have Axon, which is body camera. I mean, look at these things. And PayPal's been really terrific. That you pointed
about
out
it yesterday on the
Jacobs
NASDAQ.
Solutions, they did that incredible split off, which everybody seems to like. Tesla, of course. BXP, a REIT. Iron Mountain, a REIT. Pulte Group, another home builder. Fair Isaac, just one of the best fintech.
So there's
companies in
been
the
a
world.
real broadening, and these are all strong performers in this market of late.
Stanley Black & Decker. I mean, nobody.
All right,
thinks they
so
did
it
that
comes
well.
back to the question that you raised, which is, okay, past performance is no indication of future.
Right, but I'm just saying that going into the quarter, here's what everybody said. Oh my God, it's just going to be NVIDIA again. It's going to be Amazon again, Microsoft, which of course is underperformed. And this list is the kind of list where if you're a retail investor at home, you say, you know what? This isn't just those 7 stocks. I get to be in something. Yeah, by the way, the best one of the 7 is not a 7, which is Netflix. Good comment today. But I just look at these, David, and I say, you know what? Wow, this market is no longer that narrow market that people didn't like. And I think, Carl, if we don't mention this, then what we're doing is we're robbing people of the idea that we only say negatives. Because going in, I really did think it was going to be another Nvidia quarter. I feared there'd be just Amazon. Now, Amazon did bounce right back. I mean, but I just think this is what we live for.
Right, we mentioned yesterday, 2/3 of the S&P outperformed the broader index in the quarter. 3M, the best Dow name of the quarter.
That's fantastic.
Today, B of A ups materials to overweight.
That was incredible. I mean, that was incredible. And we could sit here and focus on the fact that Apple was downgraded. Apple's like a football stock. The numbers are good, the numbers are bad. Or we just say, you know what? Have you guys had a hard look at Mohawk Industries? That's a good carpet company. CBRE Real Estate, David. CBRE. Vistra. Well, I mean, like anything that's power.
Vistra has been a particular part, a narrative of the market that we've discussed many times. That continues, by the way. Big report as well.
Well, but
even
that's
today
that's
about
data centers
in Texas.
You know, Cummins is data center
from Morgan Stanley.
That was a
talking
great
about
piece.
Vistra as well.
I just think that if you're, I mean, remember the late Byron Wheat, whom I loved, and you know, in the '80s, we'd have dinner at his house, and I would suggest, well, maybe it's time to buy, and there'd be some stock that was like, what the hell is Kramer talking about? And the answer was like, I needed this kind of market to make it happen. Although I did have Intel in '90.
There you go. Intel.
And then I took it off the list.
You took it off the list?
The Intel list. Yeah, I took it off.
When?
At the high.
Nice.
Thank you.
Congratulations.
Thank you very much.
Great trade.
Well done.
Great
You've
trade.
been rightly negative.
Great
You've been
30-year-old trade.
You've been just brutal.
Well, and
negative.
you know, remember when you used to make fun of me every morning at Boeing? Well, why don't you try it now? Because let me tell you, Schadenfreude. You know Schadenfreude, I think it was 15th best.
I do. That was, that was Freud's cousin, Shadden.
Is it?
Yeah, he lived not far from him.
There's so many Freuds around. Like something the other day was like, I'm Freud. I said, oh God, you guys are trying to
There was Shadden, and there was another one. I forget his name.
How about Pinterest being the only stock of these big lists that we got today of the best performers coming up? The only one that was on 2. There was none that were on 3. But Pinterest is on 2. I think that that's the kind of thing that says to me, get on Pinterest.
2 what?
Well, there was these lists that came out today.
You mean
about
fourth quarter ideas?
Yes, and Pinterest was on 2 of them. So I mean, 2 out of 3 is not bad.
Yeah, we got a bunch of top ideas lists we'll get to in the morning.
There you go. We figured that one out. It took us a minute. Thank you, Jim.
No, look, we all look at these. We look at these lists, and we say to ourselves, "Well, wait a second. These are stocks that nobody's really heard of." I love that.
That's good.
Meantime, it's so exciting.
We do have the port strike to address. Approximately 50,000 ILA union longshoremen walking off the job at East Coast and Gulf Coast ports from New England to Texas after failing to reach an agreement with ports ownership on a new contract. This is the first strike for the union since '77. And this is the president of the longshoremen, Harold Daggett.
We're going to keep this thing going every day, in and out. We're going to be on the news. We're going to win this thing. Trust me. They can't survive too long, and we're going to get what the we deserve, believe me. God bless all of you for being here.
Some of these reported pay increase offers, Jim, are pretty stunning, 60+%.
This is a stranglehold, and from someone in the industry of shipping. Containers of wine and alcohol, eggnog, returned around yesterday, sent back to Cape Town. Strike. Won't make it for Christmas. 25 containers of wine from Argentina. Good shortages going to be in a lot of different places for food. French producers of high-end wine, listen up, David, and booze, talking about 747 cargo jets being hired and filled with goods because those will not have to deal with the port. Now, this is a very savvy source giving me. Now, you could say, well, can't we live without wine? I'm saying that this is a paradigm of what could happen because this is a really inflationary moment if you think about it, because the cheaper way to send things is not plain.
Although some argue that a lot of the goods that we would buy for holiday, electronics and so forth, come from China to West Coast, not East Coast.
Right. And, you know, East Coast is things from Europe, but we're not dependent on that much from Europe other than what the billionaire class is really focused on.
Then we're not overly concerned about that.
Well, no, you know what I mean. I mean, this is like, you know, someone can say, did Kramer really just say that wine is being hurt? I mean, what is he like doing?
Well, there's something in a lot. I mean, it's more than that. There's plenty. That said, I think Frank Collin has been covering this for us, that 80% of the goods needed for the holiday season have already arrived on our stores.
Well, September was always the month. I mean, I remember Macy's once filling me in that if they don't have everything by September 30, they're not going to have.
So many of those inventories are in place. But
what
the
do you think
longer
about
this goes on, the bigger the economic impact. We know that.
Well, how about the idea that the labor costs would be the first labor agreement that is totally out of whack, and it would be the type of thing that maybe even hit Pal Street? Possible?
Out of whack in the sense of just
Big.
such
They went so much more.
So yeah.
But the machinists won a lot of money at Boeing. Now, look, I'm not saying. I mean, when you look at the executives, they make so much more money. I don't want anyone to say, "Hold it, does Kramer know how much the CEO of Boeing did, who ran it to the ground?" But I do think that these are the kinds of agreements that are so much more than the others that we're seeing.
Yeah, well, the other issue in here is automated cranes and trucks.
Yes.
Workers trying to protect their jobs in the face of ongoing tech innovation.
Which, of course, figures prominently in a lot of the strikes, including the Hollywood writers that we dealt with as well some time back, and being replaced by AI, which obviously is a concern there.
Well, look, if you were talking to Jensen Huang, I mean, he could partner with anybody. He could do anything. And he could just say, look, we'll make robots.
He can't unload a ship, can he? Unload a cargo container?
That's what I'm saying. I saw machines, GTC, that were loading and unloading boxes, and one of the boxes fell on the machine. I didn't hear a peep. Wait, I'm just saying.
You didn't hear a peep?
Well, it didn't get hurt. The box fell right on the head of the robot, and the robot just brushed it off. Then I saw a robot trying to get open a box of Wheaties and couldn't do it. Pathetic.
How about this PwC holiday outlook saying that holiday spend is going to be up 7 this year, 7% year on year?
Well, Larry Fink's going to be right then. That's just an amazing number. Look, I think that what we're all wrestling with is we're cutting rates. People want 50 at a time when things are good. They're 7%, David. You could argue that that's a red hot economy.
That is very strong.
Right. The box fell right on the head of the robot.
The robot
and the
didn't say
robot
anything.
just brushed it off.
Right.
A human would have been like a catastrophe.
It's true.
He doesn't know a robot from a human.
I do.
Did I tell you about my ticket picture climbing in the trunk of the Waymo?
Yep.
And then the Waymo said, "Don't you think I
What
see
is
you
it
there?"
about robots? Do robots have dreams, or what's the name of that book?
Oh, do robots dream of electric sheets? Yeah,
yes.
Is that what robots
okay,
dream of?
yeah.
Blade Runner.
Is that what robots dream of?
I think so. Yes.
They need Freud.
Electric sheet. Which one?
Doesn't matter.
We'll take a break here. When we come back, the latest on CVS as it faces this activist pressure to turn things around. We'll get to some news on Boeing, as Jim points out. Got a downgrade of Disney, upgrade of Ford. Futures are red. Stay with us. CVS shares moving higher in the pre-market. The company board engaging advisors to conduct a strategic review of its business as it tries to fight off activist pressure and a falling stock price, down more than 30% over the last 2 years. We talked a bit about this yesterday, Jim.
Yeah, look, I think any board, this is my work on CVS, any board works with management to evaluate options and our strategy. Nothing new. Nothing new. We continue to believe in the potential of our integrated model and look forward to talking about it more with you in the future. This is someone, not attribution, but someone I think could say, David, that this is business as usual. I don't know. There's a lot of moving parts, CVS.
Well, listen, there are any number of investors who are frustrated. We reported yesterday on, of course, Glenview, one of those investors, meeting with management. As well, not focused, frankly, on a split of the company at all.
Right.
Much more focused on operational improvements, specifically on the healthcare side. Actually, that's sort of where, at least I've heard from a number of investors, the real frustration is, whether it's Medicare Advantage and the pricing of policies there, or was overpaying for Oak Street.
$10 billion for Oak.
Yeah, any number of things on that front. In fact, the retail business, despite what is not being a great business, is actually hitting, if not exceeding, many of the numbers. And the idea, guys, of splitting the company, I just wonder, and Jim, I'll ask you, like, all right, I got a pure play retail business in this. I look like Walgreens now. Why would I want to do that?
I know you loaded up with debt. Yeah. That's where the debt will go.
Why would I want to do that? And what sponsorship am I getting in the stock market from that?
That's why I'm suggesting that there's nothing big at work here, because they can't do that. David, I would say when they bought Signify for $8 billion and they bought Oak Street for $10 billion, even as those, and this is a primary care for Oak Street, and Signify was a clinicians, 50 states, nationwide value provider network. It actually seemed like a good idea. That you mentioned the real problem, Medicare Advantage pricing.
Yeah.
It was just so hard. So many companies screwed up.
Including Aetna.
Now,
course,
do you know, I mean, I know
CVS.
this sounds ridiculous, but one of the problems was that they screwed up on pickleball.
Right, so many injuries.
Yeah.
Yeah, people going in, and of course they are seniors, many of them.
I wish I were joking,
As well.
but it actually
No,
hurt
it's
pricing.
fine, no.
It hurt pricing.
It's amazing.
So I want to say, yes, we can dunk on Karen Lynch, and you can say she paid too much for Signify, which I think she did. You can say she paid too much for Oak Street, but that was the mandate when Merlot gave her the company.
Right,
Was
now
to
they do
move.
have these health clinics in, 1,000 stores? I mean, that is still a
Yes.
thing, and so what happened, I find it, listen, we sat here for years talking about shrink to grow and how many of these companies at one point are, we got to do this, and the next, we've got to become a pure play because we're going to get a higher multiple on whatever business we leave behind, and Rebane Co. Yeah, I get it all, and I'm sure if you're Goldman or Lazard and you're in there advising them, you're telling them the options, but it doesn't mean they're going to do it.
No, and I like the Signify Health when she did it because this was about it's going to serve. What it was they had partnered with 170 providers. You brought in new people. Look, it was the storefront. You had people go into CVS, Carl, and then people signed up for this stuff. And I'm not saying it didn't work. I'm saying that was the mandate. And so let's not throw her under the M104.
You know that bus line. It goes up Broadway. Yeah.
I always used to take the M104. It's like, in my heyday.
Where were you going?
Really, you were not in a hurry. Wherever you were going,
to see
you could walk faster.
To see someone special who's no longer in my life.
Sorry.
Or to see several people who are special who are not in my life.
time passes. It's true. We'll take a break here. We'll get Kramer's Mad Dash. Countdown to the opening bell. Take one more look at the pre-market as we get October underway. Don't go anywhere.
All right, let's get to a mad dash. We got a little more than 7 minutes before we get to an opening bell here at the New York Stock Exchange. Where are we headed?
There's better than feared, and then there's slightly better than feared, and then there's actually not bad. And I'm putting McCormick in the not bad category because initially I thought it was like better than feared. But I will tell you, Brendan Foley is getting this kind of monstrosity together. I say monstrosity just because there's so many things. I mean, they went into hot sauce, short-term impact, not doing that well. They went into, they have quick serve traffic, but mustard unit and volume share gains in America and Poland. Branded food service doing well. David, this is a company.
Good morning.
Tonight that everybody knows. Baltimore Zone.
MKC, huh?
Different things that are great. They put together a lot of different brands, by the way, that don't add weight. Mustard doesn't add weight. Hot sauce doesn't add weight.
Mustard does have weight.
I put on Frank's. I put Frank's on.
On what? On all sorts of stuff. It's on Frank's.
So it had a pop, huh?
You're hopeless.
Earnings.
I put Frank's on Palantir. Think Palantir.
Meme stocks?
No, what Alex Karp, the thing he said that made
Oh, it's up too much.
Never mind, let's move on. Okay, spices and seasonings, we're doing really well. But everyone in all of America understands what I was trying to say, except for you.
Anybody? Anybody here? No.
You're no soupy sales. But I do think that when...
No soupy sales.
The things that they're doing, I think Brendan Foley's got this thing in the right direction. Now I like the stock and I'd buy it. Okay. The 10-year's great. And David, I'm going to send you a case of Frank's, and you'll realize that you can put it on, you can put that stuff on anything.
Got it. I appreciate that. It's not.
No, it's done nothing. This guy is turning the company around.
Okay. All right.
That's what I'm saying to you.
Okay. God, so many things he says to me. So few of them, I understand. We got an opening bell coming up. Don't forget, you can catch us anytime, anywhere. Listen to and follow Squawk on the Street. Opening bell.
Okay, let me do one more thing. Get rid of my coffee cup. Have my banana. Sort my boys down here. Oh, they feel much better. All right. Today's sponsor is Chiquita Banana. Mike's put a lot of good information in the room this morning. Thank you, Mike. You're always here.
Thank you very much. That's really nice. Thank you.
Yes, you're always here to help us out. Very good information. I hope you read every word of it. I did. These strikers don't want automation. You know why? Because they can do about, they'd cut probably 75% of their workforce. Dials on top here, volume, video, we're adding Zim to our watch list. ZIM. Man, that banana I might have two.
CEOs have their company's stock price in their first 90 days.
Yeah.
But that was pretty much
Goodbye.
Schwab investing themes.
I got to where I can't really stand CNBC anymore. SPY, we got 3 supports on it. It's 5, well, I don't know. I kind of like the 571.78 a little bit more. If we don't hold this Darvis box that we made after hours and pre-market. Let's see, I got, just 1 minute left. Shit. I ain't going to be able to make a coffee. What's that? SPX. Okay. I had a real good time yesterday. One of my better days. Make sure your platforms are up. I always wait a little bit too late. And then my ding-a-ling went off. First thing we're going to look at, we had too big of a gap up here on the SPX already. So I'm going to clean this up. Slow. We're going to use that previous peak right here from yesterday for support. Now we'll see if we stop at the 63. There's a platform up here. Gotta get the other one up. God darn it. SPY October the 2nd. Apple's pulled back. Apple's had a pretty good pullback here. And it might have also had a pretty good run. So get ready for the SPX and the SPY. The 575 on the SPY. And then the SPX. Okay, get ready for the SPX. Today's the first. The 5765s or the 70s. The 70s might work better. We'll get two of those. Okay, we were just triggered. I'm going to move it up to the 65. No, I'm going to leave it at the 70. Oh, dang. We just had 210. Did I see 210? No, it's 310. 3 black crows. And I'm getting in at 360, 350. OCT. We have an OCT here. October 1st. Strike. Okay, we're almost to the 200. Here we go. Here we go. 330. My first entry. Tight stop on this baby. We're $2.90, $3. God. Savagely. But I'm a little bit too far out of the money with this now. So this might not last too much. And we're bearish because we're under the 200. They're trying to make a statement here. Yabba dabba do. I've got to look at Zim. Blanket. Ooh, 2 fate. Hold on. $255. Break it. Apple's dropping more. AMD's at support. We broke below support on Amazon, and Apple hit 226.60. I'm still in my SPX here. IWM's got it. Ooh, IWM looks good right now. Man, these all look good. All but the... That's one heck of a sell-off this morning. We're back to almost even here. The market might be pissed off because of what Powell said yesterday. I'm going to go in there and make me some jasmine tea here in a second. GME just now hit support, but I'm not trading. What about Nile? Nile 672 double bottom. We had a 666 low yesterday. So that's telling you something. Yeah, darn, man. Baba. Okay, we're retesting now. It's going to make up its mind what it's going to do. I want to buy another couple more here. But so far out of the money now. It'd be kind of a little risky. $295. I wish I can get back out under $250. I'd buy probably 5 there. Or 4. 4. $340 breakout. Give me a couple $100 for a beach trade. Make it 4. Break it. We got the 9. We got to break the 9 to become bullish. Spies double bottom here. There's my 250. Ooh. That's not nice. That's not nice. 235. I don't like being this far out of the money. I mean, it's a pretty good drop. Fire. A bit. 4. Oh yeah, I'm way out of the money. What the hell? I thought I almost bought something else on that ticket. Come real close. Yeah, that would have been nice. Is this thing getting down to 125 again today? It'd be way, way, way out of the money then. Come on, Bobo. Baba's moved up a little bit. Zim. Zim could drop more. I'm going to move these up to 357.60. We break the 9, we'll move a lot higher. 5760s are 340, 350, 330 right there. Come on. Might just sell these, get out of them. I expected a pullback, but the 5760s are at 330, 310 now. Just give it a little bit more time. Okay, I got one. One at 330. One at 330 right now. Put the sell on it. We're almost up $100. And if we break the 9 here, we can get to the 21. That'd be 57.19. Should grab another one right down there. October 1st. $394. Go, baby. Don't stop. Gonna be a hard day here. Still in it. Not one. We're squeezing between the 9 and the 21. Much we sell it here and it'll pop. I'll get $100. Oh, what happened there? That thing dropped to 290. Somebody got a secret gift out of that. There's 450. Come on, baby. A little more. Fuck. This thing's bouncing everywhere. I don't like that. Yeah, I don't like that at all. I don't like that candle at all. Okay, support's got to hold right here for it to stay bullish. Break it. $57.29 would be nice. We've got to break this 621 here. JD moved up. Market's been open 36 minutes. Damn it. Another 3 black crows. SMCI, what happened here? That ain't right. That ain't right, is it? Fuck, they get a split? Split is on deck. That ain't good. Not for that one. Damn it. Yes. Debating on getting another one. But I can't really right now. Apple's down $7. Tesla's down 8. The market's getting hit pretty big right here. We're at 155, 160 here on my call. Put an order in for 2 of them. I'll turn this on this here. I'm gonna look at some of these calls here. CCL down 79. Dell's down $4. For some reason, they're getting hit hard. Probably because of that shipping. Tesla went to 250. Arms down 411. Down 160 on this here call on the SPX, and I got out of the first one. Now I'm down 130. The 2750s are at $3. 5750s. SPY broke all three of my support levels. Boeing's green. XOM oil's up. Meta's up. Is this thing going to go down to 125? Been 45 minutes. There's 130. We hit 125. That's my magic number. Okay. Now it's time to make money.
you a bull?
Yeah, certainly, coming out and saying, upping the guidance and so forth. Good news out of China has somewhat been priced into the stock already here, given that rally we've had. Valuations also getting a little back towards stretch levels for Nike as well on a PE and price to sales basis. So really, they'd have to come out with up guidance, beat both the top and bottom line to a large degree, and saying things are looking really good going forward. I don't think we'll hear any of that, but if you do, I think you'll see, a quick and sudden up move. But the fact that, the stock really, I think, has already had a big rally off the lows here, kind of, dissipates any major upside, even on decent earnings-based news. So I don't
Bob
think
pulled
there are
back.
much, if any, upside fireworks here, just given the valuations and the move and the overbought technicals here. But as you know, trading is trading and anything can happen.
Trading is trading, and anything can
I
happen.
just want to get your quick thoughts on
You
the
got that
market
right.
as we kick off the fourth quarter on a pretty sour note now. The Dow's up 330, the NASDAQ off 1.7%.
Down, you
Russell
mean.
almost up 2% here. What are your thoughts as we begin the last quarter of the year here?
Yeah, absolutely. I think, obviously interest rates are going to continue to head lower, especially on the short end. The 10-year still, hovering above that 3.5% level, but valuations for stocks generally at historic extremes. If you look at
SPY.
the favorite price to sales on
What's
the
the SPY?
S&P 500, basically at 3 times price to sales. The only other time that happened was several years ago, which was right before a 20% or so pullback in stocks here. So I think it's going to be a little bit of tough sledding here. The leadership that we saw out of those kind of AI names you were talking about earlier has kind of, dissipated, to say the least, recently. So I look for more of a slog into year end here, and you're seeing some macro events that can certainly put further headwinds into any additional rallies.
Yeah, well, we're starting that slide today. Tim Bigham, option strategist, Buy Alerts. Thank you so much.
You bet. Anytime. Take care.
Have a good one. Coming up, John Heller, CEO of Momentum, is here, fresh off ringing the opening bell. We'll chat with him about
Go
Momentum.
get my water.
Stay with
I'll be
us
right back.
right after this.
I'm still in this in here. Break it. I got to get 199, 193. Break even. Personally, I think we could break it, but get 330 and 125.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what all this for?
Don't slow down yet.
Just the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like
So many choices.
full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere,
Come on,
on
bitch.
any device for free. Schwab Network.
Welcome back to Morning Trade Live. I'm Caroline Woods in for Oliver.
Hello, Caroline.
We began trading on the stock exchange yesterday under the ticker symbol AMTM. Joining us now is John Heller, CEO of Momentum, fresh off of ringing the opening bell. John, thanks so much for being here. Saw you on the podium. Congratulations.
Thank you, Caroline. So great to be here.
All right, so Momentum just completed its merger with Jacob Solutions, or a few business units there. Tell me about Momentum and how this deal changes your business.
Well, Momentum, we're an international government services business, but primarily supporting the U.S. government. And by combining with Jacobs, we create approximately a $14 billion company that is one of the largest and, I would say, strongest advanced engineering and technology companies in the industry, really focused on 5 key markets: energy and environment, space, intelligence, defense, and civil. So for us, it's now having end-to-end capabilities and an international footprint that makes us stronger and more capable to deliver services around the world.
Okay, so I'm here. I want to kind of drill down into the defense component, if you will, because obviously we're seeing the markets fall right now with geopolitical tensions rising in the Middle East, given potential Iran involvement in the Israel, Gaza, Lebanon situation. So tell me how you would be involved here, and just how rising geopolitical tensions has really changed your business, given all of your government contracts.
Our history is
So Iran's getting involved, huh?
Engineering, research and development, science, and bringing together technology to advance American capability, our close allies' capability for security, intelligence. And so if you think of a conflict around the world, say in Eastern Europe, Middle East, you use Momentum as a company that can help deliver capability to the warfighter as soon as possible. So we are able to get on the ground in a matter of days, work with technology companies to bring together capability. An example would be unmanned aerial vehicles. So our ability to integrate and actually operate unmanned aircraft could be a way to support conflict if necessary.
Okay, so what are the key growth drivers? Because I saw a total addressable market of $320 billion, expected to generate an estimated $14 billion of revenue in fiscal year 2025. So talk to me about the key growth drivers, the key growth opportunities across, defense, you mentioned intelligence, civilian space,
right.
Environment.
Yeah, no, there are several, but we'd see the first one is space. And what you're seeing recently in the last 5 years is a massive increase in launches to bring technology into space for defense and intelligence use. And Momentum is the leader for design of rocket capability, full life cycle rocket design. So increasing
Iran preparing for imminent missile attack against Israel
capability for rocket
2 hours ago.
The second is putting ISR capability, which is intelligence, surveillance, reconnaissance capability, in space. So those rockets are taking technology that is then used to improve our ability to see what's happening around the world, both for defense use, intelligence use, but also homeland security. And we are able to help design and develop those payloads and advance that. And then think of all the information that technology collects. You're really talking about the information age, where we have massive amounts of information. How do you sift through that? How do you build the systems that can make that information useful for the intelligence force, for the defense? And we help build those systems and operate those systems that deliver useful information to our customers.
Okay, we're dropping.
Do you work with the U.S. government, or do you work with the private sector at all?
Well, this is a really interesting part of the combination of Momentum and the Jacobs CMS and C&I businesses. Momentum traditionally was focused with the U.S. government. The Jacobs business brings tremendous footprint with some of our very close allies, which I think is really important to America as we think forward. Our allies are so critical in helping strengthen peace and security for America and our partners. We will now have over 5,000 employees in the United Kingdom supporting the UK government, over 1,000 employees in Australia supporting the Australian Ministry of Defence, and employees across Europe to different allies of ours and in the Asian region.
I think the key there is allies, right? So does the U.S. government have to approve who you can send workers to, which countries? How does that work?
Well, yes, you're getting close. Obviously, with our #1 customer being the American government, we're only going to do things that are positive to that relationship and support the U.S. government ultimately. And so our allies are really important to the American government, and that would be a smart way to expand our business, and probably an area we would limit our focus to key allies of the United States.
So what's the biggest challenge your business is facing right now?
Well, I think with everyone, it's having the right culture to attract the best talent. And I think as you bring these two historic companies together that have, a 100-year history, each has a unique culture, but both of our cultures are built around an engineering mindset, a problem-solving mindset, a focus on the customer mission. So I think that's something that is we're really going to be focused on to make sure that the employees of both companies feel really excited about what we're doing and that this is good for them looking forward, and so that everyone's focused and rowing the boat in the same direction.
And why now, in terms of actually going public under AMTM, your new ticker symbol? Why is now the right time?
Well, it was a great opportunity for us that we've always seen the Jacobs business as a very strong business in the marketplace. So we see each other in the market. Sometimes we might compete, but sometimes we partner, but nonetheless, a lot of respect for each other. And we saw the leadership that the Jacobs team had in space in particular, also in cybersecurity, and we saw those things as very beneficial and additive to the Amentum capabilities. So for us, it was an unbelievable opportunity that, no, we didn't plan for it. They decided to spin out. But we knew of the business and always thought that would be a great partnership with us.
And just quickly, you mentioned cybersecurity. Obviously, we're getting very close to the election. How important is that component, do you think, especially ahead of a U.S. election where we have seen kind of foreign interference in the past?
Yeah, and it's unprecedented, the amount of kind of the foreign entry into our systems every day here in the United States or around the world with our partners. And it takes a significant...
So it's got a brand new symbol up.
...to be on the watch for what's happening electronically in our systems. And Amentum has that capability, and I'm excited about strengthening that with the Jacobs business. But no, I think it's one of the biggest priorities and biggest growth areas with our customers is how do you secure your data? And we're using that data to create advantage, but if all that data
it's
gets
not
in the
looking
hands
good.
Of potential adversaries, then our advantage goes away. So it is absolutely one of the top priorities of our customers.
Is AI also a top priority, speaking of data?
Well, sure. I mean, AI, I think if you look at it from a government perspective, there's a desire to see the advantage of it, but also a desire to limit the opportunity for AI to reach data that you don't want it to reach.
Right.
So what we use it, we use it as a tool to enhance our solutions. And what we use it in a way that's called narrow AI, where we limit the scope of the data that the AI tool can see, so it still creates advantage, but in a smaller, limited tool set, so that we don't have the cybersecurity issues that could be created with AI.
All very interesting. We have to leave it there, but really appreciate you joining me here at the desk, and congratulations again. That's ticker symbol AMTM, Amentum. That's John Heller, CEO of Amentum. All right, coming up, it's time for the Chartmaster. We'll take a look at analyst upgrades for Datadog, Clorox, and AB InBev. That's next on Morning Trade Live. We'll be right back.
InBev.
Trading at Schwab is now powered by Ameritrade.
AMD new low.
Even more specialized trading support.
Apple new low, 224.
Schwab Trade Desk. Our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes.
80 cents to 125.
Few clicks.
Download the Schwab Network app.
I'm still in these other ones.
All the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm gonna make my tea and I'll be right back. I'm gonna try not to worry about this one yet.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Morning Trade Live. It's time for the chart master. Jenny Horn is back with us to walk us through the fundamentals, and Rick Ducat joins us.
SPX down 62 bucks.
Rick, great to have you both here. Jenny, let's start with you and start with Datadog. It's a loser today. Shares are off about 1% despite getting an upgrade over at D.A. Davidson. Fill us in on the analyst note.
Yeah, and Caroline, amazingly enough, because just like taking a first
D-Dog.
look at stocks, I would have never guessed that it was the worst performer on the year. But so many of these companies that have the cybersecurity exposure have been like the winners.
Tesla can drop to 244.30.
Over the last just several months. But today, D.A. Davidson did upgrade shares to buy from neutral.
D-Dog can hit 112.
Raised to 140 from 115. Now, mind you, the rest of the analyst coverage on this name, 146 roughly is about the average. So this puts it slightly below the average, but still would imply almost 30% upside from where we are currently trading. But they did say that the firm's proprietary developer data showed a strong positive inflection point now for Datadog, which gives them greater confidence of the overall trajectory of the demand. And overall, the firm has now greater confidence in Datadog's platform adoption play, as feedback from checks is now at this point suggesting that Datadog is gaining more traction, specifically within its SIEM product. So, I mean, Streets don't really very much likes this name. It's amazing to me to see how choppy it's been. We've actually seen like lower lows, continually not been able to take out previous highs, but there are still 36 buys and 6 holds and no outright bears in this name.
Okay, so no outright bears, a price target that implies, I think you said, what, 30-something% upside. Rick, what are you seeing in the chart?
Well, it's kind of a rough day for the broader market as a whole. We basically went straight down from the open here. Datadog not having the greatest day either here. We can see that for starters, we've got kind of an ascending triangle type pattern here between our upward sloping white trend line and this horizontal resistance near the red line here at 118. You can see this has been a repeated stopping point for price multiple times, and it's holding true once again today with a swift rejection here that is on pace to form a bearish engulfing candle. Today's big red candle swallowing up the real body of the previous day's smaller green candle. Real body meaning the distance from the open to the close. We're also at a pretty interesting point right now too. Notice that all our moving averages, our yellow 21-day, orange 63-day, purple 252-day exponential moving averages are clustered together right on top of each other, which speaks to a lack of clear trend direction and also gives us a notable supportive area between like 113.75 to about 115 or so. So a very, very important supportive area there. Looking at momentum, RSI trending upward here. You can see we made our way out of that oversold area. Now we are above the 50 midline, but only barely. And it's looking like that could change, especially if we start dropping through this support. So further support, if we do get through these moving averages.
Apple downgraded and Google upgraded?
Around 112. Then we've got our longer term blue channel here. That would come in near like 106. To the upside, if we break our ceiling near 118, 122 is our volume profile point of control, this thick red line. Then a double top type ceiling here near 134.
Definitely, when I saw it, I said, what?
All right, so Datadog currently trading down about 1.1%, trading just below 114. All right, Jenny, let's switch gears and talk about Clorox. It's actually a winner today, and Jefferies is turning bullish.
I'm getting up to resistance again on these stupid things. I'm down 200 on it.
This year. So the tone has shifted. I feel like in a lot of these staples that have been laggards in the beginning of this year, back half of the year has been more favorable for a lot of these types of companies. Up 2% today, like you mentioned, but Jefferies upgrading shares to buy from hold. Price target was raised to 180.
Clorox, I never had any good luck with that stock.
The company hasn't exactly been itself lately, but they see actually that changing. They also expect Clorox to return to its past.
I think I traded it 3 times and give up on it.
Economic growth and rerun on its capital. Overall, they said that history has been met with a 30% premium valuation to its peers. So they see now the company's sales, which is already improving, and operating leverage is in sight. So they acknowledge a lot of these headwinds that it has faced. So many of these staples this year, I mean, pricing has been the biggest concern, and say that could perhaps
Better go make my lunch.
I think that would be encouraging for all of us, especially those that are consumers.
I'd like to see this break.
So many of these products have just
What is that, the 63?
so costly. I definitely can say there's
We're at resistance now. I'm down 145.
Products, and you see how much more expensive they've become than, like, say, the name brands of wherever you're shopping. But this name actually is fairly less loved by the street. There's not a single strong buy. There are 3 buys, 14 holds, and 6 underperforms. So street's fairly muted on this name, or just maybe more sidelined if you took the average analyst conviction here.
All right, so Rick, Clorox shares up 2% today, up 17% almost year to date. Wall Street not too hot on this one, with the majority as generally.
I'm not too hot on it either.
What do the technicals tell you for Clorox?
Well, I'm a little surprised to hear that, because it's a pretty darn good chart, especially in the recent term here. So let's look at what we
Maybe it's too good, buddy.
See, earlier in the year, we hit our yearly lows, then we made our way up. We peaked out at this light green line near 159. Then we had a bit of a drop off here. Price languished for a while. No help from earnings in April.
I figure if Iran attacks Israel, it'll be a full-blown war.
A steep upward trend line here. We topped out near 169, then gave some of those gains back, a very short-term white trend line, replacing our steeply sloping upward blue trend line. So
that will not be good for the market.
That trend line here. But now,
after we give them billions,
gap up, we've also broken above that short-term white trend line. So our short-term downward action has been invalidated here. We are also pushing above this small volume.
I don't even know if Biden, if Trump can fix the problem now.
Also paints a somewhat jumbled picture here. You can see that we've been trending upward for a good while here. We've spent a lot of time in that overbought area, that threshold above 70.
I'm gonna break out.
As a sign of strength in a trending market.
So I need to get out of this stock right here.
Our trend lines have been broken here on the
Take my little
RSI,
loss.
leaving us with not as much of a clear picture. We are above the 50 midline, however, so it is more geared toward the bullish side. Folks in the control room, if you could click one chart to the right, I do want to assess where we might find some further resistance in this name here. If we were to keep moving upward above that 169 level, there's some ways we could explore using one of our study's standard deviation channels here, and you can see that would be the +2 channel, that orange line, comes in near 173.4. So if we take out those,
yeah, that does look like a good chart.
Stopping point. Now, if we look lower, we've got our 2 green lines, and just above that, we've got our +1 standard deviation channel right on top of our yellow 21 EMA. So like 159 to 162 could be a supportive zone.
All right, and finally, Jenny, the last name you're looking at is AB InBev, another winner today, up almost 1%, ticker symbol BUD, of course. This one got an upgrade as well. Fill us in.
I know, we are 3 for 3 with the upgrades and all upgrading to buy. So AB InBev City to see moving to buy from neutral with a price target of around €69.
Well, alcohol always does good when the market's bad.
Catalyst watch on the shares, but mentioned we are still seeing this weakness in the U.S.
And it's had a pop too.
Mexico market, which mean that
they're getting bad as CMC.
are actually now below consensus, and also they mentioned this ongoing now tight cost control in the U.S., meaning the company is on track to deliver its fiscal 2024 EBITDA growth below its 4 to 8% guidance range. So they mentioned, all in all, this would not exactly paint the picture of an upgrade, but they did say that with margin expansion set to continue into this new year and the scope for midterm margins to trend back towards their pre-COVID levels, the confidence in AB InBev's earnings deliverability is higher than their peers. They also think that management will announce a $1 billion buyback with their third quarter results released at the end of this month, providing a technical support to the stock in the coming months. So it's amazing to me for all of the negative PR and the backlash this company has faced that they ended actually their last fiscal year still being the best-selling beer brand in the U.S. I believe that is Bud Light. So they still do dominate beer sales, and their portfolio is so massive. I think it's very clear to see why, but a name that's modestly higher on the year. It's pulled back about 1% from its 52-week high, but definitely looking for a continuation of this recent momentum because we're about 30% now off of 52-week lows.
All right, so Rick, the median price target for Bud is $71 a share. It's currently trading up about 1%, as I said.
We're at a 3-year resistance on Bud.
A couple dollars upside from here. What are you seeing in the chart?
Yeah, 71 would be a nice move above those previous 52-week highs. So kind of a chart that's been a little bit stuck for most of this year. You can see
last year and the year before.
Earlier in the year. But then, broadly speaking, we kind of just moved sideways between a low point near 57 and a high point near 67 here. So that was our high that we made on the year, and we came quite close to that once again today. You can see that we had this white trend line traveling upward here with some notable stops along the way, some support and resistance to keep.
If we break to 63, we'll definitely go higher.
That crucial point here, and so far not able to
on
really
SPX.
that elevated level.
I'm kind of hopeful thinking here.
The mark to beat here. Overall, though, we're above our moving averages. We're having a nice steep.
And if we drop, this thing can get down to 25 cents.
Accelerating here. We had this green trend line on the RSI here, pointing upward. Brief stop in the overbought area here, but we lost our trend line, then quickly recaptured it. Tiny bit of bearish divergence here, though. We are not making new highs in the RSI as price is making a new relative high here.
I'm not going to fall for the Budweiser pump.
Price make a close above that level here and cross into that overbought area, hopefully here. So if we could click one to the right and take a look at our standard deviation channels, if we were to move to the upside, 69.22, that's the +2 channel, a little bit short even of our 71 price target. So there's some near-term road bumps to consider as well. To the downside, support at the +1 channel near 66, and then moving lower all the way back to our red line, 63.55 represents a repeated high point that we have now eclipsed.
All right, appreciate those levels. Anheuser-Busch currently up a little less than 1%, and yeah, only about 1% away from the highs. Rick, Jenny, thank you so much. Coming up, we'll discuss today's moves in the markets with our market meetup panel. That's next on Morning Trade Live. We'll be right back.
Doom, doom, doom. It's funny that Apple got downgraded. Yeah, this ain't looking good.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Morning Trade Live. It's market meetup time. Joining us now is Alex Coffey, the co-host of Next Gen Investing, and Dan Grant, senior specialist retail trading at Charles Schwab. Alex and Dan, so good to have you here with us to close out the show. Alex, let's start with you because we're coming off a strong month and a strong quarter and kicking off Q4 in October pretty deep in the red. The Dow off its earlier lows, but still down about 260. The NASDAQ off about 1.6%. The S&P off about 1%. Russell off about 1.6%. Energy stocks obviously doing well today, as are defense names, but otherwise seeing a lot of red arrows here. So talk to me about what's standing out to you, Alex, especially as those geopolitical tensions continue to rise.
Yeah, good morning, Caroline. I mean, when you look at this market today, you have to look at it in the context of what's driving it, which you mentioned, which is some of those geopolitical tensions, as well as how we closed yesterday. The end of the month brought that huge bid once again, which we saw, back in May. I think we saw it in June as well. We've seen it a couple times throughout this year, but those rallies aren't necessarily always super sustainable. Now you throw on there, some concerns around what's going on in the Middle East. It can, kind of add gas to what it was already a, kind of a smoldering flame, perhaps, for equity market volatility in terms of where we set up. That being said, Caroline, looking back at history, and history can always be a guide, it isn't necessarily going to play out the same way. These geopolitical sell-offs have not been sustained. So if you're looking for or have been looking for opportunities to get into this market at lower prices, I'm not saying the selling is over here, and I'm not saying that we can't go lower, but you perhaps have that opportunity with the equity market 1% lower in the S&Ps, and let's call it a 0.5%, a little bit more than that in the NASDAQ. I'm more concerned, I think, with some of the stuff that's coming out of Apple than I am this geopolitical things, even though, of course, the worst case scenarios are always, pretty dire when it comes to geopolitical tensions. We've seemed to avoid them over the last few years, so hopefully that continues.
All right, so it's just sticking with you quickly, Alex. It is just proof, though, that this market is facing uncertainty, right? Not just in terms of geopolitical tensions, but there's also strikes going on, labor discontentment, concerns about what that could mean for inflation. You mentioned some of the issues
Exactly.
with Apple, potentially some weaker than expected demand. This is a market that's very close to all-time highs, and I think the question is, what is the path of least resistance from here?
Yeah, it's a fair question, but I think you should always note that anytime you put in money into the market, there's risks, there's uncertainties. That's why there's volatility in the market. That's why it derives a return over the risk-free rate, is because you are taking risks. So, I mean, that's just a given. As far as, the path of least resistance, the question
SPY
always for
VWAP chart.
big institutional portfolio managers or individual self-directed investors is, if I take my money out of the market, where am I going to put it? Are you running to cash here, which that rate is only coming down with the Fed starting to cut rates? Are you running to the Treasury market? Perhaps. That's been a market that's done well. Gold has done well. But those are also trades that have been doing well for quite some time. You're sort of chasing those trades now. So I look at this as, yeah, there's always, money moving around on the chessboard. But, outside of China with its recent excitement, it's not like Europe has a sustainably better fundamental situation. So even if the bloc, in terms of the U.S., the House of the U.S. gets a little bit weaker, or continues to get weaker, it still seems to be the nicest by a pretty wide margin.
Okay. All right. So, Dan, let's bring you into the conversation and talk about Treasury market. What's been going on with bonds? We've largely ignored them over the past 2 hours. So, fill us in. What did we miss?
Yeah, Treasury's just ripping higher right now. Yields substantially lower this morning. Some of the things that I'm looking at is like the data revisions out there. It says the economy is still in a good place, right? The economy, we just had a record high in the indexes this week. But investors don't believe it, right? Our clients and investors just don't believe it. We have $6.42 trillion sitting in cash and money market mutual funds. That's on the sidelines. Investors still are hesitant to pile back into stocks. So are they putting money into cash? Yeah, they're still staying into cash. We'll have to kind of keep an eye on that. And we do have geopolitical risk. There was a fire in India for the Apple plant. I think that's going to disrupt supplies a little bit. I guess they're saying that China could pick up. And then we have the two strikes, BA and the dock workers.
Okay, so when it comes to the Fed, because we obviously heard from Fed Chair Powell yesterday, some additional Fed speakers today and later this week, has anything changed in terms of interest rates? Kind of just a slow and steady path down from here.
Well, are they going to go? Are they going to go a half in November and at the next meeting and in December? Possibly.
Well, Chair Powell says 25 and 25.
Yeah, I don't know if I agree with that. I think they're going to be forced in, and that's increased focus on Friday's unemployment number to see if we do have economic weakness that they have to address.
All right, Dan Grant.
He doesn't agree.
Copy. Thanks so much. All right, and thank you for joining us on Morning Trade Live. Stay tuned because Trading 360 with Nicole Petalides is coming up next. And as a reminder, the current Charles Schwab CEO, Walt Bettinger, and incoming CEO, Rick Wurster, will join Nicole live to discuss the transition. Stay tuned.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage.
I'm gonna go make my burrito.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
I don't understand that question.
Being lucky in trading is
How do you exploit human?
formula for success.
I mean, I don't.
Be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is.
I don't get that question one bit.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any
That comes
activation
natural.
in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
I don't know about that chick. Comes second nature to me. I've been doing it for 20 years and it still ain't coming second nature yet.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is
Kathy, come here.
With their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
I'll be right back.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you are with us. We have a big show for you today. On today's show, our 360 Spotlight, we will be joined by the current CEO of Charles Schwab, Walt Bettinger, and Rick Wurster will be taking over as the CEO as of January 1st. Really looking forward to having this discussion with them, find out Walt's retirement plans a bit. It'll be a great conversation. Don't miss it. For our disruptor, we'll look at Datadog after an upgrade from D.A. Davidson. In our 360 round, we'll take a look at the JOLTS data and the labor market ahead of Friday's market report. Here's a look. After September had up arrows, first time in 5 years, but pulling back today, you see across the board, the S&P's down 1%, 5,700, even the NASDAQ down 1.6%, the Dow down 0.5%, and the Russell losing 1.5%. Oil and gold right now are moving. You have gold up $21 and oil's up $2.5. 1944 on the VIX, so you can see that there's a little more fear in volatility in this market. And we look at Bitcoin right now, 62,785, down 1.5%. Jenny Horn is with us, markets correspondent here on Schwab Network. Those China EV makers reporting some strong deliveries for September. Some of the details there, please. Jenny Horn.
Yeah, good morning, Nicole. I will say nothing but good news for a lot of these companies that needed this good news, as we're in a pretty nice now substantial rally in both NIO and Li for a second straight session this week. But now deliveries from a lot of these Chinese EV makers were great, which is also good news not only for the collective EV space, but also for a name like Tesla, which reports tomorrow. But the new month does bring this new data from a lot of these Chinese car makers. Li did report delivery figures first late Monday, delivering around 53,000 vehicles, really 54,000 vehicles to round up in September. That was up from 36,000 vehicles in the last year. For the quarter, Li did deliver around 153,000 vehicles. That was up 45% from last year, and at the high end of its guidance that was given previously in the month of August. So Li did rise pretty substantially ever since. NIO, on the other hand, though, did deliver around 21,000 vehicles in the month of September. For the third quarter, it also delivered around 62,000 cars, up 12% year over year, in line with its previously given guidance back in September. So XPeng, last but not least, delivered around 21,000 vehicles in the quarter, 46,500 cars, up 16% from last year, also at the high end of its previously given guidance. So combined, we see that overall the trio delivered around 96,000 cars in the month, and that was the best month ever for the collective group of them. So that was also, I mean, substantially above what the street had been expecting. I think this is, again, a sign of confidence that not only are a lot of these companies like NIO, for example, receiving now extra cash, benefiting from the Chinese stimulus, but they're also seeing heightened demand, which is now coupled with, again, more cash, creates a really strong story for a lot of these names that have been running out of cash, seeing a lack of demand, and it feels like the narrative around this entire space has rapidly shifted. And it's about time, Nicole, because even with this nice pop in the last 2 days and the nice rise we saw over the month, NIO shares, for example, slowed down 25% this year. Li is no exception either. Another name also down 27% this year. So recovering some of the earlier losses, but still have lots of ground to make up here.
All right, Jenny Horn, thank you for that. Good to see you. All about those EVs. I see Tesla at 253 today, folks, down 3.25%. Thank you, Jenny Horn, markets correspondent. Let's get some insights on the new shape in the markets. For that, we welcome in Vance Howard's with us, CEO, portfolio manager, Howard Capital Management.
Boeing keeps going up.
Obviously, a lot of geopolitical news today, front and center. We're starting off a new month as well. How do you feel about the market?
I feel very good about it. I think we'll get some volatility, Nicole, which I think is expected. We've got 35 days before a pretty contentious election that, half the country is going to be unhappy. But it is the way it is. I think you can see some pretty good pullbacks. Net, we're very bullish. The HCL byline is positive. That's our trend indicator. There's two things you don't fight, Nicole. You don't fight the Fed. You don't fight the trend. And both of those are on investor sides right now. So I'd be bullish. I'd be buying on all pullbacks.
Huh.
Right. So you're buying on the dips. What are you buying on the dips?
Well, one thing that's really opened up is the bond market. When you look at convertible bonds, people seem to overlook that. CWB is a great place to play. It's breaking out. It's looking very, very strong. Emerging market bonds are looking good. You can play that with EOB. We've been talking a lot about China with the PBOC doing what they did last week, and they're also throwing a lot of liquidity into buybacks over there. They're basically pushing up the China market is what they're doing. And a great place to play that is FXI, which is the ETF of China. I think that's a wonderful play right now.
So with that, I know you have some trends in ETFs that you're watching. The ETFs, are there any?
God, man, I tell you what,
ETFs, and I'd love if you go through a few of them. You have the TLT.
Them towns just got tore apart. Water is dangerous.
Tell me a little bit about some of these ETFs, but is there a common trend at all?
I mean, it don't look good. Glad I live up on a mountain.
And the reason for TLT being the 20-year treasuries dropped back is some people are...
In case we ever get flooded.
The amount of debt that we have in this country, which is something to be concerned about. Because sooner or later it is probably going to break. But the other areas of the bond market, corporate bonds, high-yield bonds, convertible bonds, emerging market bonds, they're all looking very, very strong, and they're all breaking out, and there's some money to be made there. We've only had one rate cut so far. We expect another one before year end, so we expect these bonds to move even higher. And I suspect the 10 and 20-year treasury will turn around and be quite profitable and start to move higher also. You know, an interesting note too, Nicole, is anytime you've had the Fed drop rates and we've not hit a recession, within 6 months, the market has been higher 7 out of 7 times. So those are pretty good odds that this market's going to move higher over the next 2 or 3 quarters.
State Farm Loyalty Plan.
Understood. So with that, I saw you have the financials on there, and we're in a rate trend that is cutting, right? They're going to cut more and more. Where do the financials fit in there?
Financials are good. Historically, if you look at financials on the first rate cut, they usually pull back, which they have a little bit, but then you start to see them march higher because this is going to add a little bit more oomph to them. They're going to have a little bit more profitability in our eyes as they move forward. Loans start to open back up a little bit. You should see the mortgage market start to do quite a bit better too, as people refinance, new homes are bought because the interest rates are lower. You know, JP Morgan's a great place to play if it pulled back nicely, and like that play quite a bit. But if you don't want to pick individual stocks, that XLF is a good proxy for an ETF to play the whole market.
Yeah, you do have an individual.
New low.
JP Morgan, right? That's one that you do like.
I do. I like it on the pullback. I like that it pulled back exactly like we said. It pulled back because, you know, the financials usually pull back after the first rate cut, and, you know, it's pulled back to an area that I think is a very viable stock. The company's well managed, well run, earnings are good, and it should benefit greatly from what's going on with the Fed.
And then I didn't mention VNQ. Tell me about that one.
Which one? I'm sorry. Well, VNQ, real estate. Yeah. If you're looking at the real estate market, VNQ is a great ETF for real estate because as interest rates drop, you're seeing the housing market and the commercial real estate market start to move up. Another one that people should be looking at is utilities, BPU. You know, that's a very big
Market's not happy.
Lower rates and what's going on with the Fed.
We're talking ballistics this morning. Not good.
Areas of the market higher and higher that did not participate in the last.
I'm on voice.
The Magnificent Seven. But now
Bob, you're on voice.
now, which I think is incredibly positive for the market. And Nicole, one thing, the greatest, most powerful technical indicator in any market is new all-time highs. The Dow hit a new all-time high last week. The S&P hit an all-time high last week. That is the most bullish technical indicator that you can ever have in a market.
Last but not least, you know, you're buying on the dips, and this continues into next year. Do you feel like you're a long-term bull?
Crude talk on CNBC.
Which is very positive right now. I'm very bullish. I'm buying on no pullbacks. Now, if that changes next quarter or next 6 months,
I don't know if I'll buy the pullback.
Change our thesis, and we'll move according to what the market's doing. And because we're trading, you know, I don't know what the market's going to do next year or 10 years from now. What I do know is sitting here today, the HCM byline's positive, and investors should be at 100% in the market.
I have a couple calls.
Vance, it's great to see you. Thank you so much.
But I've been scalping it.
Howard Capital Management. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes to the technicals. Jessica and Skip will take us through the trades for Eaton, Seagate, and Honeywell. We'll be right back. Trading 360, Schwab Network.
Yeah, this could go, market could go a lot more down now. Let's deal with Iran. I'm gonna go in there and make my other burrito. Bitcoin's down. The ETFs. That SPY really took a big beat today.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
We got a 1, 2, 3 on the SPY. Kind of a bear flag.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at stockbrokers.com. So glad you're
We can still drop a lot more.
Jessica, new month,
Another $7.
Absolutely, we certainly have a lot of
To the 9,
macro headwinds hitting our way,
and then maybe to 546.
the coast with supply chain issues, natural disasters also causing supply chain issues, and then of course geopolitical tensions, and then leading up to an election
Damn,
year.
all this
So
bad news.
Even though we've got such a bullish backdrop from a technical perspective, we've got a lot of external headwinds heading our way and challenges that we really need to understand.
I'm down about 100 on my SPXs altogether.
Yeah, absolutely. So thinking about those supply chain issues that we're discussing at the top here, it really is coming down to nuclear energy and energy efficiency and AI disruption that has peaked.
These are way too far out of the money again.
Today for ETN, it's something that we've talked about before. They absolutely have secular growth drivers that has to do with grid modernization. So yes, that energy efficiency, but also the big impact that we're seeing with on the grid in regard to AI. They've got AI-driven data center expansion. They're setting up really a robust runway for growth over the next decade. They've got clean energy and technology investments. They've got expansion plans with a backlog of about $11.4 billion just in its electrical segment. So I really think this is going to create a resilient market cycle for ETN.
It has to be a quick scalp.
Market share expansion that I'm looking for, as in this is going to be a solution, a tailwind rather, for that headwind that is the data grid, where I'm seeing the spending happen now on those hyperscalers. That's the opportunities I'm looking for right now outside of
Keep
AI.
losses small by scalping like you're doing, a quick scalps.
There's opportunity here. Rick, take a look at the charts, please.
Well, it certainly enjoyed a nice move to the upside over this.
I mean, I'm down big on the first one that I got in,
low point all the way
but I've been scalping it ever since.
Other edge of the chart here.
I'm scalping it yet.
On that point here. So we had a nice rise to the upside. We topped out near 345.19, then gave back some of the gains. We had a low point right here that took us below our purple 252-day exponential moving average before recovering once again. Now price is sitting above our 3 moving averages that we follow.
I got one at 330.
Orange 63-day, purple 252-day exponential moving averages. So we've risen above all those. All the
So I'll probably have to end up selling that one.
We've risen above our volume profile.
But I've scalped it 3 different times now, and I'm wanting to do it again because we're right down here on this 1, 2, 3.
So we've crossed some important areas here. You can also see.
But man, I don't know. It's not the right time to be doing it.
Some acceleration of trend to the upside. However, a little bit of bearish divergence here, in that price made a new closing
So we can
high.
drop down more.
It's actually trending downward. We've broken the trend line, but we're still bullish here. So some resistance areas to watch to the upside.
56.78.
Right here, this red line, right about where we topped out.
56.80. Another $3 down.
Yearly high 345.19. To the downside, support. We've got our yellow 21 EMA, our volume profile point of control, and this green line here that was a repeated low point, and then subsequent high point for price. So between like 310 to 317, there's a lot to choose from in terms of support, Nicole.
Okay. Look, you're seeing a lot of support. It looks like you may have a case here. Jessica, final thoughts?
Yeah, just the way I'm structuring this trade. Normally when I'm adding something to my longer term portfolio, I use the at the money cap.
Still a good trade.
In this case, I'm actually going a little further out of the money just because of the external tensions that I'm seeing. So I'm selling the November 15th, 2024 320 strikes, so about $10 away from the money. That still gets me a premium of about $10.90, but gives me a break even down to 309. So really lining up with some lower levels of support. So again, it's a way to add a security to my longer term portfolio utilizing options, and premium tends to be amplified on down days.
All right, next up, Seagate. Why this one?
Yeah, absolutely. So Seagate, again, this is going into data centers, and I really think that's where the opportunity is going to be. That headline that came across with Microsoft saying that they're just putting an infinite amount of money into data center leases. There's just expansions that are happening there. So I'm following where the hyperscalers are spending. They were spending first, that led to NVIDIA. Now they're spending on this expansion within the data center. So that's the next opportunity that I see, and Seagate technology leads to that. They have really positioned with AI and cloud demand. They've got really some driven growth. So I'm looking for revenue and margins. They're a little bit leveraged. That's something that is concerned for me. But again, it's data centers that I am looking for, cloud customers, that expansion, and where the money is being spent from those hyperscalers.
Right, understood. Rick, your thoughts on the technicals, please?
This is another chart that's enjoyed some really nice upward movement for the bulls here. You can see, once again, up about almost 70%, 68% or so from those yearly lows, coincidentally, pretty much the same as our last chart here. But what we see with this one is that we peaked out near 113.57, this red dashed line here, then we gave back some of those gains. We've also got a longer term blue trend line here stretching across most of the year and beginning with that low point that I mentioned earlier. We did dip below it a little bit right here after we experienced that high point here, but quickly righted the ship, touched the trend line once again, crossed above the moving averages. Now we're finding ourselves above the moving averages. They're all trending upward here, and we are sitting right on this solid blue line here, the linear regression line based on the past year of closing prices. So line of best fit here, an idea of fair value for traders. We are right on the nose of it, almost exactly, just like 20 cents below that point right now. So this is a key supportive point to hold. Also, it lines up with our short-term white trend line here. So a doubly important area near about 108 that traders need to hold on to. If we were to move to the upside, those highs, 113.57, that's the first mark to beat. Then our +1 standard deviation channel, 1 standard deviation above our blue linear regression line, coming in near 119.50. As I mentioned before, supportive area very close to where current prices are right now. Then the 21 and 63-day EMAs at 105 and 102 roughly, respectively here. RSI, one final question mark here. You can see a longer term downward sloping trend line going across those highs in red here. That's still in play for really most of the year, at odds with an upward sloping green trend line. We're above the 50 midline here, so more of a lean toward the bullish side here, but a persistent downward sloping trend line on this RSI is something that needs to be considered.
All right, so in the meantime, just wanted to talk more about the year-to-date numbers. I mean, it's certainly been a winner. 1 year, it's up 63%. And it's interesting how it dropped off from 113. It dropped off right to that 90 level like you were showing, Rick, but made its comeback back to the moving averages. Jessica, final thoughts on this, and then let's get to Honeywell, please.
Yeah, absolutely. So again, similar structure this time with a more aggressive strike price selection, selling the November 15th 105 strikes, collecting about $435 worth of premium. Again, it's a way to utilize options to add a security to my longer term portfolio. I'm creating an obligation to buy the stock at that strike price if it were to move adversely.
All right, Honeywell and Chevron are teaming up to develop some AI tools to refine processing. That's one of the headlines today. The stock is down about 0.8%, but is a winner over 1 year. Honeywell, please.
Yeah, absolutely, and that was the headline that caught my eye, Nicole, so I'm glad it caught yours as well. Honeywell, they're really positioned for strong aerospace growth and their leadership within autonomous and electrical propulsion technology. So this one is my energy efficiency pick. Still going with that theme. There is some AI exposure, but not as dominant as STX and ETN. Now, it's really interesting when I'm focusing on understanding the electric propulsion technology and even hybrid, and this is within the aviation sector, is the big issue or headwind with that is battery life. But Honeywell has solutions that has a longer battery life, that has longer flight times. So that certainly is something that will help them. But their biggest issue and headwind really is fiscal implications. So I think perhaps we'll get some understanding post-election, but also with some, when we've got the budget constraints finally understood, that's also certainly helpful. So I think Honeywell is positioned long-term to propel, if you will, if they are with their aerospace. But nonetheless, it's something I don't want to add more to my position. It's just a hold in my view.
Okay, Rick, can you take a look at the charts and the technicals, please, on this?
So this is probably perhaps our least volatile name here, the least overall movement, the least big swings here, but still not a bad chart at all here, because we can see that we are up notably off those lows here, but since last earnings, a bit of a struggle here, because we topped out near 222 or so. Earnings gave us a large gap down here, but since then we've established a shorter term upward sloping channel here. We drew a normal trend line going across the lows, duplicated it, roughly put it across the highs. It matches up decently here, a common trick you can use to help yourself project potential resistance. However, we also have a very obvious, very important point to the upside to consider as well. The low point that we saw before our earnings gap down comes in near 213.13, this red line. We would be looking for this stock to fill the gap here. That's a common situation that happens in trading. Certainly not saying it's a guarantee that it's going to happen. I'm not saying that. I'm just saying it's a very common situation to retest that level, and then you have to make a choice as a trader. Do you look for the move to continue to the upside, or is this a resistance point that you think will overcome the price momentum here? So something to consider. And when we do look at momentum, speaking of momentum, RSI here, we can see trending upward on one hand above the 50 midline here, but we haven't really made too much progress above our old high. See this horizontal red line here? That's what traders would want to see, would be a break above resistance on price, and also for RSI to make matching new highs. So support and resistance, this level right here, 213.13, that's the obvious point to watch to the upside, almost pretty close to this volume node right here. Then those yearly highs, obviously that's the next point to watch. To the downside, confluence of our yellow 21-day and orange 63-day exponential moving averages. They're right on top of each other near about 205, so that's a key point to hold. We tested it yesterday and held on. We came pretty close today. Beyond that, the next low comes in near about 259, so some areas to keep an eye on.
All right, Rick Ducat, thank you for those charts, and Jessica Inskip, stockbrokers.com. Thank you both for that right now. We appreciate it. Coming up next, big news from the Charles Schwab Company, right? Corporation. CEO Walt Bettinger is here, and Rick Wurster is here. We will have a conversation as they will be making some new announcements today, as Walt Bettinger will be stepping down in his role as CEO, and Rick Wurster will be incoming CEO in the new year. Let's talk about the leadership, the transition. An exciting interview next.
Huh. I can't believe this guy on StockTwits.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Look at this guy. I don't know if it's cool to be talking on Stock Twits about him because it might fuck with you, but
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on.
this guy, listen to what this guy said about me here on Stock Twits. Are you on there, YouTuber? He calls me a racist. He says this guy on YouTube and Discord channel where he used to focus on trading, but now he talks about or trans, calls women who don't even know him out of their name, makes racist remarks about blacks, politicians, and says the N-word, and he's not afraid of lacking consequences. He thinks he is better than blacks, which I'd never said that. And he calls them racist. But he collects food stamps and lives in a closet-sized apartment. I collect food stamps. And I live in a I live in a luxury apartment. It's not a huge one, but he says he's not racist because he's learned music from blacks. I played with blacks in bands and I've danced with them, yeah. They taught me how to dance. I appreciate that, that's for sure. He wants to monetize his YouTube channel, but because he has a lot of people in there that are trading better than him, and he hates to see that, James should be back on focusing trading and cleaning windows and stop being rude, racist, misogynist, angry old man. And there's more to it. His name is Volatile Stocks 101. He's on Stock Twits. Okay, we're back to another exit idea right here. I've never cut anybody down on their trading. I learned from other traders. But I've never had anybody talk to me about me like that. I reported him. See, there's more it says on here. I'm going to see if I can read it. I guess I blocked his account so I can't see it. I'm going to unblock it real fast. I got to see what else he wrote about me in here. Mog's an angry old man, so there's not much more he can say. This guy has what? 2 followers, or he's following 2 people. A racist? I love women. So we're at resistance again, Randy. If we break this, we'll go higher, but we're definitely at a resistance. I mean, I'm upset. I've never been called a racist before. Just because I don't like Kamala, does that make me racist? I'd like to take this guy outside. Wow. I'm going to send that to Howard. So it looks like he was suspended. Because I can't send it. Let me see here. Man, I want to punch him in the face. I'm back to 95 here on this call. Randy, you still in it? Or are you in it? I'm shook up. I really am. I'm pissed off. I probably made love to more black women than he ever thought about. Makes me just want to go hit the bag for a bit. Looks like I want to see if look him up and see if he was suspended on stock twits. Because it says, I tried to give a message to Howard. But you don't go talking about me like that and get away with it. I guess I just need to calm down. Oh. I'm so pissed off. Now I'm up. I mean, he's sitting here bashing me, and I'm up almost $500 on this trade now. That son of a bitch. I can't believe somebody wrote that about me. Calm down. I'm starting to have. Yeah, I'm not built like I used to be. I'd find him. Okay, calm down. I want a piece of him so bad. It says I can't trade. There's I've dated more women accidentally than he probably has on purpose. We're at the 200. Time to exit the trade. I wish I knew how to find him so I could block him off my YouTube. Think about getting him back in again. If we hold his support level, the triple top break. Nope, we didn't hold it.
Now this gives you a little bit of time to try to see if the stock's going to break out to the upside here, Nicole, but your break-even level does give you a little bit more delta in the event that it does not actually achieve that $130 level at the time of expiration. And if there is a market available, you could also take this trade off if it is profitable and worth doing so here. So an optimistic trade, risk defined, and then also bullish overall when it comes to Datadog.
All right, Kevin Green, thank you for that. We appreciate it. Good to see you, Kevin. Coming up next, it's time for our 360 round. We're going to check in on the labor market. Today's JOLTS report. We have the Friday jobs report that's coming up. That will be key. Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help.
I'll try to ignore him.
By phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to Trading 360. Time for the 360 round. We're looking at the labor market. I want to bring in our panel. Richard Walquist is with us, Chief Executive Officer, American Staffing Association, and Amy Glazer at Educator. Thank you both for being with us. So we've gotten our JOLTS data in. We look at the job openings. I know that the Fed has been focusing very much on the labor count. Amy, some of your thoughts?
So I think the report continues to show we have a strong labor market, and stability is the name of the game right now.
And Richard, some of your thoughts here as we look at the JOLTS and more.
Sure. So the labor market is certainly cooling, but it's not rapidly slowing. One of the things that we take a look at is labor market churn. And what we saw in this morning's JOLTS report was that companies are not laying off large numbers of workers, so we're not seeing big separations. But the other thing that we're seeing is quits, and so workers are staying put. In fact, they're becoming wary of the job market right now. So right now we think things are somewhat in limbo, but we see a normalization.
And so with that, at this point now, when we take a look, Amy, you're looking at the jobs report on Friday. Is there anything that you're really honing in on? Obviously, we're going to have, we have the estimates, but the big picture on some of the themes that you're watching most closely, Amy?
Yeah, we continue to see healthcare be white-hot labor markets. We continue to expect healthcare to rise. August is usually kind of a slow month, and we're preparing for the September surge as companies get ready to start holiday hiring and ramp up.
Richard, we look at the different types of jobs. We watch wage growth in comparison to inflation. Some of your thoughts on a forward look here into Friday's number, your expectations, and the labor force participation rate is something that people talk about as well. What will you be watching for?
So what we really like to begin seeing is that the job growth is extending beyond just a couple of sectors. And as you are aware, I mean, over the last year, we've seen disproportionate job growth concentrated in government jobs at the federal level and also the state level. The healthcare sector, social services. We've been seeing some upticks, which are very encouraging in construction. But I tell you what we're really looking for now is an uptick, kind of an end-of-the-year bounce, both in logistics and manufacturing. Something that in a normal economy that we typically see at the end of the year. So we'll be
You must be a Nigerian.
over the next couple of months in those sectors.
Yeah, Amy, some of the thoughts that you had about the landscape.
I can't believe that. I'm still pissed.
How people like to work, hiring.
I'm gonna go make another burrito. I guess when you're mad, you get hungry.
You also had stability being a priority for folks.
Yeah, part-time and flexibility continues to be key. We've got 5 generations in the workforce for the first time in history, and employers really have to lean into that and make sure their workplace is inclusive for all. Flexibility continues to be the #1 need of all generations.
Yeah, you know, Richard, you also
He
talked
made
about
that airplane
the
so cheap
hybrid
for me, I couldn't
work
help but
schedule.
buy it.
Is that going to work? Is it working for folks? Is it actually happening for folks?
But buy it. He made that airplane so cheap for me, I couldn't help but buy it. He made that airplane so cheap for me, I couldn't help but buy it.
And workers got used to it, and workers liked it. Productivity fell, but also we saw that worker engagement scores fell. And if there's one thing that is a truism now, as we're entering this next period of what we hope is economic growth, it's going to have to be the focus that employers have
No
on
post showing now.
retention and employee engagement. We're already seeing signs of it. When you take a look at the separations, the layoffs,
How
we see
stupid
that
can you get?
employers are still holding on to talent. And on the talent side, we see that talent is reading the job market pretty well. They're seeing that there aren't.
I've been grinding my teeth for ever since I read it.
But we think both in the United States and internationally.
I need a Valium,
we're gonna
Nancy.
find kind of a middle ground, probably many more hybrid offices.
So he's mad because I bashed Kamala.
Days a week.
And you mentioned the rate cut comes in. It's welcomed by many businesses. Maybe that could help them in the books.
I feel like I want to send that to Howard.
Catch some fresh air, you wrote, and as they want to grow the businesses and doing the hiring. Job openings rose. They were to 8.04 million, exceeding those analysts' expectations. Final quick thought, because folks are still having a hard time finding a job, Amy, than they did 2 years ago.
I still remain optimistic and encourage people to do so as well. We've got a great Q4 coming up, lots of holiday opportunities, part-time seasonal work to supplement while you're doing that long-term job search.
Yeah, Amy Glazer at Educator and Richard Walquist, American Staffing Association. Richard, Amy, good to see you. Thank you so much. Thanks for joining us here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time for the watch list, so join me then. In the meantime, download our Schwab Network app. It's free in the Apple App Store. Tune in 24/7, schwabnetwork.com. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history
Okay.
and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client? Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own. Come on, you know Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. And everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Okay, we're dropping back down again.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim. With robust charting and analysis tools,
I'm gonna go have one more burrito and then come back.
up to the minute news and insights. Trade brilliantly with Schwab.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're going to discuss markets. We're having a sell-off here today. We'll also look at some options.
Shut off.
Boeing, which is under pressure again, or was under pressure again, amid reports of a stock sale. And Lululemon, which has dumped about 48% so far this year.
Boeing again?
U.S. sales slow. And like
It was up earlier.
Data in Nike, the athletic apparel company, reports earnings after the close, with the bar set pretty low on this one going into those results. Now
It's still up.
Major indices, which are off a session lows, but still deep in the red.
Boeing considers issuing $10 billion in new shares
Off about 140 points.
as strike lingers.
Nasdaq went
No,
up
that
about
ain't good.
1.7%, pretty solid.
That
reversal
dilutes
there.
the stock.
The downside, the Russell 2000 small caps off 1.5%. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, geopolitical risks on the headlines here, and that's causing right across the board after a solid September.
And just look at the VIX, look at the 10-year note, look at gold, look at the dollar.
Yeah.
It reeks of geopolitical risk. It's everywhere, and it's easy to figure out that it's risk off today. And oh, by the way, defense contractors. Why was Boeing down in the morning and up now? Defense.
Yep. RTX.
Yes.
LMT. Some of the others.
That whole sector has just exploded this morning. And is that the right move? It's hard to say, but it's an obvious move. It's what you can connect the dots to. So now what? Well, the good news is, once this happens, the last time it happened, Israel had their defenses up, and very few of these missiles got through. That doesn't mean it's going to happen this time, and there's the risk. The uncertainty there, until we see the event, we see the aftermath, we don't know. And what we don't know, the markets don't like when they don't know. Right? If you get something defined and it happens, the markets may have a relief.
We've known this has been going on for a while.
We don't know what it's going to be. So right now, everyone's clenched, and we're waiting for the next headline to come out, and it's risk off until then.
Yep. United States has indications that Iran preparing to imminently launch a ballistic missile attack against Israel, according to senior White House officials. So we'll continue to watch that story because it is taking hold, moving markets at this point. And with markets, the S&P 500 and Dow settled at record highs yesterday. It's not surprising any little thing like this, geopolitical risks in that region could set off some downside here. But let's expand this conversation, bring in our next guest. That's going to be Alex Coffey, senior equity contributor here on the network. Alex, I wanted to get your take here.
I don't know if we're going to break the 200 or not.
Month of September, kind of pushing back.
I didn't take that trade. I should have.
Typically, we see a lot of volatility and downside to equities. Had a solid month.
He's right though. The uncertainty.
At this point, but
there's a spy.
Geopolitical risks on the headlines, and that's going to cause some uncertainty.
Yeah, I think the end of the month bid into the market also exaggerates what today looks like as well, because you did see the market run up. We were a little bit weak for much of yesterday, and then you saw that pretty vicious rally into the close. So giving back much of that and maybe a little bit more. All things considered, though, I mean, you're still above the previous all-time highs. It's still been not just one good year, but 2 consecutive good years now for the market. If history is any guide, these geopolitical-driven sell-offs or opportunities, that's going to change maybe at some point. But it's really not in the best interest of these governments, if you look at it from a realpolitik kind of way, to start a major hot war with each other. It's more shows of force because of the tensions that are there, and hopefully it stays that way. If it escalates something beyond that, yeah, there could be real risks, but historically, war and geopolitics have actually been, kind of more of that wall of worry than real downside risk pressure. So we'll see if that changes.
Yeah, Kev, what started that yesterday, the slide that we saw was after Fed Chair Powell's comments. Hey, we're going to do 25 basis points twice at the end of the year, 50 basis points reduction in interest rates. Market wanted 50 basis points in November. The petulant child that it is.
The market wanted 50 basis points cut.
Come on, break it this time.
During that interview, they wanted 50 basis point cuts. This is what the market does, and Jerome Powell did what a Fed chair should do. Think about this, Tom. There's a lot of inflationary things running through the economy right now in terms of spending, and potentially, remember, you've got Boeing strike, you got the port strike.
Blanket.
That's wages going higher.
They probably won't.
The number request by the port workers, 61.5% they want.
Yeah, I think they worked down to 57, but they called the Boeing strike. They're looking for 80%.
Yeah, they offered him 50%. Yeah. They said no.
Right. So that's going to put up wages. Jerome Powell had to temper the unbridled enthusiasm that the market had towards rate cuts, and he had to bring it back into more realistic terms, and I think he did that. I mean, 2 things. He said they're not in a hurry. Oh,
yeah. Market didn't like that initially.
The market, yeah. And then he's going to get to the neutral rate over time, right? The market wanted him to go to the neutral rate during that interview, and he said, no, it's going to be over time.
Right.
So I think those 2 things are what really disappointed the market, despite what he said. Did you see the V sell-off and then recovery when he started talking?
That's a pretty strong little run back up there.
Window dressing, perhaps. That could have been definitely it, as we did settle at a new record. But Alex, Kevin mentioned the jobs. Joel's report actually increased about 329,000 to just over 8 million. So that's a positive, because that's what the Fed's concerned about at this point, right?
Yeah, on the margins, I'm on record of saying this every time this report comes out. I mean, this is the least useful of all the job reports because it's one so far back in time, but it's the most optimistic view.
I'm going to go make one more burrito and I'll be back.
We know there's stale job postings because, I mean, you might even know hiring managers and they still have things up on LinkedIn or whatever, site they may use, and they've already filled that job. They just haven't, taken that posting down. When you look within that report in the internals, though, things that are a little bit alarming is, I guess, quits and hiring are basically frozen. So to me, you might have a labor market now, and this is maybe your best case scenario, that doesn't necessarily get meaningfully worse, but doesn't really change. Where, there's just not hiring, but there's not firing. And so if you're not already in the job market, it's a tough market for you. And that's where when you hear people tell you how great the economy is and things, it's like, well, it's not for me. And we know that shows up in the sentiment reports. It shows up in University of Michigan consumer confidence. There are a lot of Americans who are saying this isn't a great economy, despite what the numbers say. And so until something meaningfully changes there, I'd expect more of the same. And that JOLTS report doesn't give us anything that says something's meaningfully changing in terms of more hiring or more growth. It's more saying frozen, wait and see what happens. Perhaps if you get the soft landing, that'll open up that hiring spigot once again. But when you get the actual non-farm payrolls, I think there's more info to be garnered from that particular report. We got an ISM survey number today. Within that, told you the labor market's worse than expected. ISM employment was 43.9. The expectation was for it to increase from the prior 46 to 47.1. So when you ask people who make these decisions, the purchasing managers and hiring managers, they're saying, no, it's actually, we're not hiring. If anything, we're reducing our labor market or our labor forces. So there's a lot of mixed messaging. The soft data continues to be weak, and then the hard data kind of says it's better than expected, but not necessarily strengthening.
Yeah, and in that ISM, Kevin, new orders bounced a little bit to 46.1, 1.5 points, but prices paid. They dove almost 6% to 48.3, and that's the lowest number since December. So the lowest lowest for the year of 2024. That's a positive as far as inflationary pressures, because that had been rising into the end of last year.
Yeah, anytime you see a move like that in prices paid, that's deflationary, right? And however, it might be lost because crude oil's up 4%, right?
Right.
So I remember we had a lot of eggs in the crude oil basket in terms of lower energy prices fueling lower inflation. Now it's up 4% today, back over almost $71. So that narrative is now a little shaky, but that could reverse pretty quickly. So the general news from that is the price is paid, pretty solid number.
Yeah, and crude oil did hit 66.30 a barrel earlier in the session, so it reversed hard. So it was weak earlier on, and then reports about the imminent attack.
We broke it. That's a good deal.
Iran sent crude oil futures moving higher, which was, that's one of those stories that we've been talking about where geopolitical risk got pushed aside because demand was low for crude oil, and then also production.
We're at 120 on these suckers now.
But Alex, the strike, that's inflationary, right? Kevin mentioned the wages component of it, but if this drags out for a week and a half, it's gonna cause some issues, and people are trying to build up inventories right now going into the holiday shopping season, amongst other things.
It definitely can be inflationary, but I mean, we just talked about
It can. It will be.
About these ISM numbers when it comes to employment. The leverage is not with the worker the way it was 2 years ago. So isolated cases where big unions might go on strike or renegotiate labor and get higher wages.
How'd that get all the way down there?
In an isolated situation. But for the most part, when you look at the sentiment reports and you ask consumers and people who are W-2 employees, they aren't as confident in the ability to get a new job. They aren't as confident that they're going to keep their job at the moment, and so they're not going to go in and ask for a raise.
Well, it's China.
There's a chance that
That's why
their job's going to be cut, or if they don't think they can get a new one. When you have the most leverage is when you have the most opportunities. If you don't feel like you have opportunity, you don't really have leverage, and so we're starting to see that balance back out. You just had crude oil up on the screen, the chart. So you have something that should be spiking prices. It is spiking prices. And that's a still very, very, very deflationary looking chart. Yeah, you've seen a bounce back in copper prices, but they're still way off their highs. So you have kind of goods and commodities deflation on balance for where it was maybe 6 months to a year ago. Right. And then we're talking about labor market pressure. If you're a Phillips curve believer, well, maybe in isolated situations, there's going to be a little bit of a strike and union pressure for higher wages, but you're not really seeing it as a broad, widespread. The workers got all the leverage; they're getting more wages everywhere. That's not really happening. That was a story 2 years ago.
Yeah,
think about this, Tom. In the port negotiations, they want language against automation.
Right.
Good luck with
So that's less about wages. That's more about, hey, promise us we're still going to have a job. That's a completely different conversation.
If you're here, you'll make more money, but we're going to lay a bunch of you off.
Right. Yeah, and that was one of the sticking points that the courts are having at this point, is that, like, hey, we can't.
Yeah, they're
let
less far
anybody
apart
go.
on the wages.
Right.
But this whole automation thing, there's no way they're gonna put writing in about holding back automation for workers. They're just not gonna do.
But just looking at that though, simply is, if that's your request, it tells you all you need to know about where the leverage is and where it's going.
Yeah, and you start looking at what's moving today, Kevin. You mentioned this earlier. Dollar's higher, gold's higher, even though the dollar's exploding to the upside.
It really reeks of. That is a big indication of risk off right
Right, it is risk off, and you've got central banks, and now it's being used as a safety play, just like the dollar is. But then you've got that move into treasuries too.
Yeah.
And I've kind of been waiting for that move into treasuries. Alex, I mean, I know that you follow the treasury market pretty closely, but I've been waiting for this to bounce back a little bit, where we get that trajectory starting again, because after the 50 basis point cut, yields have actually firmed up a lot.
Yeah, this is where I think it's important to be consistent. I've been looking, I think pretty vocal about looking for the treasury market to have tailwinds. Interest rates are going lower. The argument is whether or not they'll go low quickly because they need to, or if it's going to be more of a sustained move towards that neutral rate, is the case of Jerome Powell. Well, either way, the rates are going lower because the growth and inflation situation are going down.
A lot of volatility on that VIX.
The more those interest rates reflect the expectation for inflation and growth over time. And so when you look at, let's say, ZB, which is the 30-year Treasury, something I watch a lot because it moves a little bit more than, let's say, Treasury notes or anything shorter term that's more tied to the Fed, every dip largely has been bought up pretty quickly. But here's where I mean, you have to be consistent. I just told you that geopolitical moves don't necessarily have staying power.
Right.
So just because I may be able to lay out a thesis that has treasury prices go higher and yields go lower, if the catalyst for a particular session or week is geopolitics, it's not really waving a celebratory flag because you were right. It's a reason, it's something to note, but oftentimes these are short-lived moves. So this spike you've seen today has already given back about a third of its move. This is my point. So when you see something like this, even if you were on the right side of a particular trade for whatever reason, it's important to know why it happened, because it may give you influence as to what you do with that move. If this was not geopolitical driven, maybe you'd be less likely to make a decision on what you want to do. But because it's something that's short-lived sometimes, perhaps if you were already in this trade, you'd be looking to reduce because might get back some of this if it ends up not being what some of the worst fears are.
Yeah, and equities are about 0.5% off of their lows during the session also. So we'll continue to watch this story. Let's take a quick break, though. When we come back, we're going to take a look at Boeing. Playmaker is reversing from earlier losses after reports that the company is potentially looking at raising at least $10 billion in the potential stock sale.
Well, that's not a good thing, I don't think.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on
I think I might hook my other monitor back up here. This thing's funky sometimes.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking Boeing. It's been in the headlines for, it seems like, the last few years now. Getting a little bit of a bounce today, and this is probably on the back of maybe some of these defense names catching a bit because that is a portion of their business. But at the same time, we had a report out of Bloomberg that they might actually end up selling shares. Let's get into this discussion, Kevin. You follow Boeing extensively, and you have for years.
I have a love-hate relationship with Boeing.
I think a lot of investors are
traded $149.49 this morning, and then all this happened, and defense contractors picked up, which. We don't talk about Boeing as a defense contractor, but they're an enormous defense contractor.
Right.
So it's not just 737.
Pre-market too.
We break the 200 and break this resistance, I'll get back into calls.
$10 billion. They need to raise capital right now. Machinists, 33,000 of them on strike right now.
God.
80% raise they're looking for.
They're looking for, they're putting the screws down on a company when you don't want the screws to be put down on this company because it's important to manufacturing here in the U.S. and it's an important U.S. company.
This is a company in need of good news, like no other company in this in the stock market. Here's the good news: they did deliver 32 jets up until September 27th.
They're on a trajectory going higher as far as deliveries go.
They delivered 40 in August, but the numbers are still down 25% year to date. The good news is they're still booking orders if you look, but geopolitics kind of saved them today because of the defense contractors, and the stock has got a lot of this bad news priced in, but the strike impact on production and supply chains, it's just going to be this company. Here's the good news. I'll give you the final bit of good news because there's not much good news to report. This new CEO, it comes from the engineering side and may improve all these problems that may have been caused under Calhoun. I think that's a good promise for the future, but boy, much like GE and that turnaround there, this is a long one.
Yeah, and Alex, they're right on the cusp of maybe some of their debt going, getting downgraded to junk status at this point. So they need to raise capital, right? In this, they've had furloughs.
I'll be right back.
Some of their suppliers have had furloughs. Wells Fargo came out with a note today, lowered the price target to 110 from 119.
Yep.
They've been underweight on this stock for a number of months now, but there's caution out there. Maybe there should be at this point.
Yeah, if this company wasn't one of two major players and the only one located in the U.S., I think we'd be talking about, potential bankruptcies and things. That's how poorly it's been managed over the last half decade plus. But we live in a reality where it's a very critical piece to United States manufacturing, defense, role in aerospace, and everything. I don't know where the floor is, but there seems to be a backstop that the U.S. government would be willing to put up for this company. Yeah, that's somewhat speculation, but time has shown us that this company has survived a lot and continues to survive a lot. But the big question is, how much lower can the stock shares go? Do you want to really get short a stock that's down 30% over the last 3 years, almost 20% over the last 12 months? Down even more than that when you go back to kind of the beginning of this year. You can see it on the screen, that pop right towards the end of last year. So to me, you throw all the negative news. Every day there's negative news seemingly for Boeing, and the stock has ground lower, but it does have isolated periods of time where it bounces back. It's slowed the pace of those declines seemingly as well. When I looked at, kind of talked about and thinking about example trades in this, it's going to be different for every investor. A chart like this, to me, isn't necessarily one that I'm jumping for joy to be selling. And some people would see a really strong downtrend and would totally disagree with that. They'd be seeing a pop today as a counter trend move, and they'd be looking to get short that move, and all the power to them. This, to me, is an uncorrelated equity at the moment to the overall market. It's perhaps a value play. It does have elements of it that are working against the stock, but if there's resolution in any of those things, perhaps you could see a bounce back in shares. If you see opportunity to perhaps increase exposure to this name, perhaps you could look to something like a short put vertical below the market, below the lows of the kind of market hours, below 149, and that's what I looked at.
Yeah, and if the stock actually earlier on in the session hit lowest level since November of 2022, so nearly 2-year lows on this name. Implied volatility percentile, IV percentile rank 91% at this point. So implied volatility levels elevated not only because of the market, just because of the moves that it's had. So it's in the top 10% over the last 52 weeks of implied volatility levels. So break down your example trade for us, Alex.
Yeah, another thing too is the implied volatility is way at a premium to the actual movement that you've seen in the shares. And so to me, that can be an indication of an oversold stock, and you saw the bounce back today. But what I looked at was utilizing that, 1 month highs in volatility, near yearly high implied volatilities, and selling a put vertical below the market, 149, 146. Now it just happened to be below the lows of today from after the market open. But really, this was more of a function of pricing. I wanted to look at a $3 wide spread that I could collect $1. That was a third of the width of the strike. Collect $100, risk 200, so 2-to-1 risk reward. And in this case, that was just the strikes that could accomplish that in that October 18th monthly cycle, with just a few weeks away. Another thing too to think about was when you have those short-term spikes in implied volatility, sometimes shortening that time horizon as well for the trade can make sense, because you're still getting a fair amount of premium because of elevated volatility levels. And it also may, if there is a resolution into these things over the next few weeks, you could see a quick repricing of some of those shorter term volatilities. So a little bit more sensitive to some of those short term news when you go a little bit more short term. But again, 148 break even, 2-to-1 risk reward.
Yeah, 17 days to expiration on this example. Alex brought us in the October 18th. Selling the 149 put, buying the 146. As he mentioned, if you collect $1, it's trading closer to 85 cents right now, but if you collect that $1, you get $200 in risk per spread. But Kevin, probabilities are decent on that short 149 put in this trade, right?
Yeah, 65% probability of that October 18th 149 put finishing on the money. 66.5% actually. I stand corrected. So, Alex is like a surgeon when he picks out these numbers. He looks for the $3 wide that's collecting $1, and he has rules that he puts on. And it's, people should probably be writing down these rules as he's saying them, because it's a good way to search for value in these trades. He's more, granular at it than I am.
I can hear you now,
and so
for
he does these rules, and they're solid. When he puts the rule out there, you're like, okay, I get that.
Yeah,
that sounds pretty solid.
Yeah, and I think that's a good point to bring up to viewers and stuff, Alex. We talk about this all the time. Guidelines, right? Well, nobody has the same set of guidelines, right. But there's barriers, that you kind of look at, and then you get more comfortable with it. And it's from experience. What kind of risk are you comfortable with? Somebody might look at this and go, oh, I'd like to collect more than $1. Maybe he sells the 150 put. Or it might be somebody that's a little bit more risk averse and go, hey, I'll sell the 145, 142 put vertical. I'm not going to collect as much, but I'm giving myself a better probability of success, right?
Yeah, I think it's a loose guideline. Sometimes the math is cleaner on the $3 wide with the $1 too, which I think is nice, the 2-to-1 risk reward. But, it becomes a function of, I'd see it as somewhere between maybe a quarter the width of the strikes and a third the width of the strikes. If it gets much more than that, well, I think you change the style of the trade. There's nothing wrong with doing it, but you no longer have sort of that. There's a relationship, I guess the best way to say it, there's a relationship between risk and reward and your probability of success. And so if you're looking at credit generating trades, oftentimes the reason you do that is because they have a higher probability of success. And when you start getting to a situation where, say, it was a $3 spread collecting $1.50, well, that's equal risk to reward. That's more of a 50-50 relationship with your probability of profit. perhaps you would look to something more like the debit spread in that situation if you wanted a more 50-50 probability of success. So I think it just depends on the style of trader that you are, but that relationship between risk and reward has a relationship to your probabilities. It's not perfect, but it's a good kind of armchair method. If you have 2-to-1 risk reward, you probably have around a third probability of risk there, and 2/3 probability of success.
Yeah, and Kevin, it makes a good point there, because we always look at it, like I always look when selling verticals, I like to do it in high volatility environments, right? Because you're going to collect more option premium for those. But to that point, when you look at this, and Ivy percentile ranks 91%, but if say that was down at 40% and the stock was bottoming out, then maybe you look at buying a call vertical, right? It's all based on implied volatility sets a tone for a lot of these strategies.
And there it is. Implied volatility should help you determine the strategy that you use. And if you do, and why? Because when implied volatility is high, premiums are higher, theta is higher. When implied volatility is low, maybe it's a long vega trade where you take advantage of if implied volatility goes back up. These are the things that beginner option traders don't understand and utilize, and intermediate and advanced do utilize. And where does it show up? The end of the year P&L. You keep doing the good practices every day and watching and working all your orders and you do all this list of things that make you a more efficient trader, and then you check at the end of the year and it shows up in real money.
Yep, and those guardrails or bumpers, I like to call them, those are flexible, right? They're dynamic. They can be changed based on what maybe historically you've changed or what's going on in the overall market.
One thing along that line, though, Tom, is I think it's important to have some sort of a system like that. And you don't have to look at the ones that we're talking about. Do whatever you want, but take the thinking out of the part that you can. It's hard enough to find the asset you want to trade. It's hard enough to choose the direction and choose your entry points and exit points. If you can get the strategy to some sort of system, it's at least one part of the game that you don't have to think about as much.
Yep, comfort level increasing as you get more experience. All right, great discussion here, guys. Thanks to Alex Coffey, Senior Equity Contributor, for joining us. But coming up after the break, we're going to be joined by Landon Swan from Likefolio for a look at sentiment data in Nike. The athletic apparel stock has fallen about 18% so far this year. They report earnings right after the close. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
How's my favorite
Neil!
client? Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah, at Schwab.
No, I can't do that.
Management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
You gotta run, Carl.
Right now it's 11:32, so we got another hour.
Have a choice in how you invest with Schwab.
Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you, Tom. Good to see you. Good to be here.
All right, so Nike down nearly 20% so far this year. It's bounced about $19 off of those lows we saw a few months ago, but we've seen some deterioration in sales, maybe direct to consumers falling off a little bit, lack of innovation. I mean, do you guys have the data that kind of supports the weakness that we're seeing? Because the bar's pretty low going into this report tonight.
You know, I'd argue that maybe, I mean, it's kind of low, but it's kind of not, because if you look at what happened with the, you know, the last earnings report, they got smashed. I think they were trading around like 94. They went immediately down to 75. It dipped as low as 70. And now we're back up to around 89. So basically almost where we were before the last earnings report. So, you know, what information has changed since then? I mean, we've got the report. So now, you know, we've got some other numbers coming in maybe, and some speculation, but nothing from Nike. So I would argue that the expectations are actually a little bit higher than you might expect, because yes, all this bad news came in. They said that they're expecting sales to drop 10%. They said the demand's weak in China. They gave us a lot of bad news, a lot of reasons to sell the stock, and people did. But now the stock has been bought back up to almost those same levels pre-report. So, you know, what is it that's going to justify that move, I think, is the question that we have to ask. And, you know, one of the stories that I find so interesting is, you know, you can, if you go back and look at all the times we've talked about Foot Locker, how many times do we say Nike direct-to-consumer is going to kill Foot Locker? You know, they're going to go right around them, direct-to-consumer, Nike's focusing on that. And now they're starting to pull back from that a little bit, because the strategy is to pull back a little bit because, frankly, it's not working.
It's not working.
So their website visits were down about 7% on a year-over-year basis. That was a quarter ago. Today, they're down about 22% on
Who's
a
that?
year-over-year basis. So that's taking out seasonality. That's just showing us that the website is not getting the hits that would be required for a successful D2C conversion or D2C strategy. And that, you know, they're talking about more focus on innovation and some of their product line, which I think they need. But I think definitely they're seeing that this strategy of direct-to-consumer is, I don't know if failing is the right word, but it's just not doing what they thought it would do. And so they're shifting their focus a little bit. We know the Converse is weaker as well. And you can see here, you know, that's one of their brands, but you can see here just when you look at, you know, how other companies are doing, Nike is
Spy back at the 200 again.
And, you know, the shoes side of it, you got On Cloud and Hoka doing really well. On the athleisure side of it, you got Lululemon, Viore doing really
China's
well.
all, you can always fall back on China.
Just not doing well. And so what's interesting is, you know, anytime you talk about behemoths in the industry, you know, they're huge. They're this enormous target for the competition, but they're, you know, they've got such a lead. They feel invincible. But when you kind of look at it as, you know, Hoka and On Cloud, for example, they're taking on the shoe side of things, right? Viore, Lululemon, they're taking on the more the clothing side of things. So Nike's, they do a lot, and they don't have a big competitor that's going to try to replicate everything that they do. But there's a lot of smaller competitors that are very focused and specific on the different niches that they're attacking, and together they can really harm one of these big companies. So I think that's kind of what we're seeing with Nike. You know, they talked a lot about trying to streamline operations. I know that they bet big on the Olympics. They thought that would be a big bump for their brand. We measured it. Really didn't see a big uptick, frankly, from their exposure on the Olympics. So I think that right now, my take on it is the data is not great. It's accelerating to the downside when it comes to web visits and happiness, for that matter. And so with the rise in stock price, I think it's setting up for a potential disappointment for investors, even though a lot of the bad news should be baked in. That price move from 70 to 89 tells me that investors maybe are a little more optimistic than they were immediately after the report came out 3 months ago.
Landon, the move in the stock the last few weeks, it feels to me like suddenly Nike is a China proxy, because all these China stocks that have rallied took Nike with it. The numbers that they're putting out, like you mentioned, historically bad without some type of an event. Earnings per share down 45%, operating income down 45%, revenue down 10%. These are historic numbers, never happened before without some type of a stoppage or event that made them happen. Here's what everyone's betting on. Elliott Hill, the new CEO, who has an intimate knowledge of Nike. He doesn't come in saying, oh, I've got to get to know the company. He knows it intimately, what the problems are, and they think he can fix it. Now, the real problem is China's still a problem. It's 15% of their revenue. And that doesn't, even though they're stimulating China as much as possible, there's no guarantees that that'll work. Your graph that you showed about the positives and negatives, boy, my closet is full of all the negatives. I don't have one of the positives. I have nothing but the negatives. So I'm clearly on the wrong side of this trade from a consumer standpoint. But what do you think about my theory? Is this a China play? Did this stock rally because of a China proxy?
You know, it may have. I think the betting on the new CEO coming out of retirement, I think that may have been a big part of it. Talk about how, you know, demand in China is weaker right now in their last earnings report. So, but I hear you as far as like, you know, proxy and everyone else is kind of trading that way. I can see that. I can see the, you know, the new CEO being a bit of an optimistic reason to buy the stock, and I think it's going to be interesting to see just how he handles this earnings report. I mean, if he comes out very confident and there's decent numbers, kind of matching what they said before, but slightly trending to the better side of that, then yeah, I think that, you know, the investors are going to like that. But the problem is, again, in the data that we have, and that's what I have to go by, is everything looks pretty weak. Again, that web data moving from -7 to -22 in just a quarter, that tells me that it's really accelerating to the wrong way. And direct to consumer is such a dream as an investor for this company, right? Cut out the middleman, make a lot more higher margins on every sale that you do. And for that to not really work out as well as they'd hoped, that's really disappointing as an investor. So I think that they have a lot to overcome when it comes to just the numbers and the facts of the situation. Now, they can talk about, you know, optimism and what may be, you know, change of direction, innovation, all of that, cutting costs. And maybe that'll you know, go over well with investors, but I just think that the expectations are starting to ramp up pretty high. And you know, based on the data that we see, web visits and happiness as well, there's a lot of unhappy people with Nike around the whole Caitlin Clark thing. I can get into that if you want, but overall, it's just they're not happy, and it's starting to spill over into the company brand wide. So I'm concerned. You know, I'd be betting to the downside just based on this run up. Tells me high expectations, but the data says it's nothing there to back it up.
Yeah, I think they're getting a little bit of benefit of the doubt since that 30-year-plus Nike veteran Elliott Hill is coming back as CEO, replacing John Donahoe, who's kind of made a mess of things at this point, Landon. So you guys are bearish on this one just because it's almost filled that gap here. But what if this is like a kitchen sink type quarter where Elliott, you know, he comes in, Elliott Hill, and says, hey, we're throwing everything out, we're redoing it, you know, we're re-innovating, we're not going to release mass amounts of these shoes, we're going to make them wanted. And then what if China recovers? Is that the bullish scenario in this earnings?
Yeah, I mean, if the play
I forgot all about XP.
Then, and that's the bet, then he does something like that, then that's going to, you know, that's going to reinforce all of those bullish bets that have been made over the last 3 months, and those people are going to be firm in their holding, and then more people are going to jump in. So I think it's really, I guess what I'm saying is, when it comes to just this quarter, it's very clearly bearish on the data, right? The data's not great and the stock's going up, so that's very clearly bearish. I think it has the only way that this stock does well on this earnings report is in messaging.
That used to be one I traded a long time ago.
So this is not just a here's what happened last 3 months and here we go.
Oh gosh!
Numbers. I think that is a clearly bearish signal.
What happened
but
here?
If it's all about the future and here's how we're going to change things, kitchen sink, as you say, then that, you know, that could totally outshine or outweigh all of the numbers, and then, you know, it could be a positive reaction from the market. So it's kind of tough because everything that,
if I remember right, they made pipes in China.
And then there's this X factor coming in, and you know, it's kind of like when Tesla reports and Elon Musk takes the stage. You're like, well, he's probably going to spin this well. I don't know if Hill's going to do that, but there's definitely a lot of optimism surrounding him. So that is the X factor in this.
Always clean as Jim.
On it, but I'm going with the numbers, and we'll see if he proves me wrong for investors' sake. I hope he does.
All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, Kev, we got option market pricing about a $6.50 move. I mean, I get what he's saying.
Oh,
it's
sure.
rallied back on, you know, metrics that aren't improving according to them.
Right. It's hard to measure guidance, right? It's hard to get a forward look at guidance. And guidance is a huge part of hopefully what they're about to put out there. So how do you play that? Well, what I looked at, I took advantage, Tom. Look at the front month implied volatility, 100 implied vol. Look at the second, 59. Look at the third, 49. So I looked at the 2-week, I looked at the 1-week calendar spread. In this case, I did the call calendar, Tom. Went to the 95 strike, and it's trading about 13, 14 cents, right around there. So that dispersion between the front expiration, or the front implied volatility, and the second makes for a very inexpensive way to play this to the upside. And by the way, you can play this to the downside too. Right. If you were to do, say, an 85 or a calendar, put calendar, it's probably a very similar price. This one's trading about 13, 14, 15 cents.
Yep, really inexpensive here. Let's look at this one. Buying the October 11th weekly cycle, so 10 days to expiration. Buying the 95 strike call, sell that same call in the October 4th weekly options that expire just 3 days. We've got 15-cent debit. The debit you pay is going to be your risk, so $15 per spread. Yeah. Now you got profitability on this risk profile that's showing like you can make almost $300. What's when you look at this, Kevin? Because the risk that you pay, the debit you pay is going to be your risk on this one. Break even's about maybe $89, $90 on the downside, maybe 100 to 102 on the upside, where you can still remain profitable. But you look at this, and if it expands to 50 cents, that's a really good trade based on the risk that you took, right?
Exactly right. I mean,
Meta did hit VWAP.
That graph, that's expiration day at the bell with the stock sitting right at $95. So that looks very romantic, but don't bet on that. Bet on if you get a double or triple, if this thing starts trading about 50 cents, that's a big win for the amount of capital that you put up in terms of percentage. So that's the dispersion and the implied vols give a unique opportunity if you're right, Tom. And there's the key. If you're bullish,
Adobe's down 13.
You're not going to do well. If you're bearish and it goes bullish, you're not going to do well. Can you do the double counter? Could. Yeah. It'll probably cost you,
Man, Adobe's took a pretty good spanking.
Range, high 20s. But this is a name. Here's one last positive thing. You look at a history of their PE ratio, it's been in the 30s a lot of its history. It's under 24 right now.
Right.
Historically cheap.
Yeah. So in that valuation, kind of reflective of the slowing sales that we've seen. So good look at that. And I like the flexibility of calendars, like you mentioned. If you're more bearish on this, maybe you do, the 85 or 80 put calendar to the downside. So a little bit more flexible with this strategy. All right, got some breaking news. Israel Defense Force missiles have been
Israel launched more than 100 missiles.
Israel, we're talking anywhere from maybe 2 to 5 minutes where they may hit. We're hearing reports of up to 100 missiles fired, so we're going to keep that on your radar when we come back from this break. Stocks have started to sell off over the last 10 minutes since that was reported, so we'll keep you up to date on that when we come back right here on Fast Market.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Be careful in the market.
market overtime on the Schwab network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to
This guy.
to save this market.
Instead of taking cues, set the cues.
Be careful.
Nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector. Now there's a market for every single one of these people. There's a market for you. Market overtime on the Schwab network. Thanks for tuning in.
Welcome back to Fast Market here. We're going to
Money needs nuts, right?
Equity markets, which are under pressure right now, getting back towards session lows. Reports over 100 missiles fired from Iran into Israel at this point. There's reports that sirens sounding across Israel.
Damn.
There's also some reports of massive explosions. Ballistic missiles can be seen landing across Israel on live cameras. According to CNN,
I don't even want to see it. I don't want to hear about it. This could have all been prevented.
Impacts across there. So you're seeing equity futures here. S&P down 1.25%, Dow off about 0.6%, Nasdaq now down nearly 2%, and the Russell 2000's down 1.7%. So we'll keep you abreast of this news as it's impacting our markets at this point as Iran is firing missiles. All right, let's bring in our next guest. We're talking Lululemon. We kind of wanted to make this an athleisure kind of theme here. Let's bring in Kevin Green, senior markets correspondent here on the network. KG, slowing sales in their core U.S. Sales has been the culprit here for Lululemon, down 47-48% so far this year. What's your take here on Lulu?
Yeah, it's not only here in the United States and North America, but also when you're looking at China. Now, when you're looking at the actual comps, they do a favorable 34%, but even then, a little bit
that's not good.
Whispers expectations when it comes to sales there. But here in the United States, as well as in Canada, they have been pressured when it comes to margins, and their ability to try to move prices to the downside is something that they're just not really known for. And unfortunately, they're kind of losing some market share when it comes to competitors. So I think when we have the next earnings announcement that comes around here, you really want to hear about not only just the North American sales, but how they're able to preserve margins, and if they're going to have new product offerings that are going to be able to kind of spark or reignite the enthusiasm here in the United States. Now, once again, kind of going back to the China factor, if they do see a nice little bump or exceed expectations when it comes to the sales within Greater China, that can be a tailwind and maybe offset some of the near-term risk that we are seeing here in the North America segment. But overall, it's been a very tough go at it when it comes to Lulu. It just seems like they kind of lost their luster a little bit when it comes to the brand recognition and trying to keep market share from some of these lower cost competitors out there.
Macro seeping in, Kev. Competition seeping in. Their first half of the year, revenue growth 9% versus historic 16.1%. This is a story of depressed revenue growth rates. This is a story of their cautious full year 2025 guidance. This is a company that is, the horrible words when you talk about companies.
Be extra careful right now, being this is going on.
And you're seeing this right here. The question is, can they turn it around? And how cheap does this stock get? Currently trades now at a 20 PE, Kev. That seems really cheap for a company that still says they're growing.
Yeah, well, you also have that question too, is the stock actually priced a little bit too high in the past, and maybe some investor enthusiasm kind of exaggerated those multiples? I think that's a really good question. I think it's coming from the competitors within this space. I mean, you have lower cost options, especially if you go on like Amazon. I mean, there's hundreds.
I'm going to go make my other burrito and I'll be right back. But just be extra careful, everybody.
And when you're looking at kind of the innovation, I think they did roll out one, pant, if you will, that just was not a hit. So I think they have to innovate continue to look at other avenues. The digital segment could be something that they could work on. Maybe some additional partnerships with some of these, athletic apps and things of that nature, like a Peloton, could be something that would be an offering for them. But you're right. I mean, you're seeing slowing sales. I think the enthusiasm has definitely been lost for this name for now, but it doesn't mean that they cannot turn it around. And I think the China expansion story, if it is going to hold and the stimulus measures are going to hold, maybe that can offset some of the near-term weakness that we are seeing.
The 200's almost dropped all the way back down to the SPY right now. So
Yeah, they said
if we break it, 52.20 at the most.
Down 3% year over year last quarter. China's sales were actually up 34%, but they gather most of their revenue from here in the U.S. So maybe that expansion can offset some of the decrease that they're seeing here in the States. All right, great stuff. As always, thanks to Kevin Green, Senior Markets correspondent here, breaking down Lululemon. Good theme type of discussions here today with athletes.
Looks like Iran needs to say goodbye-bye.
Lululemon's going to probably move.
Nike's moving?
On these earnings, Kev. So I looked at the same kind of strategy that Alex Coffey did also. We've seen the weakness in Lululemon, as I mentioned, down 48.4% so far this year. It's been under pressure from year-ago levels, down 28%. This stock was trading $516 last December in 2023, Kevin. So we've seen a massive fall. It's bounced off the lows of 226. So I looked out in the October 25th weekly cycle here, Kev. So 24 days to expiration, where you can take advantage of maybe this pullback. If you look at implied volatility, IV percentile rank is in the top half of what we've seen over the last 52 weeks. And we've seen this big 2.8% pullback today. So if you think this thing's going to rebound or at least consolidate, maybe move higher, this type of strategy may work out in that type of environment over the next 3.5 weeks. Selling the 255 strike put and buying the 245 strike put. You're collecting roughly, I've got about a 280 credit on here. The credit you collect is what you can make. It's trading to about $3 right now. So do maybe some price discovery on trades with wider bid-ask spreads, names and stocks that have wider bid-ask spreads on the calls and puts. But this is selling a neutral to bullish $10 wide put vertical, collecting roughly about 280 credit on it. That takes your break even down to 220 or 250, 220 to the downside, Kevin. So you're giving yourself those probabilities that we talked about, right?
Traders like to round, so we'll round this to about a 62% chance of finishing out of the money. Remember, a short put vertical, that's high probability, collecting theta, about $3 a day. Remember, you've got some time here. That number will get bigger as you get closer, and your risk defined. $2, between $2.80 and $3 for a $10 spread. The risk is the difference between the credit and the width of the strike. So if it's $3, it's $7 risk.
Yep, $720 if you collect 280 on this one. One of the key points that we didn't talk about, Kevin, was the fact that I like to look at, when stocks fall like this, start looking at some of the technicals. 50-day moving average, about 258 at this point. So this is actually below that. Does that act like some support, which it has over the last week and a half? So start looking at maybe some other things within the market to kind of guide you as far as levels that you might want to look at. But definitely a higher risk or higher.
There's another Marie Howard.
On these out of the money.
The only time volatility trades higher than this is during an earnings event.
Yep.
An earnings event, this is a high volatility.
Yep. 24 days in that, so you've got no risk as far as earnings goes. There's no event risk on the earnings because that's past the expiration date on this one. All right, good look at this. We'll continue to watch the news on the ballistic missiles being fired off, but that's going to wrap up Fast Market at this point.
Not
Stick
good.
around, though, right here on the Schwab Network. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying,
away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
We are seeing some selling today that's picked up just over the last 30 minutes or so on some Middle East tensions here. So right now we are getting some developments. We'll see, of course, right now the headline is, per the IDF, that Iran is launching missile attacks against Israel.
Ugh.
That's part of the reason we're seeing some of this pressure. I think we're just mostly attributing that to some of the selling because we got this news and things started to sell off a bit.
Yeah, there's kind of, a wide variety of reports coming in. The situation is obviously ever changing. You did mention that Israel's IDF has stated that rockets from Iran have been fired at Israel. Sirens, of course, sounding across Israel, but then it does look like just the last few minutes or moments, there are comments from Iran's state TV saying that Israel will face attacks if it responds. And that they've launched tens of ballistic missiles at Israel. Reports from Israelis' army radio suggest over 100 ballistic missiles. So we'll see. The market is certainly not on its lows, but you can see that chop. Geopolitical tensions and uncertainty.
Still doesn't look good there, Alex.
This type of reaction, right? You see risk assets lower. You see commodities like crude oil making a jump higher. You see gold making a jump higher. You see risk-off assets like the treasury market indicating
they've been boasting about how oil was pulled back.
This is a classic, market response to an event like this. Still a lot of unknowns at this point.
There are still a lot of unknowns, and like you said, we are seeing some of the individual commodities higher, also the VIX elevated, but most of the major averages now lower on the session, and substantially so, with some of that pressure led by the NASDAQ down 1.7%. But as always on the show, we will step away from some of the macroeconomic situations that are happening overseas. We'll be focused on these individual movers. We'll kick things off, as always, with an upvote and downvote. We'll chart and trade our upvoted names. For FOMO today, we're revisiting Apple. We talked about some of the positive analyst commentary yesterday. Today, we're turning to more of the concern with some of these iPhone 16 lead times. We will also be previewing what we can expect from Tesla's deliveries released tomorrow at around 8 a.m. here Central Time. But also, mind you, so far we've already gotten the Chinese EV deliveries, which have been crushing it. So NIO, Li Auto, and XPeng having a pretty decent week, at least over the last two sessions. We'll close things out here with HPQ with some analyst feedback, a name that has been actually, I'd say, able to hold on relatively well, but we'll discuss what Citi thinks later on with Kevin Green in that downgrade.
Yeah, it's the other half of the company. We just recently, within the last week or two, we're talking with George Tillis about HPE. So now taking a look at the other side, the hardware side to Hewlett-Packard. Let's do upvote, downvote, though. Of course, as always, not endorsements, not recommendations, stock specifics here. We're getting late into that earnings season, or that crossover from one to the next, because we got Nike on the calendar here to kick things off, Jenny.
I know, so Nike to me is always one of the tail ends of earnings, but it also to me could mark the beginning of bank earnings, which I believe are now just like a week or two away. So right now we'll focus on Nike, though, because Nike has earnings due out today after the closing bell. And we actually did get a report that they have oversold their popular footwear franchises. They're been growing their Air Force One, Air Jordan 1, and Dunk, and three of the largest multi-billion-dollar footwear franchises in the industry. But they oversold actually their shoes and diluted their cool in the process. This is according to the Wall Street Journal. They've been aggressively reducing their prices and also reducing their supply of those franchises to save some of their most iconic sneakers, but Nike is still making more of them than it can sell. I think that the story for Nike is going to be very interesting because it's been disappointing all year long. I mean, it's not necessarily primarily a Nike story. Lululemon has also been a disappointment. We'll get to that one later on, but down about 18% on the year. And we know that this name has struggled. We're not expecting this earnings to necessarily bring much relief, as the company's news that their CEO will be retiring is also, I'd say, weighing on shares a bit because, I mean, obviously not today, but not necessarily seen as perhaps like a great time to exit. Also, Nike shares have been, again, pretty disappointing, and I think that the overall demand story has been questioned when you have the rise of these newcomer brands like your Ons, also your Hoka's, of course, owned by Deckers. So there's all these new players in the athletic space, and I just think Nike isn't the dominant force it once was. Well, obviously, we'll get more financials
because they went woke, baby.
Report today after the closing bell.
Yeah, I mean, their guidance calls for revenue to fall 10%, and so it tells you what you need to know about Nike, which is the company's been struggling. It's trying to make a comeback, but that chart, does more than I can do to tell you sort of the year that Nike's had. It's seemingly been more than just 1 year of struggles. This stock was nearly $180 a share 3 years ago. So it's going to have to, turn around, and it may take a little bit of time, but you got to start somewhere. We'll see if this earnings can be the moment that happens. Next one on the list is Lulu. So not really super far from Nike in terms of the type of company. It's fallen on its own struggles as of late. It's pretty much sticker shock when you realize how much this stock has fallen this year from its highs. It opened the year around $500 a share. It's basically lost half that value over the last 9 months now.
Okay, and I have to say that I am probably like the biggest Lululemon enthusiast out there because it used to be the only place I shop, and I've stopped shopping there because they've stopped making new things, and I'm like, wow, look at the stock. Obviously, I'm not the only one in that thinking. Maybe they need to revamp some of their clothing offerings right now. But yeah, if you thought that Nike's chart was disappointing, Lululemon's is astoundingly disappointing because we're down now 48% on the year. We've pulled back about 49% from 52-week highs. Shares are off of lows by almost 17%, but gosh, it has been a painful move to the downside for Lululemon, and unlike Lululemon on earnings calls, we've only seen more and more of this downward pressure, where it seems like in the past, historically, from watching this name very closely as I do, earnings have been a bit of a lift. It has not been the case as of late for Lululemon. So a very different company than I've been used to following. Morgan Stanley today, though, lowering its price target to $314 from $326, keeping an overweight rating. And they said that in advance of Lululemon's upcoming China investor event, which is next week, they conducted a deeper dive into the business positioning as well as the potential growth opportunities in that region. And they came away seeing actually now nearly unprecedented success, which they see as a function of the company's thoughtful and methodical entry into the country. However, while impressive, the work in China also shows the international forward expectations are too high, leading the firm to trim their midterm estimates, which I think is an interesting way to position. Like, they acknowledge the strength in China, but say, hey, maybe we're already pricing this in here.
Yeah, it looks like the general risk off today is probably more the influence, but it doesn't help when you do see that price target slashed. I will say, though, this Morgan Stanley analyst, which is Alex Stratton, is kind of just getting in line with many of his peers. The consensus on the street is around 314.28, as compiled by Bloomberg, and 60% remain in the buy camp, 30% in hold, and just 10% in sell. Now, a couple of the sell equivalent or underperform or those type of ratings are BNP Paribas and Jefferies. Both of them have price targets that are substantially lower than the current share price. The Jefferies analyst 220 and the BNP analyst 194. So if that's the take that path, there's still perhaps even more downside in store for Lulu going forward. Next on the list is Pinterest. It's sort of a next-gen favorite. Jenny, we've talked about this company a lot over the years. I know that there's a company that I like to talk about more that I've never really even used, other than when I accidentally click on like a Google results for something. But it's a fun story.
Okay, and I feel like this is an Alex Coffey favorite. I mean, no, it's a me favorite as well, but I feel like this name does get you very excited. Considering, isn't it like the most skewed demographic? It's like 8 in 10 of Pinterest users are female, so at least
checks out.
Maybe you represent like the.
You might be making that up, but it checks out to me.
I'm pretty sure it's relatively so high, and actually I believe their user base is also coming now from like a ton overseas. So
Tiger was another good one that I used to trade. TIGR from China. Oh my.
Their monthly update, they did say that they have a buy
It's almost up 100%.
target. They do believe the company is set to continue to compound its sales growth at a mid to high teens % pace and drive steady adjusted EBITDA margin expansion over the next 5 years. But Pinterest's story has been, I would say, maybe a bit more muted when you look at like some of the other social media peers. We're down about 11% this year, trying to recover really over the last month or so, which has been at least beneficial to the fact that we are off of lows by almost 40%, but still off of 52-week highs by 27%, and I mean well off of all-time highs in this name. I mean, it's by 65% now. I believe the all-time high is $66 a share, just to show how far we've fallen.
A couple interesting facts for you. So this is for the year of 2023, though. 80% of the revenue, U.S. and Canada, but only about 20% of the monthly active users. So they're squeezing every penny out of U.S. and Canada, North America, but they're growing tremendously in terms of an active user base overseas. So perhaps something to think about if they are able to monetize that area a little bit more, or perhaps get more users in the U.S. online. Seems they have two kind of areas of attack they can focus on. Get more people in the U.S. to make a ton of money off them, or find a way to make some more or extract a little bit more from some of those 80% plus users that you have from other places.
Okay, and I misspoke. Their all-time high is $90 a share, so actually a bit worse than 66. That's a good point, because I did know there was that international component, because, again, I'm like, where is all of this money coming from? I think I'm like the most loyal Pinterest user I know. I still go on Pinterest all the time, but I'm not exactly sure how they're making money off me. I guess it's probably my data that they're collecting. But last time today is also another one that is, I'm sure, definitely collecting some of our data, that is Shopify, as Barclays did raise its price target to $70 a share from $65. keeping an equal weight rating as part of their third quarter earnings preview for the overall web tools group. The group has continued its strong outperformance now year to date. They also did raise their third quarter volume estimates for Shopify in light of improving consumer data in August and September after a more cautious read they noted back in the month of August. So Shopify, a very different story here because this name has, I mean, gosh, when you zoom out, it's actually very similar to Pinterest. But when you look at it on a at least year-to-date basis, it's up about 1%. We're off of lows by 73% nearly. But again, yeah, zoom out and look at that 5-year chart because that shows, I think, more of the story of Shopify.
No, it really does. And this is a company, though, that for the longest time seemed to hang in the background and is now very much more out in front of you now. I think it was
It's Christmas.
About how you can get the Shopify app now, keep track of all your different shops. So they're doing a better job of showing you they're there. And they still, of course, are a really key part to the e-commerce infrastructure, which, like it or not, seems to be the future for where we're doing business more and more. On the macro front, not a lot has changed from an update standpoint, Jenny, but it does look like, according to Iran State TV, that they do say Iran is likely to launch another attack on Israel, so this is just sort of wave one, and that the attack is ongoing. Markets have sold off just a little bit further, and you do see a little bit more of a spike in crude oil, but all of this within sort of the range of where the trade's been throughout much of the day.
Yeah, like you did mention, some of this pressure sort of picking up here, but not necessarily things necessarily sliding by any means. We'll keep an update on the macro front as well as the situation happening overseas. But we'll be diving more into our upvotes coming up next. We'll be looking at Pinterest as well as we will also be looking at Nike, of course, ahead of their earnings. Stick around, Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chartmaster segment. Today we are diving into the technicals on both Nike as well as Pinterest. And so here joining me is the Chartmaster himself, Rick Educator, to talk about Nike first, because Nike has earnings out today. Of course, they're like our last savior of earnings. And so I'm excited for this one because I have to say that given the comparison to Nike between Lululemon right now, Nike's actually looking like the winner, and I would have never thought I'd be saying those words. So Rick, walk us through what you're seeing from a technical front.
Well, you know, for the most part, this chart has been trending down since we hit those yearly highs at 123.39, where our blue line begins, trending downward across this area here where we had some consolidation and then ultimately moving lower. Big gap downward on earnings here. We had some, some more positive news, CEO changes, etc., and then a moderately steepening uptrend. You can see we had our purple line here, which was a more shallow slope and has since given way to our white line, which is a more steep slope. So we broke above our previous highs right here near 85.39. We also saw some heavy volume when we had this gap up here, which speaks to conviction on the part of traders. So that's more of a positive sign for the bulls there, that you want to see heavy volume on big moves to the upside if you're bullish here. So, today, not really doing a whole lot, not any big changes in our price action here so far, mostly just sticking to the uptrend. We're above our moving averages. The moving averages are trending up for the most part. The only holdout is that we have the purple 252-day EMA shortly to the upside here. So that would be kind of the next hurdle to clear for this stock.
Yeah, so as far as now when we look at the overall momentum and obviously hoping for some type of upward recovery here for Nike shares, what are you seeing as far as RSI?
RSI, our measure of momentum here, is showing some interesting behavior. First of all, we were spending
got a shoulder line.
Amount of time in that oversold area.
Might see a double bottom on the SPX.
After this earnings event here, really took a beating after that point, but really didn't move that much lower. So we had the initial severe move to the downside, then kind of bottomed out near the mid 70 or like the low 70 range.
Fat cats are back in 7 minutes. I ain't traded that much since I got out of the SPX. Because this could get real bad. I'm hearing 200 missiles now. So I just wouldn't be trading too much until this is all over with. There must have Nike earnings coming out or something, because they keep talking about Nike. I personally never wore a pair. Fire, oh boy. Somebody's going to get nuked. I'm not sure if the double bottom, I think it will, but I'm not sure now. I mean, this is uncertain times. I always said that if this gets out of hand, it could get a lot worse. And we're definitely at all-time highs, so there's a lot of negative stuff going on right now. We got that strike. They make real good money, what I understand. I'd almost think if we had a president that could talk, he'd probably say something and it'd help the market a little bit. I don't know if I want to take the chance. If we bounce, I'm going to look at the 57.15s. I would rather do the 57.20s if it pops up above that one line. Let's see what CNBC is saying here. They're probably not talking about it. Yeah, they are.
Supreme Leader Khamenei ordered those strikes and has warned that if Israel dares to respond to the strikes, that there would be a so-called crushing response. We got news from a Jaffa neighborhood in Tel Aviv that there was a terrorist attack that killed, a shooting that killed at least 4 people and injured more, and some concern that there is another terrorist situation unfolding in a hotel nearby. We know that President Biden has issued an order to U.S. military to aid in Israel's defense, to shoot down any missiles. He had convened with a meeting with Vice President Kamala Harris and the National Security Team to talk about these plans. We know that that cabinet was meeting, and that Secretary of State Antony Blinken, who was expecting to issue some press statements, has postponed that so that he could respond to the situation that is unfolding in Israel. We also have learned that Israeli airspace has been shut down, so there are no flights in or out of any Israeli cities at this time. Iraq has also shut down its airspace. As we get more information in about the situation as it's unfolding in Israel right now, we will bring it to you, Kelly.
Vanessa, thank you for now. Contessa Brewer. Iran's missile attack on Israel has oil prices spiking. Let's bring in our own Brian Sullivan, along with RBC's head of global commodity strategy, Halima Croft. Brian, we see about a 5% pop at the moment.
Yeah, and I'm really eager to hear what Halima has to say about the geopolitics, because she's one of my go-to sources, as you know, Kelly. But let's just talk about the math. This is the biggest oil move in just about a year's time. We're up about 5.5%, but as a 4.5% now. But as I said earlier on Money Movers, I think that oil could have been up 10 or 15% had the U.S. not been in record oil production. If we were at 8 or 9 million barrels a day, not 13.2 million like we are now, this type of tension, this type of fear, this type of attack would have had a far outsized move on the price of oil. But because Iran is about 3% of daily production, about 12% of OPEC's daily production, and the U.S. is doing 13.2 million a day, Kelly, I think that has mitigated. We're not at 80, we're at 70, and I think given what we're seeing in terms of the missile attacks, a little surprising, but the U.S. production muting that. I will say this, and this is where Halima knows a lot more than I do, which is 20% of the world.
We bounced up off that double bottom.
Iran tends to be the one to agitate, sometimes dropping mines, stealing ships, etc. If they decide to get aggressive, to sort of force Saudi Arabia, the UAE, and others to come to the bargaining table, then we could see a much larger move than we are seeing in oil right now. But want to hear Halima's take on this.
I think that's fair. And Halima, as I bring you in, I also want to add to Brian's comment that Saudi already indicating its decision as well to try to put more supplies into a market that has been basically oversupplied, probably mutes the impact that we could see here. So curious if you could address that issue as well, as Brian said, an escalation that could start to involve the Strait of Hormuz.
VIX is over 20.
Yeah, absolutely. I mean, we do not have an undersupply situation
There's
in
Lima.
the market at present. However, I think there has been a lot of complacency about this war. A lot of oil market participants said we have not seen a disruption, we did not believe there would be a disruption, and hence it was not priced in. And so the real question, I think, right now, Kelly, is what is the Israeli response? You know, Contessa mentioned 200 missiles thus far have been fired into Israel. Do the Israelis respond in kind? Do they potentially target the Iranian nuclear facilities? And do they potentially target the Iranian oil facilities? Iran is producing at a 5-year high, over 3 million
Hit the
barrels
oil.
a day. I think we do need to think about a scenario where Iranian oil supplies are at risk. And certainly in 2019, the Iranians did target significant regional energy infrastructure. They hit tankers off the coast of UAE, they hit key pipelines, and most importantly, they hit Saudi Arabia's Abqaiq facility, taking off half of that country's production in order to internationalize the cost of U.S. sanctions. So again, it's a very fluid situation, but there is significant oil at stake if Iran wants to get involved in terms of like raising the cost for the West for this war.
Brian, I think that's part of what people are weighing at this hour is whether it's the Israelis, to what extent the U.S. is involved or tacitly supports this, the striking of the nuclear facilities, of the oil facilities, and if that takes place, would their next step then be something, as Halima indicated, or with the Strait of Hormuz?
Iran has enough enriched uranium, about 60%, toward a nuclear weapon. They recently said they don't want to do a nuclear weapon. We can believe them at face value or not, but they continue to enrich uranium. They continue to raise their oil exports, Kelly, because they're having more money. I mean, they're technically under sanction, and they've been selling more oil under sanction, so their foreign currency reserves, their financial ability to support the weaponization of Hezbollah and Hamas has only increased over the last couple of years. Okay, so that's on the political side. Back to the oil side, I think there is a measure of comfort, and Halima can correct me if I'm wrong, in the market, that Saudi Arabia has enough, they could easily throw another 1 or 2 million barrels of oil back on the market relatively quickly. If something were to happen to the Iranian oil ports, like you saw Israel light up Yemen's port and oil receiving facility a couple of days ago, if Israel were to do something similar to Iran, I can guarantee there'll be some backdoor communication with Saudi Arabia and maybe some others to say, listen, if we do this, are you able to fill that global gap, right? America can't do it. Fill that global gap and replace any lost Iranian barrels on that market. I can guarantee you, and this is Halima's world, there's a lot of back channel communication going on right now, because the one thing the White House does not want is some kind of super spike in the price of gasoline 1 month before an election.
Indeed. Halima, add some context to that if you can.
I mean, certainly we would expect the Biden administration to be calling the Saudis. They are the ones sitting on the spare capacity that can be easily deployed. So absolutely that call would take place. The real question there on this sort of uncharted waters is, what could happen in such a situation? Would Iran potentially then target other countries' regional energy infrastructure? Saudi Arabia normalized relations with Iran in March of 2023. I think that has protected Saudi Arabia from Iranian attacks on their infrastructure. The Houthis have not attacked Saudi infrastructure. And so the question is, how much do countries in the region want to be seen as weighing into this war? Again, we will ask Saudis to put on barrels. The Saudis have been responsive to those requests, but all these countries in the region are also going to have to weigh how much they want to get caught in the crosshairs of this conflict, because again, in 2019, these countries themselves were targeted by Iran.
Yeah. Halima and Brian, for now, thanks. We'll be checking back in soon as we watch the price of oil jumping out. As to Halima's point, a conflict that many expected maybe wouldn't reach the point that it has now reached. On that note, we are hearing the Israeli military saying citizens are permitted to leave protected areas throughout the country. For more, let's get Contessa Brewer with an update on what we know.
Yeah, I think the way that you could read that or interpret that at this point is that the Israeli military is giving the people of Israel an all clear that they are able to leave their bomb shelters where they were taking place as rockets and these ballistic missiles were incoming across the skies of Israel. You were watching this earlier unfolding in Tel Aviv. Israeli army radio said about 200 missiles came in, and a military spokesperson says and characterized the attack as serious and said it will have consequences. The escalation in the back and forth between this is ramping up with Iran's senior leadership warning that if Israel responds to the rocket attack, there will be more violence. There will be a crushing response, they say. This in and of itself is an escalation of what we've seen as Israel has rooted out and targeted Iran-backed Hezbollah, killing the leader there, having a ground incursion into Lebanon, crossing the border, and even some what they call precision strikes outside of Beirut today with Hezbollah in the target. And there you're seeing the incoming ballistic missiles above Iran. In the meantime, President Biden has ordered the U.S. military to aid in the Israel defense. to shoot down the missiles. We know that the U.S. Defense Secretary has spoken to his counterpart today in Israel, and you have to believe that there will be a lot of strategy going into how best to respond to this. But again, the latest that we have, Kelly, is that Israeli military spokesperson says this rocket attack will have consequences.
We're also hearing that perhaps, at least at this hour, they're not aware of any injuries from the Iranian missile attack. Again, there have been other issues. There's been a shooting, as we understand, in Tel Aviv with casualties. For now, contested. Thanks, contested Brewer, bringing us the very latest. Defense stocks are on the move with this development. RTX, formerly Raytheon, hitting an all-time high today. It's up 2.5%. They make the missile defenses that Israel and allies would be using to defend against this ballistic missile attack by Iran. More after a break.
I hope they did.
Welcome back. The defense stocks are on the move today as Iran launches missiles in Israel. Dom Chu is standing by with a closer look for us. Dom?
It has been, Kelly, one of the proxies that folks in the marketplace look at to gauge just the amount of geopolitical tension there is out there. And there has been a lot, but it's been measured. I will show you from a macro, big picture perspective. This is the iShares U.S. Aerospace and Defense ETF. The ticker is ITA. It is up 1% today, so it is stronger, but again, not like a panicky run towards defense stocks. You are seeing for the better part of this year-to-date period, this blue line is the 50-day average price, the medium-term trend line, and we have found kind of support or trend line all along the way higher. It just gives you an idea that geopolitics is very much a part of that story. Now, as we break it down, and by the way, I'm going to call this right here, I'll just put a blue star. It is a record high for this ETF, by the way. A couple of the names that are also components and hit record highs so far today. Big names like RTX, Raytheon Technologies, you can see up about 2.5%. Again, stronger, but not a panic move higher. We're still now solidly above its longer and medium-term trend lines as well. So RTX, one to keep an eye on, and we'll put a star here because it is record highs there. Also, another one to keep a close eye on.
What are you looking at?
Massive
SPX?
contractor in Lockheed Martin. Those shares up 2.5%. Again, solidly above its longer and medium-term trend lines. Geopolitics a part of this discussion as well, so keep an eye on that. And one other place I would look at is Northrop Grumman. They actually do missile defense systems technology as part of their business portfolio. Northrop Grumman's up about 3% right now, and Northrop Grumman, by the way, is just about $7 away from its own record intraday levels at this stage right now. So those are some of the names that traders are keeping a close eye on right now to see just how intense this could get in the future with regard to the access to defense and everything else that goes along with that heightened geopolitical risk, Kelly. I'll send things back over to you.
Be curious, Dom, if we can show the broad markets, because today the Russell 2000s are underperforming, and we were just having a conversation with Steve Sosnick, who said he's still, plenty of people want to be in this for what they perceive is the big rotation. It's out of the NASDAQ, but their NASDAQ and Russell are falling in tandem, and we're both the worst performing effectively.
In essence, what you
XLE
are seeing
had
right
a
now,
good
Kelly, is
day.
this notion that in this kind of an environment, it is a flight to safety. In safety assets, you're seeing a bid towards government bonds, yields are falling, which in normal times, hypothetically, should be good for smaller companies because they're more dependent on debt. All of those things kind of go out the window a bit when you're talking about uncertainty around geopolitical risks. And for that reason, you're seeing the moves in underperformance in places like the Russell 2000 and the tech-heavier NASDAQ Composite Index. Although, in the past, people have used those mega cap Mag 7 type names as quote unquote safe havens.
Sure.
So whether or not that plays out this time around, it's also interesting that when you guys talked about the VIX before, we are not seeing a panic type move that we have seen earlier this fall in the VIX. So it remains to be seen, Kelly,
Right,
whether or
it's
not
up,
this
but-
is going to have legs or not.
Sure, nowhere near levels of early August.
Correct.
All right, for now, Dom, thanks. Dom Chu. Let's turn now to Sheila Kahyaoglu of Jefferies to pick up on what Dom was just discussing in terms of those defense names. Sheila, a couple of all-time highs today, but a lot of investors are wondering if this is an overreaction to what we've seen taking place with this missile attack on Israel, especially if details come in and this represents closer to the end of the conflict than the beginning. Perhaps it's too soon to be making those bets.
In general, investors have been positioned very bullishly, given what the S&P has been doing, making all-time highs several times this year. So clearly today we're seeing that rotation reverse a little into the defense names and out of the more cyclical names in our coverage, like the Boeings and the GEs of the world, which have a little bit more data. In terms of the defense budget, though, what we're seeing is a continuing resolution is running through December 20th for the fiscal year 25. That starts today, essentially, right? So basically, we're seeing the can kick down the road until after elections into what the U.S. budget does. And our base case for that, including inflation, is about 3% growth. And you see about a 2% plus up from what we're seeing internationally in defense budgets. What we've supplied to Ukraine since 2022 is about $60 billion. And of course, funding to Israel with an $8.7 billion aid package on September 26th. So our base case for defense spending is in the 3 to 5% range. Of course, the events over the weekend and over the last week, as we get airstrikes to sites in Lebanon and Yemen, clearly are spreading the conflict.
No, and I think you're right to turn attention back towards the defense dollars that will be committed to these projects, which is ultimately what funds a lot of these names. If someone said to you, okay, RTX and Northrop, I want to own these names because they provide this or that component to these conflicts, does that simple investment case make sense to you, or would you point to other parts of that story that might dampen enthusiasm?
Certainly for me it does, because I hold ratings on those names you mentioned, Kelly, Lockheed, and Raytheon. Of course, Lockheed benefits. Their missiles and fire control segment represents about 20% of sales. That's expanding 11% this year, so it's almost 2x the budget. But it's only 20% of sales, and they have a loss-making program in there, and that's about half the growth. So our hold rating behind these names is they have a lot of revenue upside potentially, but it's coming at a discounted margin. So you're not seeing the EBIT growth come through. In fact, you're seeing some program losses across Raytheon, across Lockheed, across Boeing. They're major fixed price programs. So we want names with operating leverage, whether that's an LHX or General Dynamics. They also have munitions and missile businesses exposed to that. So a defense prime with operating leverage is preferred, given that they can execute on the top line and the bottom line.
That's a really interesting point. And Sheila, just to make sure people can catch you since you're on the phone, run us through a couple of those names that you do like because of their operating leverage or you think are better positioned right now, and maybe it has nothing to do with the events of the day.
Yeah, I think in terms of defense spending, our base case is 3 to 5% growth. So we want names with growth above that average and operating leverage on top of that. So General Dynamics, it generates about 40% of sales from business jets. That could be a cyclical upside. LHX is all about profitable revenue growth, so they're focused on growing EBIT dollars above revenues. And then I think a name I'm going to throw in there is Parsons. It's an IT services company. This name has gone up 4x since its IPO only 4 years ago. And they have a great management team behind it. This company's grown 25% of growth, top line growth per quarter over the last 6 quarters. And they do government services for the government. So think cyber services, software. So out of the hardware zone into the software. Booz Allen's another name where we have a buy rating. Again, they're about 25% cyber software. So going into some of the software defense names as well in terms of not necessarily bullets, but more bites.
Yeah, just to rattle this off again, General Dynamics, LHS, Parsons, Booz Allen. So a software aspect to this where our mind obviously always goes to hardware as we're watching the events in the sky over there. On defense stocks or on this more, would there be any kind of headwind if jet fuel is back up, if there are supply disruptions? Is that putting too much on the importance of that cost component or no?
I mean, in general, we actually see missile defense spending positively potentially impacted by higher fuel prices, given it fuels investment dollars in certain parts of the Middle East. So that's where obviously it weakens other parts of the economy, whether it's airlines, given it's 25% of their COGS base. So
yeah,
a little bit of mix and match when it comes to higher fuel prices, lots of variables.
I wouldn't have thought they'd be positively correlated, but if then you think about it today, it makes sense. Sheila, thanks for your time. Thanks for calling in this hour.
Thank
Sheila
you.
Kailu from Jefferies. The Exchange has more after a break. Welcome back. The Dow's down about 200 points. We're off session lows, down 0.5%. The S&P down 1%. Less than 2% declines now for the NASDAQ and Russell. And the volatility index is back below 20. So a little bit of a breath here by markets, which had been rattled when Iran launched that missile attack on Israel, which intensified at the top of this hour, seems to be settling down and having dissipated somewhat now. Let's bring in Lee Munson. He's Portfolio Wealth Advisors President and CIO. Lee, do the developments of this afternoon, this week, this year, change what you do with equities here or with markets more broadly?
I'm looking at what the response is from bond markets right now to help me figure out that question. I'm seeing a 10-year that's still above a 3.7. I think that's telling me right here, right now, unless we see that start selling off and we're at a 3.6 before the end of the day, that's telling you that future growth is not being affected by this. On the contrary, I think future growth is just going to be going up. We're going to have more deficit spending next year because we're remilitarizing our armed forces. And that's going to be a big theme. I know Jamie Dimon from JP Morgan, he's been talking about that earlier this year. I've been talking about it too. We're not living as a superpower anymore. We're multipolar, and a lot more money is going to have to be spent. And I think if you look at some of these projects like the hypersonic missile program, which we're so behind on in this country, and you start looking at where we're making munitions, where are we manufacturing the bombs that have to get on those planes, I think you're going to be seeing a huge increase in spending. So while I can't tell you right here where my favorite defense company is, I like TransDigm, and they're more in
popping a little
aerospace.
bit.
I understand the trade. But I also think this is a warning. Don't think inflation is going to be going down as much as forward rates are saying. It's this type of stuff that's going to keep inflation sticky.
We got a two-headed snake.
And to what's happening with bonds, does that make a lot of people might be looking at it now and saying, "Hey, this was great to own for the past couple of months," but now maybe not so excited to sit on them going into next year. Stanley Druckenmiller making similar comments at Grant's conference today.
So I got rid of all my 10 and 30-year bonds. I sold them in 4 pieces after the Fed announced because I wanted to be sure. And I got out of them, I believe, last Friday. So I'm out of all of my 10 and 30-year treasuries. I bought them last August at a good price. I bought them last October at a really good price. So I think if people were sitting on this trade, they're up 5, 10, 15% from the pop in yields last year, I would use this as an opportunity to unload. That's what I did because I'm playing my own game with my clients. I also bought right. But I think that we could see those 10-year yields float back up, not just in a year, but in the next 3 to 6 months as we realize the Fed's going to go slower, the stuff in the Middle East, the stuff in Ukraine is going to take longer.
Are you still in them, Randy?
The spend is going to be huge.
Does this support equities? So when we watch, anytime you see the VIX go up, something like this, maybe it's a one-off, but it sort of has, the market has that memory.
Think about selling them here.
Does this make you at all biased to be less bullish into year end now, or does it actually support equities performance because of deficit spending and all the rest of it?
Supports, I'm bullish. I'd love to see a 3 to 5% pullback. I'm unafraid.
You're buying.
He's unafraid.
It sounds like if we get that.
God.
Yes, I'm a buyer. I'm a net buyer. I want to be overweight going into next year. The only thing that could hold me back is maybe seeing 6,200 on the S&P before Christmas.
Wow.
It may make me be neutral. Don't think that can't happen. Nobody's prepared for it. I would pull back a little bit if I saw that because you're paying 21 times next year's earnings.
Jimmy got in.
Yeah.
That would be a major move. Buying equities, selling bonds. Lee, thanks for joining us this hour. Lee Munson, Portfolio Wealth Advisors. That's it for the exchange. I'll see you next hour on Power Lunch. Stay with us.
break you, Beach. I want to make so much money off this trade today. Break it. I'm going to sell a few here. I doubt if we get back up to the top again.
All right, welcome to Power Lunch. An eventful afternoon so far. Alongside Kelly Evans, I'm Dominic Hughes. Stocks are, as you might imagine, falling today as tensions heat up in the Middle East. And right now, Kelly, we are off our worst level so far today, but still, just looking at things, you can see the Dow down maybe 0.25%, the S&P down by about 0.75%. It was down more than 1% at one point. The NASDAQ was down in excess of 1.5%. It's now down 1 3/4 or 1 1/3% at this stage. So, yes, we are seeing downside, but I think there's a lot of folks on Wall Street who are trying to stay a little bit more measured right now, Kelly.
Measured?
About what's going on.
What do you mean by that?
To settle down somewhat as well.
Relaxed, not forcing, not making any broad mistakes.
Saying the attack was and will have consequences. By the way, they also are saying, as far as they could tell at the moment, there were no casualties from the missile attacks. There were other incidents, not just the missile attack. There was a shooting. There were other things happening on the ground.
And it wasn't. I think the world was caught watching the live feeds from across Tel Aviv, and perhaps just looking at all of these sparks and light, floating around the sky, and how many of those actually hit the ground and exploded. For that reason, there was this.
There's got to be debris falling off of them.
Shelter-in-place orders, given the air raid sirens that went off relatively early compared to when the first missiles kind of crossed in and looked like they might be heading towards Tel Aviv. The casualty account was a little bit, maybe hopefully, on the lesser side of things, but it's certainly something where the markets played it out in real time, never got to an extreme moment of panic, and are now starting to be a little bit more, let's just say, measured about the way that this is playing out right now.
Let's bring in Contessa Brewer now. She's at the breaking news desk. She's got the latest on the story for us. Contessa.
Yeah, Kelly, Israeli citizens have now been given the all clear. They can leave bomb shelters following that barrage of missile attacks aimed at the country. Israel Army Radio said it was about 200 missiles fired. At this point, as Dom mentioned, it appears the injuries are limited. There may have been a couple shrapnel wounds near Tel Aviv. The Israel Security Cabinet has convened. The military spokesperson there described this onslaught as serious and said there will be consequences. Iran has said its supreme leader, Khamenei, ordered the attacks as retaliation for Israel's killing of the heads of Hezbollah.
I wonder where he's hiding.
And Iran is now warning, if Israel responds or commits further violence, it will deliver a quote-unquote crushing response. Israeli airspace has been closed while all of this unfolded, but we're told it will resume air traffic in this hour. Lebanon, Iraq, Jordan also shut down their airspace. U.S. Embassy staff and other government employees had been ordered to shelter in place. And President Biden has commanded the U.S. military to aid in Israel's defense and shoot down missiles. He's been in a meeting with Vice President Kamala Harris this afternoon and other senior security officials. And the U.S. earlier warned Iran there would be consequences for any airstrike against Israel. We have not heard what the U.S. may intend in terms of consequences, and Israel is not being clear either, except to say there will be some. But we have also heard some chat from Iraq's forces saying that if the U.S. acts, then it will act. So basically where we are is at this standoff. The UN Secretary General has just issued a statement on X saying, I condemn the broadening of the Middle East conflict with escalation after escalation. Quote, this must stop. We absolutely need a ceasefire. As we get more developments here, Kelly, we'll bring them to you.
Contessa, thank you. Contessa Brewer. For more on Iran's attack on Israel and the rising tensions in the Middle East, let's bring in Michael Rubin, Senior Fellow at the American Enterprise Institute and Director of Policy Analysis at the Middle East Forum. Michael, it's great to have you here. And what are your thoughts this hour?
Hey, Kelly, thank you. Well, first of all, I'm glad to see that the barrage is over and that casualties are minimal. But before we celebrate the fact that so many of these missiles were shot down or missed their target, remember, as in last April when Iran sent its previous barrage, if only 7 or 8 missiles get through, but those 7 or 8 have chemical, biological, or radiological warheads, then we're talking a whole different ballgame. I'm afraid now that this has happened twice, that the Israelis are going to be tempted to respond and respond hard. I think we're now in the last days of the Islamic Republic of Iran.
What would
Oh,
a
my.
response look like? Something aimed at the oil facilities, at the nuclear ones?
Well, if Israel
Hit
were
the
to
nukes.
strike at the nuclear facilities, their pilots aren't suicidal, so they might go in with surprise, but they're not going to be able to fly out with surprise. So first, they're going to need to take out command and control and anti-aircraft batteries. But I suspect they're going to do what the Israelis did with Ismail Haniyeh and Hassan Nasrallah. They're going to go for the head of the octopus, hoping then that the tentacles will wither away.
God.
I believe that what they're going to do is go after Supreme Leader Ali Khamenei and the top leaders of the Islamic Revolutionary Guard Corps to try to leave a vacuum at the top. The
Jeez.
Woman Life Freedom Movement protests that began just over 2 years ago showed that the regime has very little legitimacy among the Iranian people. The challenge is going to be, how do you take out the regime without antagonizing the Iranian people?
Michael, it's Dom. To that point, can you take us through what you hypothetically think hypothetically would be the ripple effects or the next response from them? Let's say they do go that route and they
This
do
guy's a
start
talker.
an active engagement, a war, if you will, between Iran and Israel. If you were to go about that path that you spoke of, do you then have to move troops in? Is there anything that has to happen beyond that that could escalate or bring other parties from the Middle East, other countries, into that conflict as well?
As you know, I used to teach as a civilian on Navy ships. And when I would ask admirals, to a man and a woman, what they would say, if you want the Iranians to take American diplomacy seriously and understand the need to stand down, what you need to do is remove U.S. aircraft carriers from the Persian Gulf. That may sound counterintuitive, but if our aircraft carriers are 400 miles away in the northern Indian Ocean, the Iranians and the Islamic Revolutionary Guard Corps will know we can strike at them, but they can't strike back at us. So actually, no, there should not be American troops present. There should not be boots on the ground. This is not Iraq. What Kelly said before with regard to oil, remember that because Iran's shore is very shallow and very rocky, most of Iran's oil exports occur from offshore oil terminals. The question then becomes whether the United States and our special forces, as during the Reagan administration, will go after those and target those more precisely.
Did Reagan target him?
Possibility of a more modest Israeli response here, Michael.
I don't remember
What would
that.
possibly look like?
Well, Kelly, there is, of course, a more modest response that could be possible, and Israel would have a range of targets. Iranian ships that are supplying the Houthis, for example, the Islamic Revolutionary Guard Corps leadership, generals, and so forth. There's a whole menu. Look, from Israel's point of view, in 1981, they took out the Iraqi nuclear program, and in 2007, they took out the plutonium processing plant in Deir ez-Zor, Syria. Iran is a much more complicated problem set because it's 6 times the size of Great Britain, 4 times the size of Iraq, and the program, the targets are far more disparate. The only good news here is if Israel or the United States wanted to take out the underground nuclear facilities, they don't need to destroy those facilities that are buried under mountains. They only need to take out the entrances and the exits.
And Michael, this is all about what's happening in terms of the aerial strike between the two. NBC News, I would also point out, is reporting that at least 6 people were killed and 9 injured in a shooting incident in Tel Aviv. That's according to 2 U.S. officials. The incident, they say, involved at least one shooter who got off a mass transit vehicle and started firing a semi-automatic rifle, those officials do say again. It appears as though it's not just the airstrikes coming from there, but within the own borders of Israel as well, there could be terrorist-type activities. How consequential would that become if it's not just fighting from outside the walls, but inside the walls as well?
Well, make no mistake, Israel feels that it faces an existential threat, And Israel is no stranger to having to deal with terrorism within its midst. But what's different now is that Israelis feel that they have a ticking clock to do what they need to do because they are afraid that a new administration, especially if it's a Kamala Harris administration, would try to restrain Israeli response, counterterrorism operations, and so forth. Right now, the Israelis feel that they are going to be criticized no matter what they do. So it's a matter of in for a penny, in for a pound. As long as they're criticized, they might try to do their counterterrorism operations as completely as possible. But if they feel that the United States might cut off support, as some of the progressive wing in Congress wants them to do, then that's actually increasing the incentive for Israel to have these fights now, both internally with regard to counterterrorism, as you asked, and also externally, as we see with regard to Lebanon, and as I suspect we are going to see much more with regard to Iran and the Houthis in Yemen.
Just circling back to Gaza, Michael, where does this leave prospects for some sort of ceasefire or end to the conflict there?
This thing,
well, the question in
tell me it's going to break out more.
There's two questions. Number one, whether Israel is spreading itself too thin. And the second question is whether or not Israel is going to go for some negotiated settlement or whether they're going to go for complete victory. The way I see it is when you have a hornet's nest, you have two good options. One is to get rid of it. The other is to leave it alone. But the worst possible option is to come down in the middle and stand underneath it, lightly tapping it with a stick.
This guy's a
For the
poet.
past 30 years of diplomacy, that has been the U.S. strategy. That is what the Israeli Prime Minister Bibi Netanyahu is saying is no longer tenable. And lest Americans think that the issue here is just Israeli Prime Minister Benjamin Netanyahu, make no mistake, there's broad consensus from left to right inside Israel with regard to counterterrorism policy.
Michael, thanks for joining us at this hour. We appreciate your time.
Thank you.
Michael Rubin with AEI.
All right, still to come on the show, this growing conflict in the Middle East is not the only economic risk that could reverberate on a massive scale here in the U.S. A major port strike could derail recovery and rate cut efforts. We have more on that economic story on the home front coming up next.
$57.20 is what I had. That's got to hold. Oh, you're... Don't cry, Argentina. Now. We hit my resistance. Oh, I got the wrong number. 5726.83.
All right, welcome back. Turning to another major global economic risk, the massive U.S. port strike hitting the East Coast and Gulf Coast of America. Nearly 50,000 members of the International Longshoremen's Association walked off the job at midnight as a deadline for a new labor deal passed without any kind of a resolution. Now, as a result, 36 seaports from Maine to Texas are currently shut down. Moody's estimates it could cost the American economy around $2 billion per day. For more, let's bring in Adam Kamins, an economist at Moody's Analytics. Also, Peter Sand is the chief shipping analyst at Zenata. Thank you both, gentlemen, for being here. Let's start with you, Adam, with regard to just how big of a deal. We've seen the estimates range widely. How did you come up with the number that you put on the economic impact of this port strike?
Sure. So there's a variety of ways to look at this, but what we're looking at primarily is the amount of cargo that's handled in the different ports that are affected by the strike. Understanding there's some offset from some of that cargo being moved to other ports, companies stockpiling inventories, but when all is said and done, we think that number represents about the amount that is exposed and that is going to lead to economic losses in the near term. Although it's worth keeping in mind, right, that number is not static, that as we go, the longer this strike goes on, the more likely that those daily losses are going to increase even on a day-to-day basis.
Peter, we've spoken to and heard from a number of shipping and logistics-related analysts who've talked about the idea that the first impact, the frontline impact of this will be in things like fresh produce, perishable goods, harder durable goods may have been warehoused or have the ability to be warehoused. What exactly does it mean for the U.S. consumer? How quickly will Kelly and I and everybody else start to feel the real price impact at the stores that we shop at?
Within a few days, you will probably see the impact from fewer perishable goods to choose from when you go shop groceries, right? Those are the time-sensitive imports, and those that you would probably see fast moving, right? So there will definitely also be fierce flashback to the Ever Given situation. Some of you may still have that pretty fresh in your memories from the end March 2021, when one giant container ship got stuck in the Suez Canal, and all of a sudden you found out how much you rely on just-in-time deliveries to do your everyday lives grocery shopping, from everything from
I'm all out.
clothing to what you need in the toilet room, perhaps.
Adam, do you agree with those who think that commodities could spike in price as a result of this?
I think commodities could increase in prices. I think a spike is probably a little bit strong. I expect that if this strike continues for a number of weeks, that we are going to see some price increases as a result of the shortages in supply. But I don't think it's enough that it's going to roil the consumer necessarily. What I worry about more is that we lose some of the progress that we've been making with respect to inflation, that the Federal Reserve may be asked to pause cutting interest rates, and that could have some broader economic ramifications.
Adam, could I just follow up really quickly on that one point? We've talked a lot about the goods side of things on this equation. The reason why these workers are striking is for better pay. We've heard reports that it's a 50% pay bump that was on the table, scaled in over 6 years, that was rejected. What exactly then does the longshoreman's personal finances and economics look like if that's the deal they just turned down? What is it that actually gets them to say yes to a potential labor deal?
Well, it looks like they're looking for something, I believe, closer to 80%. I would imagine, in terms of the numbers, they're very far apart. You ideally want to see the sides meet in the middle. I'm a little bit more worried about some of the demands around automation and trying to either eliminate or have some guarantees around automation. That seems a little bit more intractable to me. That's sort of, something that it may be a little bit tougher to find a middle ground on. So that's going to take some work. I would imagine in terms of the numbers, we'd probably see the sides meet somewhere in the middle in the end, but it may take some pain to get there.
Peter, a quick last word.
I totally agree that the hardest nut to crack is that on automation, because the U.S. ports are not as efficient as ports in the 21st century should be. And when comparing the performance on the East Coast and Gulf Coast to that anywhere else in the world, they're really not doing well. But I think it's also relevant to point to the fact that, a lot of Synnøve's customers point to benchmark their own freight procurement performance. And I think we've already seen spot rates spike to some extent on the transatlantic trade lanes to some 20% right now. And I think we can only see that trending upwards as the strike continues for, up to 1 week is how we see it.
All right, gentlemen, for now, thanks Peter Sand, Adam Cammons. We appreciate your time. And still to come, we've broken down these major economic risks, so let's take it all and figure out the best way to position yourself with the Dow now way off session lows and trying to make a go to turn positive. It's down 30 points right now. Power Lunch is back after this. Welcome back to Power Lunch. The Dow is well off the session lows, down only 43 points right now, and the VIX index is off of its highs. S&P for its part down 0.6, NASDAQ 1.2%. Let's dive into some stocks, try to make sense of this uncertainty for what it means for investors in the U.S. Adil Zaman is here. He's a partner at the Wall Street Alliance, and it's great to see you again. A big picture, does today, people are talking about maybe on the margin a little bit more inflationary pressure in the economy. Even we just heard in that port strike discussion, does it possibly even keep the Fed from doing further rate cuts? Are you concerned about anything like that?
I don't think so. I think that short term it could definitely cause a correction, and we feel that investors at this point in time should be hedging their portfolio and have exposure to gold and to energy as a hedge. And also we spoke last time I was on the show, we spoke about the concentration risk in the market. So investors should increase the breadth in their portfolio, long term, we feel the market is still headed higher.
I think it's interesting as well because when we talk about this notion of the overall economy, it's also one where geopolitics figures into the Fed. We know this. But given what you've seen so far today, how frightened or how much importance should the Fed put on the Middle East conflicts in particular for its economic outlook in the coming, say, 6 to 12 months?
Yeah, so I think the Fed told us that they're going to be watching this very closely. That's what we got from what Powell's comments are, and they're going to be accommodative as needed. I think that the Fed, basically their goal right now is to be in a sort of a sweet spot. So they want to freeze things the way that they are. So I think the Fed is going to come in and they're going to accommodate as needed, and they're going to keep a very close eye on these developments.
Let's talk to some of the specific stocks that you like. I mean, that's a huge part, sort of the debate right now. Home Depot, Caterpillar. I mean, walk me through names that you think are especially areas that people can kind of find some alpha and it just might be well positioned for everything that's going on in the world.
Sure. I think that, with the recent accommodation by the Fed, I think one of the things that we are going to see is that major economic collapse is off the table, right? So the affluent customers, they continue with their spending unless minor economic blips don't really impact them. So on the high-end businesses that are catering to the high-end consumers, for example, American Express, which charges a high fee as well as a higher exchange rate, they will continue to benefit. I think with Home Depot, we tend to like that because of the housing play. I mean, we got a glimpse from Restoration Hardware as to how those type of companies would respond to the rate cuts. I think Home Depot is another great one, and it also pays a great dividend, which is a big theme for us.
We talk about, at least we reported this last hour, about the number of defense stocks that are either making new record highs or at least one-year highs or beyond. We mentioned names like RTX. We mentioned names like Northrop Grumman, Lockheed Martin. Would you chase some of these defense gains into what you've seen today? And if so, is there a role for defense in your portfolio? And if so, which ones do you like?
So we definitely think that you must have exposure to the defense names in the portfolio because given the geopolitical tensions, whether the Democrats win or whether the Republicans win, there is going to be continued increase in defense spending. So having defense stocks in the portfolio is very important. We like Lockheed Martin. We also feel that for the same reason, for the geopolitical tensions, having gold in the portfolio makes a lot of sense. So we have Spider Gold ETF GLD for our clients. That has done really well. We think it continues to do well because of this volatility. Plus with rate cuts, dollar
it was the double bottom
stronger. And having oil in the portfolio as a hedge makes a lot of sense also, right? Because if you look at a company like ExxonMobil, it's trading at relatively low valuations. The break even on oil for them is very low.
I want to let the room know that I am a very sensitive kind of guy. Vegas used to always tell me, you're too sensitive, you're too sensitive. Sometimes I am, especially when I'm behind the desk calling trades out and they don't always do what I want them to do. But I considered the Iran deal, but I thought it was more on the shipping part. I thought we were going to have a bounce off that dip, but it just got worse and worse. But so I just want to let you know that I do have a sensitive side. Sometimes I could take stuff and it just builds up in me. And what I read, and that guy, what he wrote, just I still can't get it off my head. Because I haven't had anybody have that kind of comment to me in 20 years, and maybe a couple, but not that extreme. I was on food stamps once, and that was back when I was going to college. But just about what I got to say.
And we have been positive for about 3 weeks now in that 2s to 10 spread. Also, there was news in Europe about their inflation. And very similar to the U.S., many of the metrics with their CPI were Good news, they were lower. Although year-over-year core, just like in the U.S., was sticky, much closer to 3%. But nonetheless, yields fell. And 10s minus boons were trading at the widest in 2 months at 170 basis points of difference. And take it a step farther, if you look at boon yields, very close to 2%. Other than the first trading day of the year in January, they are at the low closing yield of the year. Now we're going to continue to follow all the dynamics in front of ADP and Jobs Friday, but there's no doubt geopolitical issues are having an effect. It just couldn't correlate specifically today with a flight to safety in treasuries. Kelly, back to you.
Rick, thank you for that report. Rick Santelli. Let's get an update now on the situation unfolding in Israel. Megan Casella in Washington. Megan?
Kelly, we are continuing to monitor the unfolding conflict in the Middle East after the Israeli military fended off an onslaught of missile attacks earlier today from Iran. Now, we've been watching this footage all day of missiles lighting up the skies, but Israel's Iron Dome does appear to have intercepted at least some or most of those projectiles. An Israeli military spokesperson saying there have been a few hits to the center and areas in the south of the country, but that it does believe the attack is over and that it is not aware of any casualties from the missiles. It did also warn its citizens to stay sheltered unless absolutely necessary. Now, Iran did defend its actions as what it called legal, rational, and a legitimate response. The attack had been anticipated, especially by the U.S., after Israel had launched widespread attacks in Lebanon a few days earlier. Israel saying now that this attack will have consequences, although we don't have further
consequences
on that. On the U.S. side, we know that President Biden and Vice President Kamala Harris did have 2 meetings with their national security team in the Situation Room earlier today. They've been receiving regular updates on this. Biden says that he did direct the U.S. military to aid Israel's attacks against Iran and to shoot down missiles that targeted Israel. One U.S. official and one Jordanian official have also confirmed to NBC that Jordan allowed the U.S. to fly and shoot down missiles within their airspace. Now, up next, we know that the White House briefing is just about to get going. The Pentagon will also be briefing within the next hour. So, guys, we will continue to monitor all of these developments, and we will bring more to you when we have it. Guys.
All right, Megan, thank you. Megan Casella in Washington.
Randy, start crying.
Check on crude oil, up around 3%. And again,
that was a nice little trade.
It's back below 70 a barrel now after the earlier escalation of the conflict between Israel and Iran. We'll have more on the fallout for crude across the globe next.
I didn't. This time I held because I was so down on that frickin' SPX call. I was only down a little bit, but scalped it all for, I think I did 8 or 9 scalps today.
All right, welcome back to Power Lunch. A quick check on the markets right now. You'll notice that the Dow Industrials are currently down about, call it 25 to 30 points. It's pretty much flat on the session. At the lows, we were down 384 points, so we've gotten back roughly 350 points of that loss in the Dow. The S&P is down by about 0.2%, 57.26 the level there. The tech-heavier NASDAQ Composite, 17,970, down 220 points, or 1.25%. It is the underperformer of the day. Now, oil is spiking more than 3% after Iran fired missiles at Israel. For more on where the futures market sees oil heading next, joining us now is Phil Strebel, the chief market strategist over at Blue Line Futures. And Phil, let's take us through the price action that you saw today in oil again, and what the futures curve looks like, and what you think is next for those oil prices.
80, 75 to 80, 87.
Deteriorating geopolitical situation in the Middle East that really sparked those fears of the possibility of a major expansion in the hostilities that could disrupt some of these oil supplies. So what traders did was they scanned through the assets that could appreciate from this
What the hell happened there?
situation. We saw gold futures pushing back up to 2,700, a spike in the volatility index. Many people were picking up.
Well, they're not holding their resistance.
So the opportunity really, though, is in that crude oil market, because you look at the Middle East effect, a shutdown of the Strait of Hormuz and a broadening escalation.
I'm glad I got out.
That takes off about 20 million barrels of crude oil.
I'm glad I got out. But they, that one chick said it all. We got the election, we got the shipping thing going on. We're at all-time highs. We got the conflict in Iran and Iraq. You don't know what's going to happen there. Now, and our inventory is up in oil, so it's more or less followed the Trump plan plus more. Same thing happened during the Obama administration. We had a war on oil, but we ended up pumping more oil than we did before his previous administration. So a lot of it's rhetoric. A lot of it's wasted money. The Green Deal and all that, they just went out. I've seen it go, the same thing happened with Solyndra. If anybody remembers what happened with Solyndra, the solar panels, $600 million went down the drain to Nancy's family.
Sector and also the capital markets. We do have the U.S. with our interest rate cuts could provide that stimulus, could get this economy back humming.
57.33 on the Fibbies.
OPEC meeting tomorrow. The current OPEC production is 26.6 million barrels. They're looking at more clarity on the supply situation. If you look at the month of September, they've had a net decrease of 480,000 barrels per day. And without
we got a 1, 2, 3, 4
they've still
on
been curbing some of that production down 120,000. So it appears that many
on the
of
VIX.
these different OPEC countries are looking to push crude oil prices back up, and they'll do whatever it takes.
And one quick question to end on right now. Oil always kind of leads us to energy stocks as a matter of course. Are there certain parts of the energy complex that you think are better positioned than others?
We still like all your producers, your refiners, and everyone else, especially in the transport section. So there's several different names that are out there that, could gain exposure to. Things like ExxonMobil, one of them that stands out, and Marathon Petroleum are two that we really like.
All right. Phil Strebel at Blue Line Futures with the trade on oil, given everything that's going on today. Thank you very much. We'll see you again soon. Kelly.
And that's his angle. We'll dig deeper into the energy space after the break. Power Lunch will be right back.
Oh boy. Iran, better watch out.
NBC and Peacock.
Welcome back to Power Lunch. Stocks are well off session lows when the Dow was down nearly 400 points. And tracking with that, oil is moving off its highs as well. So we're seeing some settling down in markets. Let's bring in John Kilduff, founding partner with Again Capital, and Pippa Stevens, who is here on set with us. Great to have you both along. Pippa, let's just start with a kind of a retracing of what we know, what's happened with crude at this hour, and what are you hearing about further escalation now that Iran has struck Israel with missiles?
So we initially saw prices spike. We saw them get over that 5% level. They have since come back. But I think before talking about today's move, we have to look at where crude has been. It was down 16% last quarter. And so a lot of that is just simply reaction to how much we had fallen. Also, crude positioning had gotten negative for the first time on record. That's going back to 2011. So the market was very short. And then both contracts tripped key levels, WTI on 70 and Brent on 75. So a lot of this was short covering. That's not to downplay today's escalation. Certainly important, but CIBC Private Wealth's Rebecca Babin told me that if the market actually thought we'd see barrels coming off of the global economy, we would have been up $10 versus the $3 we were up at the high. And so, of course, looking forward, the all-important question is how does Israel respond? So far, we have not seen any energy infrastructure targeted. Even in Iran's attack, they did give a heads up this time around. It was a less advanced warning than we saw back in April, but still, we did get advanced warning, and they didn't target any civilian infrastructure. They focused on military infrastructure, all of which she said points to the fact that they don't want this to escalate, meaning that how Israel responds, they really are the wild card now and what could determine the next price direction for oil.
John, why don't we bring you into the discussion here as well? If we talk about the ripple effects, Pippa laid out the price action pretty well. There was a dramatic response, but it wasn't like a panic in any way, shape, or form. What does it tell you about oil prices and their next leg if we couldn't even sustain the move on this, given a direct attack by Iran?
I missed that XLE.
Well, good to see you guys. Look, I think the big calculus change here is that Iran is not necessarily the worry for this market that it has been or has represented, I'm going to say, for decades now. This is twice now where the Iranians have lobbed a volley of missiles at Israel, and they've all been, we're waiting to see on this last one, but it seems like they've all been shot down again as well. And this is after Iran has seen several now of their top generals killed by Israeli actions. And this is all they have. So I think it speaks volumes to Iran's
get my coffee going.
appetite for any kind of region-wide war. They also don't want to risk their nuclear ambitions, which we know that the Israelis will go after. Probably one of the first things that there was any kind of meaningful attack on Israel by Iran. So I think at this point, the geopolitical risk premium as it relates to Iran, it's almost a fool's errand to get caught up in it and to think that prices will sustain themselves or to even game out that there will be a sort of region-wide conflict that ends up with Israel against Iran. I think those days are officially stamped behind us.
Yeah, but I think as people also look at the oil action and what was happening going into this, I don't know if we'd say the market was oversupplied, but Saudi had just indicated some willingness to increase barrels, no matter if that if they wanted to defend market share, in other words, they were happy to take a lower price. So if we were super tight right now, if there was a concern that supplies couldn't keep up, I think that'd be a different story. If anything, it's been the opposite.
Yeah, and we've seen that there is a lot of spare capacity that could come back online. Remember, in total, OPEC and its allies still are withholding about 6 million barrels per day, and they've indicated they're going to start easing those supply cuts starting in December, and so there is capacity at the ready. Also, as Brian Sullivan has pointed out, U.S. production is now 13.3 million barrels per day, so we are a much larger portion of the market than we were in prior years, where maybe there would have been more of a price response. And then also, to John's point, Saudi Arabia and Iran normalized relations back in March of 2023, and so it's not in Iran's best interest to target to have a wider regional conflict or do something as extreme as closing the Strait of Hormuz, because more than 80% of their exports come from petroleum products, and so it's in their best interest to keep that oil flowing, which is why some are saying they're not interested in this wider conflict. They had to do something to save face given the incursion into Lebanon, but they don't want this to escalate.
All right, John. Last word to you.
Look, beyond the situation in the Middle East, overnight we were down big. The manufacturing PMIs for Europe are just a basket case. I'm highly skeptical of the efforts of China to try to revive their economy. That's been a big problem for this market. We got big problems for this oil market on the demand side. I don't see them curing themselves anytime soon. The path is lower. The speculative positioning is hugely to the short side. And I'm starting to think for a good reason other than just a swing trade. So I think we're heading back lower.
That's a great point.
All right. John Kilduff, Pippa Stevens, thank you both very much. We've got a quick check on the markets for you as we head out to break. You can see right there the Dow is down 300.
Iran launched a ballistic missile.
It was down 384 at one point. We're going to drill down on some key movers.
One enough?
Turns after this break.
I'm seeing if SPX wants to fall back to my triple top support right here and hold. If not, then we'll probably end up back down here. That's the 63. I gotta see if my windows are up. I'm gonna go get my coffee and get back at it. I got to remember that XLE. That was a big miss today, knowing that all that oil. And I've been thinking about it for the last week. Not XLE, but why is oil so cheap? I guess over inventory maybe. But that's all I can think of.
a lifesaver.
Welcome back to Power
Figured
Lunch.
that
The
out
Dow's only down 22
already.
points this hour as it's made up a lot of ground from its session lows. The S&P is still down about 0.2%. The Nasdaq and Russells are both kind of the worst performing in a tie. They're down a little bit more than 1%. Elsewhere, some stocks in the news we're watching. Apple primarily, which is falling as Barclays says its checks are pointing toward weaker than expected global iPhone demand. Apple shares were down 3% to 225. Tesla lower as well, only 1%, as Wells Fargo names the stock an underweight on its fourth quarter tactical ideas list. And Signet is falling sharply after announcing its CEO will retire.
Sig.
Down 9% today for SIG, down 12% year to date. And look at an intraday chart of Boeing. The stock starting the day lower as the company will likely have to raise capital by selling stock, but turning higher along with defense stocks this afternoon.
Yeah, it didn't make
The
sense.
shares are up 1.5%. And Power Lunch will be right back.
They'll pump Boeing. Well, I saw some neat let me see here. How would I type that in? I can understand why the port guys are a little upset about. Well, there's Kirby.
Welcome back to Power Lunch. Stocks well off their worst levels of the session following Iran's missile attack on Israel. Now, for more on the market impact, let's bring in Sylvia Jablonski, the co-founder and CEO of Defiance ETFs. Sylvia, maybe let's just start first with your take on what the market price action has been today and what it tells you about what investors think of the growing Middle East conflict as we currently stand.
Hi, Tom. Good afternoon. Well, today's market action reminds me a lot of what we saw when we heard about the Ukraine-Russia war, right? I think, for decades and decades, it was pretty much smooth sailing. There's always things going on in the world, but over the last couple of years, these geopolitical threats have become realities. And when that happens, investors tend to panic, and we start seeing them, fire sale a lot of their holdings and perhaps reallocate to different sectors of the market. So what we saw today was sort of just that, right? You saw the Mag 7 fall, a lot of the ex-Mag, so the other stocks in the S&P 500, particularly those in the defense area, start to gain some attention and action. You saw crypto fall, right? So it's days like this where we're reminded to stay diversified. And market psychology, although the Mag 7 are great, stable
Damn, I wasn't watching.
Investor psychology tends to go to defense stocks. It tends to go to things like uranium, and right away, kind of like spinning the wheels of where this will go if it escalates.
Do you also think it's interesting that it seems as though the volatility response to some of these types of events has gradually trended towards dampening over the course of the last maybe 10 or 15 years, that the reaction just gets a little less intense each time around?
I think it gets less intense each time around, and it's really hard to comment on what's going on in the Middle East because we don't, the truth is we don't know the outcome. But, a lot of times we get news that, that the outcome could be more stable than we think. And in a lot of situations where we see these threats, you kind of see stocks fall, and then investors kind of come back into the market and benefit from buying on the dips, and they diversify their portfolio and, again, benefit from like the ex-Mag and the defense names and oil and gas and uranium, and then the market kind of chugs along, right? But it's a little different, right? I think this is a big conflict in the Middle East. We also have a presidential election, so I do think that there will be some investor panic and sitting back and watching to see what happens until we get more facts about the future. But what that means for markets, if we take the politics outside of it, probably just means diversification to ex-Mag and defense.
I wonder if there's a little bit of opportunism, sort of stock picking going on. When you see Intel as one of the biggest movers off the lows, I think people are kind of waiting for it to, as Don would say, enter deep value territory. Is that a name that you would also pounce on at these levels? APA also had a big reversal. It's up about 5% now.
Yeah, so I'm always, I've definitely talked with you guys about this, Kelly, too. I'm a lover of buying on the dips, particularly when it comes to the AI names.
Buying on the dip.
Some U.S. government backing, some of the names like Palantir that are the defense AI plays. Those are names that I'll definitely keep my eye on and kind of try to bump into. But then if you look at other names like MicroStrategy, for example, Broadcom.
Hope you didn't buy today's dip, honey.
Like the big AI stocks, they're going to pull back today. As people kind of sell off. So those are great buy on the dip opportunities. But again, I would say these are great days that remind us that broadening your portfolio allocation is really smart because you kind of feel the pullbacks a lot less when things like this happen.
Sylvia, we've just got a few moments left here. Another big intraday bounce off the lows has been Boeing. Buyer or seller?
Yeah.
Well, I think, Boeing has certainly, had its dips, right? And I think long-term things will get sorted out at Boeing. I think, today, aerospace, defense play, it's probably a name that I'll keep on my radar, but I would like to have seen things a little bit further along in the company in terms of what their plan is to fix their issues.
All right. Sylvia Jablonski, thank you very much. We appreciate the thoughts. We'll see you soon.
Scary chick.
All right. Thanks very much for watching Power Lunch. Markets are well off their lows right now, Kelly.
And I appreciate your time today. Closing bell starts right here.
Scary chick.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with high anxiety in the markets today. The Middle East, once again, a flashpoint. It was right around midday. Iranian missiles were launched into Israel. Oil moving sharply higher. Same for the dollar. The VIX also higher today. There's your picture. Yields moving down. Investors moving to safe havens, as normally happens when something like this happens. Let's show you the major averages, too, because they've been in the red all day, but very interesting activity within the last half hour or so. Would you know the Dow is only about 30 or so points away from another closing high, or just about. It's down about 51 points, but we're watching that. It was just about 30 points away from a closing high, so we'll keep our eyes there over this final stretch. NASDAQ is where the most weakness has been today. It, too, though, off the worst levels, was about a 2% decliner. Off that significantly. Apple's lower, Nvidia's lower. Some of the other names are mixed, though. It does take us to our talk of the tape. This new quarter for stocks with the economy, earnings, the election, geopolitics, very much on investors' minds. Let's bring in, for some answers now, one of this country's top investment advisors, Chris Toomey, Morgan Stanley Private Wealth. Welcome back. Good to have you. Interesting price action as this new quarter begins. Just what are your general thoughts on where we sit here
in the markets?
You know, I think when we last spoke, we were a little concerned about September. We were really concerned about the fact that the market had pivoted where good news was good news, but bad news was bad news. And what was the Fed really going to do? And I think that was weighing on markets going into Fed week. I think the Fed giving that 50 basis point cut really kind of jolted into the economy, or into the markets, I should say, kind of a more stronger risk appetite. In our view, we think the economy is doing well, but we think a lot of this kind of euphoria is already probably priced into the market.
You think all the good stuff is priced in? Because I mean, the Fed has just
Turn down my air. That coffee.
cutting rates. Right. So some would suggest, look, just keep it simple, right? Fed's cutting, economy's good. Powell himself reiterated that yesterday to the degree at which he says, hey, we're going to go smaller than 50 because we can.
No, I mean, look,
what's wrong with that?
I think if you look at
It makes perfect sense. Who said we weren't?
What's performed really well? Tech's actually not performed very well, but things like utilities, REITs, financials, all up north of 10%, in some cases up almost 20%, right? So I think a lot of that euphoria about rates coming down has immediately
tonight
into those areas of the market. I think
that'll be fun to watch.
That's what we see. You know, we're entering the blackout period, so buybacks are starting to go away. We're starting to look at earnings expectations. Earnings now are priced to be about 2 times what historically they have been. And so in our minds, you know, you're right, the market is very resilient. I'm surprised, honestly, with how well it's doing today after what's happened in the Middle East. But that being said, we think at some point price is going to matter. We see earnings probably priced for perfection and a potential for a pullback.
Isn't there still a huge catch-up for all these other parts of the market? I mean, just because the equal weight S&P outperformed the market cap weight in the third quarter doesn't mean it's done.
No, and I think that's probably the area where we're probably most constructive, right? So I think S&P 500 was up about 4 or 5% on market,
8%,
8 to 8.5%, right? So I think there are opportunities in that 473, as well as the fact that I think expectations for those types of companies are actually much more reduced than the Mag 7 and the names that have really been driving this market.
Let me ask you, why aren't you just net? You know what? The game's changed a little bit. The economy's more resilient than most thought it would be at this point in time. Fed's cutting. They're just beginning. The trend on that is continuing to go lower. China's stimulus there. I mean, central banks are cutting all over the place.
Right.
Or stimulating all over the place.
Well, and this is, I think, the difference between a question of what they want to do and what they need to do, right? So I remember when we were talking about the fact that economic data was getting weaker and the fact that the Fed...
Marginally.
Well, I mean, look at the labor market, right?
Look at the labor revisions in GDP. I mean, come on, look at the upward revisions in GDP.
Well, look at the labor market, right? And look at the fact that one of the key drivers with regards to why the economy is doing well and why inflation's going down is what oil prices and labor costs. Labor costs have been relatively going down and oil prices have been stable, right? We're in a situation right now where we have this issue with regards to what's going on in the ports, potentially with regards to revisions with regards to labor. So I think labor is a key thing that we want to be focusing in on. The fact that China is re-accelerating could actually be a negative for the U.S. economy in the sense that if they're starting to draw more demand with regards to oil, granted Saudi Arabia is raising production, that could be an impact with regards to oil prices. So if you get oil prices going higher, you get labor being an issue with regards to labor costs going higher, that's going to affect margins, that's going to affect earnings, and that could be an issue if prices are too high.
I mean, there's a lot of ifs, could be's, and whatevers that people have been talking about for the last 18 months, my friend. Right? I mean, a lot of these things just haven't come to fruition, and now you actually get to the point where the Fed is cutting interest rates at a time where the labor market, yes, admittedly from the Fed chair himself yesterday, is softer now. It's still strong.
It is
still resilient.
No, look, the economy
have jobs.
This isn't a situation where you want to say, okay, I'm going to sell all my stocks and go to cash. The question is where do you find the most value right now with regards to allocating risk? Not necessarily adding exposure to equities, not necessarily in a situation where we want to be adding with prices at this level. Probably just waiting for things to come to us. We don't want to be chasing right now.
By the way, if you look at tech, I mean, there's a good note out yesterday. I think it was from UBS that all this talk about multiple expansion for the mega cap stocks, their multiples are actually lower than they were in like 2021. Right, and before all this big AI rush even happened.
Yeah, but if you look at what's been driving them, the earnings have been good, but what's been really driving, they've been great. But what has really been driving the performance is PE multiple expansion. It's people chasing the winners, and that works great until it doesn't work great, and that's a situation which investors need to be wary of.
But some of these multiples have come down.
Quit your whining.
The reason why the stocks have gone up, the multiples have gone up, the prices have gone up, the earnings have gone up. The earnings expectations have gone up. You don't think that the earnings have justified where the PE multiples have gone for mega cap tech?
I think, in my mind, I think the expectations with regards to where earnings are right now are higher than they will be, and I think that will put pressure on markets.
So you don't think the 15% earnings growth expected for next year is going to?
I don't expect
is going to live up to that.
I don't think you should be expecting earnings over the next 12 to 18 months to double what historically they have been.
Even with the Fed.
Even with the Fed cutting, because I actually think that the reason the Fed is cutting is because I think the economy is softening, and there is some concern. I think the other thing that you have to worry about is what's going on if rates don't come down dramatically more.
I like this guy. He's honest.
But the concern is that they're not going to come down enough.
Because the economy's good.
You've got $1.6 trillion worth of debt that has to be refinanced at a much higher rate.
We're still on the deficit thing?
Well, it is a real thing, right? If you're in a situation where the deficit is now bigger than the actual foreign defense budget, right? And we're in a situation where we're going into an election where both candidates are probably going to raise that by multiples of trillions of dollars. At some point, you have to be concerned.
I got you, but 20% ago, a lot of people were concerned about the deficit. It's all anybody was talking about, and the cost of funding the deficit. Interest rates are going to go to the moon. That hasn't happened. Now, I'm not suggesting that the deficit is not a real issue. But, it's not an issue today. Not enough to send the stock market into some sort of fit.
Yeah, we're not necessarily as
It could be tomorrow, you dick.
And our concern is that going forward, it's going to become an issue, especially with prices at this level. And so from our standpoint, we want to be sure that we're in
You're going to print some more money?
Cash flow generative. The benefit that we have with generating additional cash is that if we do get that pullback that we're expecting, we've got cash to put to work at a better price.
Last question. You like credit better than equities here? Like Rick Reeder was on, and I think you had watched that interview at the time that we did it not that long ago, made the argument that, like you make, so you're not the only one who says, look, a lot of good stuff is priced in. The market looks a little bit rich. Do you think there's more opportunity today in credit than equities?
I think there's opportunities in equities below the surface. So in the 493, and the names that aren't necessarily been driving this market.
Okay.
I think in the private markets, particularly in the sense that they don't have access to capital the way that public companies do, I think there's opportunities there. I think the area that's most interesting to us right now is probably on the credit side.
Really? Okay. We'll see what happens. Chris Toomey, I appreciate you being here.
Thanks for having me.
Number 9 on the Barron's 2024 top 250 private wealth management teams. Congrats for that.
Damn.
All right.
He's number 9 and you're giving him hell?
Sullivan now for a look at the energy sector as tensions rise in the Middle East, and oil is probably off of its biggest spike of the day, Brian, but bring us up to date on exactly what is happening.
Well, I think it goes to exactly what you and Chris were talking about, Scott, because the port strike that you've mentioned probably could not happen
at a worse
better
time.
At least vis-a-vis oil and gas prices.
Better time.
You think about the fact that 25% of all oil is used for transport, heavy trucks, trains, diesel fuel, etc. Any slight slowdown in that might take that marginal pressure off of oil demand in the United States. So bizarrely, the timing of the port strike may actually be very good given what has gone on in the Middle East. To your point, oil, it's up 3%. It's $70 a barrel. It is off its highs of the day, given everything that we are watching in Israel and all the missile attacks there. Here's the point, is that I think, Scott, if this was 8 or 9 years ago, 10 years ago, oil would be up $10 a barrel. But because the U.S. is at 13.2 million barrels a day, not 8 million barrels a day, this increased U.S. production, increased Brazilian production, has sort of decreased Iran's importance in the global oil market. The key going forward, everybody I've talked to today, been reading today, says this: if we stay here, you get supply demand that goes back in. Oil prices are likely to go lower in the weeks and months ahead. However, it's how Israel responds.
Okay, we're into power hour.
Attack Iranian oil infrastructure and or nuclear infrastructure.
We're into power hour. We're hitting my support line. Now this is called a triple top. we break out and we pull back. We always like to pull back to the previous resistance. So this is the third time with lower lows. I think we can go ahead and pull back a little bit more. Maybe land off the 200 EMA and then the 200 SMA for a bounce into close. But there's a lot going on with this. The market reacted more or less, I think, to the tension in Iran and Israel than it did more or less to the ports. I called the pullback this morning because of the ports, not thinking about retaliation with Iran, because I thought they were more or less doomed already. But so it's going to be kind of, America did fire, I guess, at rockets. We'll know that later. So remember, it's 57.1388 or 57.09. Oh, God. What are you talking about, honey? Would you like to start my protein diet with me?
When the party's wrapping up. Sure. So I think when we start to see spreads kind of stabilize, they're not going to tighten anymore. I think that'll probably be the time. But the thing with munis is that you're always going to be able to generate that tax-exempt interest. And so even if it's from a return perspective, maybe you're not always doing the best, you're still helping to manage your tax liabilities, and that's always a benefit of munis anytime with the rate cycle.
And what about the impact of the election on the bond market? Both, local elections, but also, of course, we have the presidential election, less or almost a month away.
Sure, it's definitely something that we're looking towards, and one of the kind of impacts we're seeing right now is a ton of supply coming to the market. We're hearing that a lot of issuers are trying to come before the election when this uncertainty, that uncertainty is still out there. But at this point, we're focused primarily on a divided government outcome or a red wave, and we look at it from two perspectives. First is going to be, how likely is it going to be to get anything through Congress? We've seen challenges with divided government in the past, and divided government in the future is likely to still create issues getting anything through. And second are going to be the policies. And we do know that the TCJA expires in 25, and so there's going to be some big decisions to make. And so we're watching
Get
closely
parties coming
what
soon.
that might look like, what the solutions might be, especially under a Trump administration, and what the impacts could be on munis, whether it's around some of the things like advanced refunding and some of the things that we lost when the TCJA was passed, whether it's income tax rates in general, which can impact the demand for munis, of course, and then finally what the tax exemption looks like going forward. It's an argument that comes up every 4 years like clockwork. This year is no exception.
And finally, you mentioned potentially being too late to the game for certain fixed income investments. What should bond investors be avoiding at this point?
There are a couple of sectors that we continue to watch, and we don't really have an approach where we won't buy any sector full out, because we think with a solid research staff you could always find opportunities and find some of those rough diamonds that you can turn into something beautiful. But we continue to watch healthcare and senior living bonds. These are two sectors hit hard during the pandemic. We think they've bottomed out, and now is an opportunity to see stronger margins and better returns there. We're also continuing to watch private education, and private higher ed in particular is very bifurcated. Your strong college institutions, still very strong. But these small regional players, they're really struggling. We've got negative demographic pressure with fewer kids going to college. The very high cost of private higher education in this country is really putting pressure we haven't seen on the higher ed landscape. And we've actually seen colleges close, which, I never thought I'd be saying that, but it's something where you really have to have the right mix of, demand and a price point to continue to attract a smaller number of students who are graduating and moving on to college every year.
Small.
All right, we have to leave it there, but thanks
She
so much
ain't
for
talking
sharing
good
your
about
expertise.
college right
Jennifer
now.
Johnston, Director of Municipal Bonds at Franklin Templeton.
Thank you.
All right, coming up, McDonald's and Starbucks both underperforming the broader market this year. We'll take a deep dive on both companies with the Jefferies restaurant analysts. Plenty more on the way. We'll be right back, so stay with us.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
And didn't get to my support.
Have a choice in how you invest with Schwab.
Dadgummit. Boom, boom.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Let's talk restaurants with Andy Barish, Managing Director of Jefferies, restaurants and coffee shops, I should say. So, Andy, let's start with McDonald's because shares are under pressure today, off about 0.3%. They've had a nice run, really since July, call it, but only up about 2% year to date. This is a name, though, you're bullish on. You think it can have about $27 upside from current levels. Tell us why you like McDonald's.
Yeah, thanks for having me, Caroline. McDonald's had a really good third quarter because they pivoted and really started their efforts to reestablish their value leadership in the quick service restaurant category, and it's paying early dividends. I think we've seen the worst of the traffic declines at the business in the U.S., and that was what put pressure on the stock in the first half of the year. So we expect sequential improvement as they move through the rest of this year and into 2025. So that's kind of underpinning our continued buy rating, even though, as you mentioned, the stock, the stock has had a nice move here recently.
So yeah, you have a buy rating and $330 price target. I did see the upside case is $365. What would get it all the way to $365? What needs to happen?
I'd almost buy a put here.
Launch their full value kind of assortment, I guess I'll say, at the beginning of the year when
I ain't doing
consumers
nothing.
are typically looking for promotions and discounts coming out of the holiday season. So that'll include the $5 value meal, but also individual price points and probably some breakfast promotions, all of which are kind of important to McDonald's regaining its value leadership. And typically in tougher, choppy times, that is when McDonald's tends to push its market share, regain lost share, and then continue to have share gains. So we think with that, you'll have positive same-store sales in the U.S., and that will continue to propel the stock, in addition to the potential for increasing unit growth globally, as well as some opportunity to maintain or even expand industry-leading margins in the mid to high 40% level for operating margins.
Okay, so bottom line, how much of your bullishness has to do with the fact that McDonald's is offering those $5 meals for longer?
Well, I think, the earlier summer launch of the $5 meal was just the opening salvo. So I think, there is more to come, and that is a big part. I mean, the stock does trade on its U.S. comps, but I also think, as I mentioned, there is an intermediate term part of the story that can continue to propel the growth and thus the valuation with more global unit growth to be more similar to some of its global peers like Domino's and Yum, as well as the opportunity to kind of continue to focus on margins through some G&A reductions.
Okay, so shifting from McDonald's, where you can get a $5 meal, to Starbucks, where you can get a $5 grande iced tea, not as bullish on Starbucks. In fact, you have an underperform rating and a $76 price target, about $20 below, more than $20 below, where it's currently trading, basically back to the levels before CEO Brian Niccol was announced. So you think that this run-up that we've seen because of Brian Niccol is unwarranted?
I think it's just too much too soon. I mean, we like Brian. We think he's very, very good, and obviously the analog at Chipotle starting in 2018 has formed some of the dialogue around the move in Starbucks. We just think this is a much more complicated, larger, global organization, and it's going to be a heavier lift and take a longer period of time. And we think the next few things Brian's going to have to talk about are going to bring a little bit of dose of reality and kind of create some pressure on the stock, for the near to medium term.
What does Brian Niccol need to do to turn you from a bear to a bull?
Well, first thing he's going to need to do is build his team, because there's clearly been some shortcomings at Starbucks. He's going to need to work on the culture and the people side of things. In my view, some foundational elements have been rocked a little bit, I'll say, by the complexity that the former CEO has brought to the business in the past year through a lot of innovation that really didn't work in terms of driving incremental sales, but added complexity to the hourly team member or partner's jobs, which is then rippled through in terms of slower service times and not as good an experience as maybe folks remembered from the Starbucks of old. So I think it's really stabilizing, building the team, and really reinvigorating the culture. And all those things take a lot of time, and that's where we think there's a bit of a disconnect between the 25 billion or so of market cap that has been gained since Brian joined.
So just finally, all of those points that you want to see Brian Niccol really address on very Starbucks specific. So I was wondering if there's a macro read through in terms of bullish on the value play, bearish on the more expensive option. Doesn't necessarily seem to be the case, but could there be a broader read through in terms of your take on the consumer based on your calls here?
Yeah, clearly 6 months ago, we were bullish that McDonald's would be able to figure out value, and we were bearish, not at an underperform, but we were skeptical of the direction that Starbucks was going, and thought it was a lot more complicated and a longer term fix. I think that's playing out now. Both stocks have obviously rallied nicely, one because of fundamentals, one because of a management change, which I understand, but a lot of wood to still chop for Brian Niccol at Starbucks. So we continue to favor McDonald's. Yes, we do think part of the element of Starbucks' core sales performance has been some demand elasticity and some pricing they've taken where maybe that occasional or incremental guest is not visiting anymore because of some of those price increases.
Yeah.
All right. Interestingly enough, the consumer discretionary sector is lower, but Starbucks is higher today. A winner. Kind of a surprising winner, I guess. Andy Barish, Managing Director, Jefferies, thanks so much.
Starbucks being up today could be a good sign that we hit a bottom.
Coming up, it's time for Options Corner. Kevin Green will join us with what he's watching when it comes to options flows in the S&P 500 and the levels to keep an eye on heading into the close. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week, it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks.
Welcome back to Market on Close. It's time for Options Corner. Kevin Green Ryan, senior markets correspondent here on the network, joins us for that. So Kevin, when it comes to, first of all, thanks for joining us. When it comes to open interest with S&P 500 options, what are you watching? What's on your radar?
Yeah, it changed up a couple of levels here today after the expiration yesterday. We actually updated another one for the downside, that negative gamma area. So right now we are seeing a little bit of a widening out when it comes to the upside potential for this stock market here. And we actually have 5,800 as our positive area of resistance that we could kind of look at for the next couple of weeks. And the intermediate area of support, which we would like to hold, is 5730. Now, right now, we're actually below that level, and that's because of that sell-off that we had today. We had an event, obviously, that was kind of unforeseen, and so we did see a little bit of uneasiness when it comes to the equity markets. But once again, having that 5680 level, that was actually a key area of support here for today. We actually touched it close to around 2 times here before actually bouncing higher, and now we're trying to contest the upper end of this channel line here. Going into the close, I think it will be kind of interesting to see how the market actually does hold up here, Caroline, just because of the intraday volatility that we've seen and somewhat of a comeback. I mean, we're still down 0.75 of a point right now for the S&P 500, but we have had a pretty decent relief rally that may continue going into the close.
Yeah, so talk to me about, in terms of what we're seeing with the VIX, because we have seen quite a bit of volatility and I would say a pretty impressive comeback. I mean, yes, we are still lower, but losses have been cut in half.
Yeah, definitely. So on an intraday basis, when you have a situation like today, a lot of individuals actually look at the VIX as a gauge of risk within the market, right, or uncertainty. But one key area or one key thing that you can actually look at is the VIX minus the VIX futures, which is going to be /VX. So when you kind of look at that on an intraday basis, you can kind of see when this kind of close to backwardation taking place, which just means that the VIX is actually trading higher than the forward contract or the futures contract. We never actually had a backwardation for today. We got very close, and when that does occur, that just means that there's more uncertainty about the near-term risk in the market than we are worried about further on in time here. So we had 2 times today where basically we got really, really close to that backwardation and then kind of eased back into the normalization, or what we call contango. And that is actually, once again, kind of almost one-to-one correlation to the S&P 500. So I just wanted to bring this up here for today for those intraday traders that are kind of looking at the VIX.
Here's my first support.
Wondering what level is really heightened volatility, what's low volatility, and that spread actually allows you to see exactly how geopolitical risk or an uncertain event can be priced into the market, and where to see potential tops in the market as well as potential bottoms.
Okay, so just to be a bit more specific in terms of what are those levels for extreme volatility, heightened volatility?
Yeah, so if we kind of go back to that chart here today, we had the VIX minus the VIX future was sitting at around 0.2. So that just means that the VIX negative 0.2. So that just means that the VIX future was still priced higher than the current VIX. We were never in a backwardation. But as that spread gets smaller and smaller, that just means that the heightened volatility or the uncertainty of near-term risk is higher and higher. And as that spread widens out, which is symbolized by that red line going to the downside there, that means that there's more normalization, or basically that event risk is being taken out of the market. Now, it's not fully taken out of the market, obviously. Received. So that's really the levels that we're kind of talking about. Looking chart, we can kind of go into what to look forward to going into the close. I think a key area that we've had on the radar for a very long time is going to be 5,700. Now, we are pretty much going to be testing that, or close to testing that right now. We're sitting at around 5,715 with a balance area sitting at around 5,708. So right now we're still in like positive gamma territory, meaning that the dealers are still not really feeling the pressure. But if we see a rapid crash below the 5,700 level, that would be a little bit of a cause for concern for the close into today. So you'd like to see a bounce at 5,708. If not, see a bounce at 5,700. And if we don't actually hold that, then that's where we can continue to see a move to the downside here. But I would say that the event risk for now, the event risk is now being more appropriately priced into the market moving forward over the next couple of trading sessions until we get a response from Israel.
Okay, so just quickly, in terms of those levels, because I need to remember this for the next time I talk to you, 5708 to the downside, or 5700, and then 5730 to the upside.
Yes, for today, 57. I had 5740 on there. That's the actual true line that we may see resistance. But 5730 is where we have actually seen a lot of flows coming into the market as far as call sellers right now, at least over the last 30 minutes. So I wanted to make mention of that. But yes, you would like to see 5708 hold. That would be ultimately a win for the market here today. Even though we are negative on the session, that would kind of give us a little bit more breathing room that maybe we can recollect ourselves and then try to push higher. Maybe the Nike earnings can do that as well. Anything that's below 5,700, I would be a little bit cautious of going into tomorrow, where we have the ADP report coming out, and that has been a print that has been fairly volatile for the market. But once again, a really nice bounce off of the lows. Let's stay away from those lows as much as possible for the next 24, 25 minutes to go.
Okay, so you make a good point. Tomorrow we have ADP, of course, leading up to Friday's jobs report. Of course, Thursday we have initial jobless claims too, so it's appetizers and then the entree on Friday. What should we expect to see in terms of volatility leading into that?
Well, the ADP report has been telling, let's say, a little bit of a different story. It has been a little bit more weaker when you're looking at the trends or the analyst expectations. So if that trend is going to continue, yeah, we could see some volatility in the market. And that's really just based on the fact that the market might be a little
There's
bit
the 200 right there.
To the labor market in general. And so if that weakness is going to continue there, then that's where we can obviously maybe see some downside pressure in the market. But once again, that jobs report on Friday,
57.25s.
Uncertainty that we get from ADP, and then kind of looking at the ISM manufacturing data today, it was weak when you're looking at headline, and it also was weak when you're looking at new orders. But the prices component was going in the right direction for the Fed. So I would say, X the geopolitical risk that we saw in the market here today, we may have been able to digest that a little bit better.
Go, baby.
And I think that's another reason why we haven't seen just a complete flush in the market of a 2%.
Don't get greedy.
2.5% down day yet, because for the most part, the economic data has been able to hold up.
Okay, we'll leave it there. Kevin Green.
57.25s at 135.
Coming up, a look at the IPO pipeline with the NASDAQ Intelligence.
We're at the 9, so that'd be an exit idea.
Radar, an earnings winner that we haven't talked about yet. More market on close after the break.
I'm going to take it here. Out 165. Damn, 195.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
close. I'm Caroline Woods in for Oliver Rennick. Joining us now, Chris Dearborn, Managing Director of Market Intelligence Desk at the NASDAQ. Chris, thanks so much for joining the show.
Thank you for having me again, Caroline. It's a pleasure to be on, as always.
It's great to have you back. All right, so just want to first get your take on today's market action. We, of course, had a strong Q3. We had a strong close to September. October kicking off on a bit of a rockier note, although, hey, stocks are already well off session lows. Still in the red, though. Your thoughts just quickly there?
Sure. I mean, the S&P had a great run the last quarter. It actually has had a great run this year. You've seen all the indices really have had a pretty good run, even the Russell 2000, but more importantly the mid-caps as well. So you're starting to see a little diversity in the participants who are starting to move the markets higher, not just the Magnificent Seven. What's interesting, if you look back over September and you look back over the beginning of August, both of those, the first week for both the months, were both negative returns based off of data. Today, obviously, there's a little bit of a pullback. There's a lot of macro news coming out of the Middle East right now. It's definitely impacting investors' thought theses here. But right now, let's see what the data brings over the next couple of days. Again, we'll need to see what happens with the Middle East tensions there. But really, it's a fantastic start to the year. The S&P is 5 straight months of higher highs. Made an all-time high again to close out the month. And then the past 3 consecutive weeks have all been very good for the markets. I think it's a pretty good run. A couple of days of pullback, not a bad deal here. And right now, we're moving forward.
But what we've talked about on this show is that people want to see more participation from the Mag 7. Obviously really drove this market higher for most of the year, but we've seen a bit of a pullback there. Not necessarily getting it today. We do have Meta and Google higher, Meta and Alphabet higher, but any data pointing to more tech interest as we look into year end?
Well, a lot of things focus on the macro environment, right? And with that, you're looking at consumer and how consumers are going to react. Remember, GDP is 2/3 consumer spend. And when you look at the consumer there, you're influenced by the macro trends, inflation, interest rates, and the employment rate. Labor has been a major topic lately, especially with the longshoreman strike coming to fruition today, as well as the Boeing strike that continues to play out. On the tech side of things, yes, the development there is where we're going to be moving forward, but the question is it going to be a 1-year, 10-year, 20-year play? The capital outlays for a lot of these companies, especially on the higher end, is now starting to weigh on them a little bit as it comes to how much they need to spend to develop the technology to move us to that next level. And along with that, you're getting a lot of sectors that are being pulled up along with it, especially utilities and infrastructure spend. So there's a lot of moving pieces there. But again, this is going to be a longer play out than just a 6 to 12 month stock chart.
And you're actually keeping an eye on retail stocks because the data shows that consumer discretionary outperforms during easing cycles. Is that right?
The data that we've looked at shows that the S&P Selects Retail Index does actually outperform the S&P 500 when you start to get to a rate cut cycles, starting from the very first moment those cuts take place. And especially if you look at a 9 to 12 month period, for the last 9 cycles of rate cuts, over a 9-month period, the S&P the retail sector has outperformed 7 of 9 times. And if you look at on a 12-month basis, 8 of 9 times. So very productive there. Again, which makes sense when you're studying rate cuts because the consumer feels like they're getting a little bit more money in their pocket. Their spend is not being used towards interest card payments. Auto loans are cheaper. Mortgages are cheaper. And really that money gets spent on other items. So it's really a trickle-down effect when you look at what the Fed has to do to bring this cycle to a better landing. And that's where we'd expect it to be.
Okay, I want to check in about the IPO pipeline. We're starting to see more headlines of companies filing to go public. There was just a big announcement, obviously, an NVIDIA competitor going to go public on the NASDAQ. So just bring us up to speed on what we can expect in terms of IPOs, because we've been seeing this slow recovery, I guess I would call it.
Well, we look at a number of different factors here on the, here at NASDAQ. And the IPO market for 2023 has been good. It's not great by any means, but it's definitely showing signs of life. 2022 and 2023 were, easy beats on the year. We're not going to get 1,000 IPOs like we had a few years ago again. That just doesn't make a lot of sense. But we are seeing an uptick, especially when the cost of capital starts to come down. We've seen over $30 billion raised this year across the entire industry. for both here and downtown. You've got over 160 companies. We actually did 2 IPOs today on site here at NASDAQ. We had another smaller one yesterday. We've got almost 20 planned for this week. Expect more companies to try to push forward ahead of the election because there's a little uncertainty there about what may happen, and then following the election, we'll start to see that start to ramp up. The pipeline is very, very strong. There's over 180 companies in the pipeline right now, some of which you've mentioned already. We wish them all well and want to see them come public. But Q1, Q2, really the first half of 2025 should be very robust, not just for the tech sector, but we're seeing all sectors ramp up, including biotechnology, utilities, consumer. It's going to be a very exciting start to the year, and we're here to help them.
And just quickly, is that regardless of the election outcome?
Regardless of the election, which is election and certain people, investors like to see certainty in the markets. Whoever wins, generally you'll see the markets perform well regardless of who is going to win. But the uncertainty that leads up to that is always a little mind-numbing because, again, remember, you have to adjust your portfolio depending on which party takes possession of the Oval Office because that will impact future returns.
All right, we'll leave it there. Chris Dearborn, Managing Director, Market Intelligence Desk at NASDAQ. Thanks for bringing us up to speed.
Thank you.
All right, let's check in on a developing story with Jenny Horn, markets correspondent here on the network. Jenny, welcome back. You're taking a look at Paychex today, and Paychex, last I checked, was one of the best performers on the S&P 500. Still there, actually neck and neck between APA and Paychex, up almost 5% today after earnings. It's a name I haven't talked about at all today. We've been so focused on other stories, so bring us up to speed on that.
I know, a refreshing change of pace, Caroline, from we've been talking about Apple, which is one of the worst, I believe the worst now, and so now we're looking at one of the best, which is Paychex here, reaffirming now its fiscal 2025 guidance for revenue and adjusted earnings. Earlier today, after the company did post fiscal first quarter earnings and revenue that pretty handily did top expectations. So fiscal first quarter adjusted earnings came in around $1.18 a share. That beat expectations and did rise from around $1.12 a share reported a year ago. Total revenue also did come in around $1.32 billion. That exceeded expectations barely and very modestly rose from a year ago. But what I thought was interesting about this company is the read on small and mid-sized businesses, which they said they've remained resilient as the U.S. labor market gradually returns to pre-pandemic levels and wage inflation continues to moderate. They said, per their CEO and president, that they continue to invest in their market capabilities as well as products to drive innovation to really meet the realities of this post-pandemic marketplaces. Also, I think it was interesting that their first quarter expenses totaled around $771 million. That declined from $813 million nearly a year ago. And they saw that overall, I mean, again, this continues to really show, I think, the labor force of some of these small and mid-sized businesses. They updated their business outlook, now expecting fiscal 2025 interest on funds held for their clients to be between around 145 to 155 million, down from previous guide of 150 to 160 million that was issued back in June. Other guidance, which includes revenue growth of around 4 to 5.5% and adjusted earnings between around 5 and 7%, remained unchanged. So I think that you could say, all in all, the fact that this is a positive read on some of these smaller businesses is perhaps why we're seeing such a strong result today. I mean, up, like you said, almost 5% on the session. In terms of the broader red space, I think this is a great barometer for how some of these smaller, lesser talked about companies are doing as far as their payroll and back-end HR systems.
Yeah, and really, I'm just taking a look. Paychex pretty close to all-time highs, only less than 1% away from all-time highs with this 5% move higher. Jenny Horn, thanks so much.
Thanks, Caroline.
Coming up, let's close out this market session and get the big picture from the team at Charles Schwab. Just 10 minutes from the close exactly. We'll be right back.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. So if you really want to put yourself out there and test yourself and find out how good you are. It is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used
I have an emotional reaction.
now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
It's almost second nature to me. I can say that sometimes, but not today. She is right, though. I mean, once you get confident in your strategy, it does become like second nature sometimes, and then you get complacent. But she forgot to leave that line out.
Welcome back to Market on Close. I'm Caroline Woods. Just a few minutes, 8 to be exact, left in the trading day. It's time for the big picture. Let's welcome in the team from Charles Schwab. Cooper Howard is Director and Fixed Income Strategist for Schwab Center for Financial Research, and Kevin Gordon is Senior Investment Strategist at Charles Schwab. Kevin, Cooper, great to have you both here with us. Kevin, let's start with you. This is a market that has been very focused on the Fed, but we have quite a few other things to think about now. We have a strike or strikes, we have rising geopolitical tensions, we have China stimulus, we have upcoming elections. So has anything actually changed when you approach this market right now, or is it more of the same with just a few new layers of uncertainty?
Yeah, I'd probably put, it in the latter, and all of those items that you mentioned are really in the to be determined camp in terms of their hit to the economy. They all have different ramifications. If you look at the port strike, obviously there's much more of the import-export bias in terms
puts
of the
went down fast.
GDP. And if it extends longer,
Geez, some of them puts
probably maybe more of a tangible hit to something like payrolls, because if it extends into the survey period for the October payroll period, in the October payroll survey, then you probably get more of a material hit to payrolls, because it's not just the port workers themselves. There are ripple effects to the broader transportation and parts of the services economy too. So I think that's maybe more of a tangible risk in terms of the near-term hit. But of course, any of the other measures that you sort of laid out, especially everything going on in the Middle East today, there is more of an energy hit there as well. And we've moved off the lows for stocks and moved off the highs for oil for the day, and it's just one day. But I think that there's different ways to sort of assess the potential damage to not only the economy, specifically the broader global economy, but I think for the U.S. in particular, the drawn out nature of the port strike, if that were to happen, that to me is a little
if
bit
it were to
more
happen,
in terms of the effect to the impact on payrolls and GDP.
it happened.
Okay, I do want to ask a follow-up just in terms of that port strike in Cooper, then I promise we'll get to you. But Kevin, we don't know how long it's going to last. You talk about the hit to payrolls, but there is this concern that it also could be a hit in terms of price pressure and inflation problems being exacerbated. Do you think that...
I was at the IRS talking to one of the guys about this strike, and all of a sudden one of the other guys come around the corner and he says, boy, he was pissed. And that's very unusual coming out of this guy, because he's real religious. He said, fuck them strikers. They need to go look for another job. Because they make more money, twice as much money as he does. Already. And a lot of us are feeling the crunch of this inflation here in Missouri in a way.
talking past each other in terms of negotiations. So there was a little bit of a front running in terms of building up inventory. So there's a little bit of a cushion, but even if you got to a point where you exhausted that, I'm not sure that it would have this dramatic impact in terms of goods inflation spiking again.
Okay. All right, Cooper, let's get to you. Instead of speculating about the Impact 2 data, let's talk about the data that we actually did get in terms of jolts. Any read through to Friday's jobs data? Because that's, of course, the... so I guess I do want you to speculate, but what did we learn, and what can we take for Friday's jobs report?
Isn't that what we do in this job? We speculate on what can happen in the future, so that is the nature of the beast here. I don't necessarily think that the JOLTS data is directly going to translate over to what we'll see on Friday. I think, though, the broader picture is that we are seeing a labor market that is beginning to slow. Expectations are for Friday that we're supposed to get 150,000 jobs, so that is moving lower in terms of kind of the longer-term trend, but it is an economy that still continues to add jobs. The JOLTS data today, a little bit of a slight pickup in terms of the number of unemployed relative to the number of jobs that are available, so I think that was also notable. But it seems that kind of overarching theme that's going on today is more of a flight to safety and a flight to quality. We're seeing Middle East tensions. You and Kevin kind of discussed the multiple layers of different risks or potential for risks that are happening in the market. So I think as far as the treasury market, how they're responding, it's a little bit of a flight to safety. That's not too big of a surprise, because anytime we see something that's kind of a major issue that pops up, or a political issue that pops up, or a geopolitical issue, I should say, that pops up, tends to be that treasuries react a little bit. People move that flight to safety quality there.
Okay, so what's your advice, Cooper, to fixed income investors given the risk? We had a guest on at the top of the show that said join the muni party before it's too late. Is that what you like, or do you like something else?
Yeah, munis are one of the areas that we do think are relatively attractive. What we've seen is a lot of our clients have been heavily invested in cash. We know yields on cash are likely to move lower as the Fed begins to cut interest rates and kind of further cuts interest rates this year and into next year, possibly even the year after. So we do think if you are invested too heavily in cash, there are still opportunities to invest. We do like investment grade corporate bonds. That's one of the areas if you're in a taxable account in a lower tax bracket. But if you're an investor who's in a high tax bracket, we think municipal bonds do offer attractive yields. The absolute yield relatively attractive. Also, relative yields, they're hovering around a 70%-ish ratio, depending on where the yield curve you look at. That's the muni to treasury ratio, which is a metric that will commonly follow. Also, we don't have too many credit concerns as far as municipalities go. There are some pockets of risk, and there are some issues that may pop up.
Okay, today was definitely an interesting day, as we could tell. It makes me want to feel like I should not really start calling these trades out until after, with all this geopolitical tension going on and so close into the election, the strike, the high debt. Might just take a little time when I start getting in calls in the morning. Take a little bit less risk off the table. Because today I got stuck in them things and I scalped it once, got back in it, tried it again, got stuck. So I said I'm going to hold. And then I went down all the way to 15 cents. Then I started I scalped it 2 or 3 times on the way down, and I did it there at the bottom, and I was able to come out real nice day, but it wasn't easy. And it just reminds me that we don't need to be going in real big. I went in 1, and then I bought 2, and then I end up with 10, and then I sell them, and that's just not the way to go right now. So people, today I got a little unwound because I've never had anybody send a message like that to me before, and I just kind of got, what the heck is he calling me a racist for? Yeah, I get a little crazy and a little wild and say things, but I'm here to have fun, and if somebody wants to take the fun away from me, it's not worth doing anymore. If I don't have fun, I can't trade. That's why I apply music to my videos sometimes. That's why I joke around. I used to be a stand-up comedian. when I was younger, I wanted to get into acting, and I decided not to take that route. I had opportunity. I was in plays. I could have been a very good actor. I was handsome when I was younger, so I didn't have that problem. But I decided not to take that route because I just didn't feel comfortable after a while. I got out of high school early, and I got my GED, and then I went to college and ended up owning a frame shop. Now I own a janitorial business and about ready to retire from it. But today I didn't take the geopolitical, it was all about the ports. And if I just would have, it's hard to pay attention to the news, sometimes, because part of my strategy is being in the now. And if I knew that was going on, I would have never called calls out. And I was bearish this morning. You can see by my morning post that I was bearish. But we dove, waited a while until I took the trade, and then when I took it, we just kept diving. So I got stuck. Sometimes I don't call them always 100%. I don't think anybody can. And I've had one heck of a good year this year, and then all of a sudden, let's get closer to the election. I called this months ago. I said, we're going to have a lot of volatility. But today was a big learning experience for me because, of the tension that's going on over there, and it should have been, I think it should have been priced in the market a long time ago, but it has not been. And the market takes it for granted, as you can see. So I want to get out of here and kind of just relax. I'm not in a very good mood. Tomorrow I'll be in a better mood. Listen to all the news and see when I can get caught up on some of this stuff. But scalped it at the end of the day, made $300, 135 to 165. Scalped it earlier, made $2,000. Lost, that one trade, I had to sell it at a small loss of 200. But once it got up there, I got down to $200 on that 230 that I was in. I got out. XLE would have been a great trade today. China, still, people are playing the dips off of China. We had a good sell-off in China yesterday and was able to come back in that. So I'm going to get on out of here before I lose my mind. Go for a long walk in the woods. Thank you, Parge, for that information. Thank you, all my loyal team members on YouTube. And we'll catch you tomorrow.